plot, basically forecasts in terms of what all FOMC voting members are really saying. So 25 basis point cut in 2024 as opposed to 75, which they saw in May. Now, the cumulative amount of cuts through 2024, between now and 2026, because they put out forecasts not just for 24, but 25 and 26 as well, that remains unchanged at 225 basis points, 9 cuts in total. But what they're essentially saying is this year, I mean, we'll only perhaps get one. That is what they're saying now. It may change, but what they're saying is, so the cuts, the majority of the cuts are going to be bunched up into 25 and 26, but cumulatively, as opposed, when you compare what they said in the last meeting and now it's unchanged, 225 basis points is what they are still saying. Now, this is the interesting thing, and this is why I use that word confusing, right? Powell, essentially, because these consumer price and inflation numbers had come, naturally, I mean, the decision has been made. There were questions in the press conference as to how much of the softer inflation number is an input into the data making that you've seen today. And this is essentially what he said. He said most officials did not incorporate latest CPI readings in their economic projections and dots. Now, what does that mean? Does that mean that the latest Fed decision, in a way, is not marked to market, marked to the latest CPI data? We will... Fed officials all love to speak, right? We will hear a lot of them actually going on the record and talking to sort of media, news channels, etc. over the next couple of weeks. So is this final, or will what we've heard overnight move basis the CPI number, which Powell himself has said that many have not really taken note of and have not incorporated into the projections which they said yesterday. And that's basically why I said maybe at the margin a little confusing. But in any case, overall, I think it's still a largely positive, not as dovish as the last two times, but it's not hawkish either. So it's somewhere there. But the fact is the data, which is the primary driver for the Fed, has come in. The CPI data has come in softer than expectations, and the market signal for us is pretty good. So all of that kind of now gets us to where we are as far as the market indices here are concerned. The Nifty yesterday broke above the previous high, which is 23,411. But it could not close above it. We pulled back, like we've seen day before yesterday as well. At about 3 o'clock, the selling pressure came, but we ended higher on a day-on-day basis. The high that we hit on the Nifty is 23,442, and that becomes the first level for the market today. That'll go, I mean, right at the word go, at the word open. Nifty, the daily upper Bollinger Band for the Nifty is 23,526. That's the first target, which the Nifty now needs to sort of stay above. We will, I think, open above that particular level or around there, and then we've got to stay above it. On the way down, supports come in at the hourly averages, 23,150. For the Nifty Bank, targets are still the all-time highs, which is 51,133. There is one intermediate high before that, which the Bank Nifty has been unsuccessful in taking out. So let's see if we've got enough there today. And supports there come in at 49,625. Immediate, that's the hourly support. And then, of course, the 20-day moving average, which comes in a little later. But I think as the GIFT Nifty is indicating, it'll come up on your screen. We're looking up rather than down this morning, at least at the word go. It's a positive handoff from Wall Street, what we've seen, especially with the softer than expected consumer price inflation data. Surabhi.
Oh, yeah, absolutely. And the yields in the US, Prashant, they're moving like stocks, right? I mean, 8-9 basis points on a daily basis. It's been really all over the place, very dramatic moves in the US bond market. Just to add to what Prashant said, I guess yesterday the market took heart from the fact that the statement itself did say that in recent months, inflation is, showing modest further progress towards Fed's 2% inflation target. That was one. And the other, so you're talking about, whether the Fed yesterday took note of yesterday's print or not. Yeah. I was, reading the comments coming in from the press conference as well. And I just want to put this one up. We see today's report as progress. And as you know, building confidence. But then there was a but. There's always a but when Fed officials are speaking, right? But we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time. So they acknowledge that today's report is building confidence. But they think it'll take a while. So I think that's what translated into that 1 this year and now 4 next year, perhaps. Absolutely. Okay, let's talk about data back at home as well, because, that was actually presenting a very good picture. We've got a double bonanza in terms of macros here back at home. So the CPI number, that's come in lower than estimates, and the IIP number is above estimates. CPI inflation coming down to 4.75%. The poll was 4.9%. It's also lower month on month. So it's lower than the poll, lower than the previous month. That's good news. The only problem is food inflation. That's very, very sticky. It's refusing to go down. Still at around the 8.7% mark. It's practically unchanged from last month. So that's one problem point. On IIP, we're at 5% for the month gone by. The estimate was 4.9%, and 5% is slightly better, one notch better than the 4.9% of the previous month. So IIP is better than expectations. Inflation is lower than expectations, but not food. So that's the sum and substance of the macro releases that we had last evening here. In terms of flows, the net numbers are very quiet. I mean, hardly anything really. FII is positive about 400 odd crores. DII is positive about 200 crores. So the net numbers are not sort of saying too much. This week has been all about the broader market. So I thought I'll just put the week's tally so far, 3 days so far. Look at what's happening in the small cap and the mid cap arena. The small cap index is up 3.5% already. Mid cap index up 2%. The Nifty and the Bank Nifty are flat. Basically, it's telling us that I think after the mega event, the volatility, the interest has really, truly shifted back to the broader arena. And we'll see if there's more of the same, because the pattern, Nigel, last couple of days is you hit that all-time high, you cool off by afternoon, and the action remains on individual stocks.
Well, that's right. And I think more of the same is likely to continue. And today the scene is perfectly set up. If the Nifty needs to go ahead and conquer that hump, then today could be the day. But let's run you through the cues then. Today is the weekly expiry as well. So it adds a bit more of spice to the trading session, because today you'll have the Nifty that will move around, particularly in the final hour of trade. So that's something that we could track. In terms of global cues, the yields are softer. The dollar index is lower than what we saw yesterday. So that serves as a bit of a tailwind for us, as we have seen in the past. Yes, it's bounced off a little bit from the low, but I'll say that's good. So favorable US data, favorable India economic data as well. That bodes well for our markets. Moving to the levels that I'm looking at, on the Nifty, we're going to around that 23,450 odd mark, as we have seen the last few days, and we're finding resistance out there. And all the three last few sessions, well, we have been coming off the top. Even if you look at the Nifty Bank, 50,250, 50,300, that's a bit of a resistance zone on that one. So 50,250, and on the Nifty, 23,450, both those two are going to be crucial levels. So let's see if we can get past that. What do the FIs do in the F&O market? Well, they added some long positions. 20,000 contracts is what they added. Shorts, they unwound close to around 25,000 contracts on. And that's why now the short positioning from more than 85%, it's come down to around 59%. And if you pull up the bar chart, this is giving you a perfect analysis in terms of what's been going on. The FI's net short was around 3.5 lakh contracts. Currently, it's come down to around 80,000 contracts. So the short positions have been cut by close to around a fourth. Even if you look at the client positioning, they had 3 lakh contracts on the long side. And from there, in fact, that's come down to around 60,000 contracts on the long side. So they as well have cut their long positioning by close to around a fourth out there. Moving to, the levels that we're looking at, the 23,400 call, that's been seeing a fair bit of open interest build up. Yesterday as well, the premium did come in lower. The rough premium that you're looking at, there is around 130 rupees odd. So you plug in the numbers. Resistance comes in at around 23,475. Just plugging in that number, rough number of around 120. Yesterday, the high point of the day as well, it was around those levels. So that's the crucial resistance zone you're looking at. On the downside, going by the options data, that's a support zone. If that breaks, then in fact, you're looking at the 20 DMA. I don't think we'll visit these support zones, but resistance, this is important that we get past this particular level. Now, in terms of sectors that I'm looking at today, normally when you have the Fed outcome, and it's pretty much okay, two sectors are normally in focus, the IT and the metal index. Yesterday, the IT index came off the high point of the day. So those are the sectors to watch. And the stock to watch today, I think, will be L&T Finance Holdings, because that large block goes out of the way. It's a clean out trade. So I'll keep an eye on this stock. It could very well be the stock of the day, given that the discount is less than 1%. So that's the one that I'm tracking today.
Okay, all right, Nigel, thanks very much for that. Let's kick it off then with the equity call of the morning. Indranil Sengupta of CLSA says the Fed has turned hawkish despite May core CPI inflation surprising down at 0.2%. He says Fed's dot plot has cut down 2024 rate cuts from 75 basis points to just 25 basis points and raised the 2025 cuts from 75 bips to a whole 100 bips. He says their economists still see two Fed rate cuts on November 7 and December 18 in 2024 itself. Given the Fed uncertainty, he retains his first RBI rate cut on October 9. Indranil says he continues to see 100 basis points of cuts by June 2025 and says he worries the real RBI repo rate at 1.8% now is much higher than the 1% deemed neutral, and this is already pulling down real GVA growth. He says given the Fed's higher for longer stance, he expects the Union Budget 2024 to provide interest rate subvention to vulnerable sectors.
Okay, so money market views here now. We've got Parul Mittal of Standard Chartered Bank, who says that the USD INR inched higher during the week on dollar strength and higher imported demand. She says intervention by local banks helps smoothen volatility. She goes on to say that external events driving US dollar moves remain key rupee drivers in the near term. However, she expects the USD INR to trade in a narrow range between 83.3 to 83.75 to the dollar in the near term, driven by intervention by local banks on either side. Parul says a break above 83.75 to the dollar can take the USD INR to 84 levels now.
On bonds, Parul says after a knee-jerk reaction to the election surprise and concerns on deviation from fiscal deficit targets, government bonds stabilize as smooth government formation raised conviction on adherence to fiscal targets. She says India MPC was on expected lines with the dovish hint as an additional MPC member voted for a cut. In the near term, she says Indian market is likely to draw cues from global interest rate movements. She says FPI inflows in government bonds remain positive as their inclusion into a major global bond index kicks in from the end of this month. She expects the 10-year benchmark bond yield to trade in a band of 6.95 to 7.1% in the near term.
Well, a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. For the time being, we run you through the list. We look at L&T Finance, Nestle India, Shoba, Dr. Reddy's Laboratories, Gensol Engineering, and Bondada Engineering. They won an order, so we'll keep an eye out on that one. On the flip side, life insurers, PTC India Financial Services, and Arvind will be reacting to negative news flow.
Okay, well, Nathan Sheets is with us. He's Global Chief Economist at Citi. It's the big man here to weigh in on the rates. Mr. Sheets, great to have you with us here. Good morning. Thanks for your time. Prashant this side. So what's the message from the Fed? Is it a little confusing at the margin? Or is it dovish? I mean, it's all relative, of course, because last two meetings, the Fed sounded dovish, even though the data that they were sort of coming into those particular meetings was soft. Hot. The labor market data especially. So this time as well, have they looked through it, or are they kind of now more data dependent in that sense? What did you make of it?
I think there were a lot of moving parts today. As you pointed out previously, the soft CPI number was very important. And I think that was dominant in the market response. And that was operating in the background of Powell's comments. So Powell presented his dot plot and said, look, our committee's central tendency at the moment is one cut. But he hardly fell on his sword about it. He emphasized it was a conservative approach. And I really do agree with you that bottom line, what you're hearing from the Fed, what you're hearing from Jay Powell, is they're going to be data dependent. They're going to be empirically driven. And if we get a couple more months of inflation, like we saw this morning, the Fed's going to be cutting rates. And my sense is that very well may happen as soon as September.
Hi, Mr. Sheets. Good morning. Great to have you with us on the show today. So what do you make of the market's reaction? Because clearly the market hasn't been perturbed that rate cuts have been pushed into 2025. Look at the equity market. Continues to make all-time highs on a daily basis. Is this kind of a setup likely to continue? The market seems to have digested this whole pushback rather well.
I think the markets were focused on the CPI print. And I think the broad view is that some of the hotter inflation we had earlier in the year is breaking. And given that, I think that the expectation, as I mentioned, is that the Fed is going to be data-driven, and that's going to open the door for more rate cuts than were in the SEP. So in some sense, I think you can say that the markets were looking through the SEP and downweighting it based on their expectations that we are seeing some improvement in inflation that was not fully factored into those projections.
Good morning, Mr. Sheets, and thanks a lot for joining in on the show. This is Nigel on this side. This is the first time we're speaking post the election results here in India. And you had indicated that, yes, the stock markets would prefer continuity because they're familiar with the Modi-led government. What do you make of it now? It's a coalition government. It still appears favorable from a stock market perspective, but I wanted your comment on that one. And also, any comment on the Indian Central Bank? The RBI is in a bit of a Goldilocks scenario, right? Our inflation is cooling. We have growth as well that's fairly stable. So your view on that?
So on the RBI, when you're in those kind of Goldilocks scenarios where inflation cools and growth is solid, that's a place where central banks can be gradual, they can be measured, they can pay attention and wait for something to change. It's kind of an ideal scenario for central bankers. Excuse me. On the election, I think that the number one issue there and the number one takeaway for global investors is that Modi is equivalent to continuity. And broadly speaking, global investors are aware of and comfortable with the investment regime and know how to invest in India. We've certainly seen that over the last several years. And then, as you point out, I think the question is, on the margins, are policies going to be changing in some way because it's a coalition government that might have an effect on either the ability to invest or the attractiveness of investment in India? And I think those are the open questions. But for now, based on where the equity market is, I think investors are giving Modi the benefit of the doubt.
Mr. Sheets, just a quick point that googly, which Mr. Powell yesterday, just to go back to the Fed, which he threw in, right? He said that, well, maybe the forecasts, the dot plots, etc., don't incorporate this softer CPI data. I mean, is it really possible? Because you get the data in the morning, the decision is in the evening, so you can always sort of make some changes and take out a fresh printout. You think? Yeah, sorry, go on.
I think Powell was a little vague in his response on that one, and maybe purposely so. But the way I interpret what he was saying is that in the face of the data that they received, that some of the members of the committee felt that the new information was sufficiently significant that they went ahead and changed some features of their forecast. Well, a number of other members of the committee said, 1 month of inflation is not going to dramatically change either my forecast or my expectations for policy. And frankly, we need to be in a world where expectations for the Fed and Fed policy isn't being pushed around by one data point, plus or minus where it lands. But I think everyone on the committee had an opportunity to revise. Some felt it was necessary, others didn't. So I'm not sure I'd play up the staleness of the SEP so much as he said it was conservative, and we'll see if the data justify a more vigorous approach, as I think they will.
All right, Mr. Sheets, we will leave it on that note. A little shorter chat today, but we look forward to a longer one next time. Thank you very much for your views over there. Need to take a very quick break. Come back on the other side with our list of top stocks to watch out for this Thursday morning.
ఉండబోతున్నారనేటువంటి ఒకనొక కాంక్షతోటి చూస్తున్నటువంటి సందర్భం
हमारे माननीय यशस्वी प्रधानमंत्री मुद्दतों में होती है शख्सियत उनके जैसे अंदाज ये बयान से हो इतिहास हो जाता है। हमें गर्व है कि हम वो पीढ़ी है जिसने इतिहास बनते देखा है। गौरवनीलु हमारे भारत के यशस्वी प्रधानमंत्री श्री नरेंद्र दामोदर दास मोदी जी को हम सब के तरफ से अभिनंदन और स्वागत करते हैं।
నారా చంద్రబాబు నాయుడు అనే నేను విశ్వాసం విధేయత చూపుతానని భారతదేశ సార్వభౌమాధికారాన్ని సమగ్రతను కాపాడుతానని
Welcome back. Well, let's get to the stock list of the morning, all the buzzing stocks that you need to be aware of. We've got our team standing by with the CNBC-TV18 list of top stocks to watch. Guys, great to have all of you. Vivek, let's start with the L&T Finance. What's the update here?
Well, good morning. So L&T Finance holding along expected lines, something that Nimesh had also been mentioning as far as his D-Street chatter was concerned. There's a large block deal that's anticipated in today's trade. Now, the sellers are going to be Bain Capital affiliates, which is BC Asia Investment as well as BC Asia Growth. Along with that, a few P-note funds, under the name of BNP Paribas Financial SNC will also be pairing their stake. Now, this particular block deal is a complete clean-out trade. So, total 3.5% of equity is expected to change hands, and the discount is less than 1%. That raises hopes that this particular block deal will happen in the block window itself. The total deal size at the base price is more than 1,500 crores. So, it will be important to see how L&T Finance reacts after that. Going with the green because the overhang will go through, and anticipating this particular deal to happen in the block window.
Okay, well, Vivek, thank you very much for that. So the spade of block deals, it's only picking up pace, and we'll sort of get you more as we go along. But Sobha should be in focus today as well. Sonal is here with details. Sonal, morning.
Good morning, Prashant. Well, Sobha will be in focus because the board has approved raising funds up to 2,000 crore rupees, and this is via rights issue. The issue price is set at 1,651 rupees a share. Remember, this is a 20% discount to yesterday's closing market price as well. The proposed issuance will be of around 12.1 million shares, and this could lead to a post-issue equity dilution of 11.3%. If we talk about the number in terms of application, 825.5 rupees per share, that is payable on application, and the remaining amount, that is the equivalent amount, can be paid in not more than 2 subsequent calls. Now, the company says the entire process that should be completed by 31st December 2025, and the entitlement ratio is 6:47. So it's a growth capital that the company is planning to raise. So going with green on the stock today.
Okay, all right, Sonal, thanks a lot for that one. Mangalam joins us because there's good news coming in for Nestle. Mangalam, tell us more, the royalty issue behind them and things looking up.
Well, things looking up for Nestle. It's a sentiment positive actually because, the Nestle board has told the exchanges, rather the company has told the exchanges that the board has, approved payment of royalty at 4.5% to the parent for the next 5 years. And that is something that was anticipated because this amount was unchanged. The original proposal of increasing the royalty from 4.5% to about 5.25% over the next 5 years was earlier rejected by shareholders. So obviously the street believed that, now this issue would be put to rest, and that's exactly what has happened. So that's a sentiment positive. Additionally, there's also an upgrade coming in from CLSA this morning. So that should further boost the stock. See it in green today.
All right, Mangalam, thanks very much for that. Nestle in focus. Back to Vivek. He's watching out for some more names, including PTC India, PTC Finance, as well as Dr. Reddy's. Vivek?
Well, that's right. So 2 stocks on my radar, expect both of them to open in the red. First one is PTC India and its subsidiary PTC India Financial Services. PTC India Financial Services, has had trouble with the regulators for quite some time. And yesterday, SEBI, has gone ahead and passed order as far as the matter in PTC India Financial Services is concerned. So they've gone ahead and barred Pawan Singh, the ex-MD over there, and has fined him 25 lakhs and has also barred him from holding any director's post in a listed company for 2 years. He's the former MD and CEO of PTC India Financial Services. But more importantly and more surprisingly is that the company has also gone ahead and fined Rajiv Kumar Mishra, who's currently serving as the CMD of PTC India, if you look at the website. So now also what they've done is they've barred Rajiv Kumar Mishra from taking director's post in a listed company for 6 months, which basically means that he will now have to step down as a CMD of PTC India. So, there will be some uncertainty as far as the positioning of the board is concerned, and expecting both of these stocks to, open in the red today. Now, coming to Dr. Reddy, Dr. Reddy has gone ahead and signed a licensing agreement with Ingenious Pharma. So now they've gone ahead and in-license exclusive rights to commercialize cyclophosphamide injection, mainly used to treat a form of breast cancer. The company will enjoy 50% profit share, and the total sales for FY24 for this particular product was close to $51.8 million. This is as per the IQVIA data. The product will be supplied by Ingenious and to DRL, and the US market will also be supplied by DRL itself.
All right, Vivek, thank you very much for that. Well, more stocks with news flow. Vamakshi is here with details on this one. Vamakshi, morning.
Well, good morning, Prashant. Let me first start off with Gensol Engineering. The stock is expected to open higher today, and that is because it has emerged as a successful bidder for a 250 megawatt battery energy storage system of Gujarat Urja Vikas Nigam Limited. There is also a green shoe option that could be possible of a similar size, and in fact, in case if this green shoe option is exercised, the project could potentially generate revenue of around 2,680 crores over the 12-year tenure. Apart from that, Bundada Engineering is another counter that is in focus, a counter that we don't talk about very often, but a huge order coming its way from NLC India. The order is worth almost 940 odd crores. They will be setting up a 600 megawatt grid connected solar power project in Gujarat. Apart from that, lastly, let's also focus in on Arvind. After the Labour Court actually declared a strike at its Santej plant as illegal on June 6th, the strike at its plant has been called off by the workers. The operations of the plant, which were partially impacted due to the strike, are now returning back to normalcy. So this is a bit positive for Arvind, but the street will be taking note of the financial implications because the company estimates a potential revenue loss of around 180 to 200 crores, which is nearly 10% of its Q4 revenues, and a reduction in EBITDA of around 60 to 65 crores, which accounts for nearly 27% of its EBITDA in the fourth quarter. So overall, because of the financial implications, going with the red for Arvind.
Okay, all right, Mamakshi, thanks a lot for that. Well, we'll be keeping an eye out on these insurance companies as well. Yash joins us to run us through a quick analysis on the stocks and how they react. Morning, Yash.
Morning, Nigel. So, of course, life insurance companies are going to be in focus, and that is for a negative reason, as the regulator has come out with the final regulations when it comes to surrender value. Now, these are not what insurance companies would have expected, at least as per the representations which they had made to the regulator. The final regulations which have come again take those surrender value levels to much elevated levels. Now, of course, barring the long-term negatives which might occur for life insurance companies, the immediate impact because of higher surrender value would be a significant impact on the VNB margins, as expenses would increase for these life insurance companies on the surrender value which has to be paid. If I just have to put a chronology in terms of how things have moved on surrender value, this was in December 2023 when the first proposal from the regulator had come out on surrender value, which spoke about 83% of the premiums received by the life insurance companies to be paid back to insurance policyholders in case of surrenders. Of course, there was fair bit of concern amongst life insurance companies. Resistance came through, after which March it was reduced to 30%. Then again another proposal came in which took it again to 80% levels, but that was still proposal level, and final regulations have not given much respite on that, maintaining surrender value levels at 78%. So big negative, especially for HDFC Life and Max Life Insurance, which have a higher exposure to non-par products which are more vulnerable to surrenders.
Okay, so it seems the final regulations are a little closer to the original, the first draft that came in, which means that it could be slightly penalizing for insurance companies. We'll see how those stocks do. Thank you very much for that, Yash. Let's quickly recap our list of top stocks to watch then. The ones that have positive news flow around them are L&T Finance, Nestle India, Sobha, Dr. Reddy's, Gensol Engineering, Bondada Engineering. The ones that have negative news flow around them, of course, are life insurance stocks, PTC India Financial Services, as well as Arvind. Okay, so that's our stock list. Let's now move on to commodities as well and figure out what's been happening over there with the Fed meet out of the way. Manisha, so those US yields are going all over the place. So is the dollar. How have the commodity markets reacted to the Fed?
Well, the knee-jerk reactions will be clearly has been a bit of a decline because the markets were anticipating at least 2 rate cuts. Now you have 1, and that perhaps also in the last quarter of this year. And while there are 4 suggested for the next year, the markets still are slightly skeptical of that. So we have seen a knee-jerk reaction in sense of a decline in commodities. The gold prices and the silver has come off as well, both of these trading at around 2 to 4 week lows for these commodities. Not just that, if you look at the metals as a sector, we're looking at some declines coming in for this one as well. This week to begin with hasn't started so well for the base metal prices. So now we have the copper prices trading at around 1 month lows as well. The declines have also come in for the energy space, where we did see the crude oil prices gain initially, and this was on the back of stronger data and demand coming in from China and Europe. But now, because of the rise in U.S. inventories, also ongoing ceasefire talks in Gaza, crude as a commodity as well is trading in the negative 0.5% down for both varieties as we speak.
All right, Manisha, thank you very much for that. So that's basically commodities in focus. Well, all of the focus here really has been on, since the morning, has been on US CPI, right? And of course, the Fed reaction function, etc. But we got inflation data here in India as well, and that is looking good. We also had the IIP numbers. IIP, of course, a little backward looking, but CPI, of course, for the last month. Lata is here with details on both. Lata, morning.
Well, I think we must brace for a Diwali in the bond market. The yield should go to about maybe 6.95, the previous low. It closed at 7. And concomitantly, you can expect a rally in the bond markets. And I'll tell you why. The CPI number came in at 4.75. The CNBC-TV18 poll was at 4.9. Most polls were at 4.9. And importantly, the Reserve Bank's average for April, May, June, the forecast that they gave was 4.9. So this is 4.75. We already have an April of 4.9. Chances are for the quarter, we are going to undershoot the Reserve Bank's forecast. Food inflation is still high. That's 8.7, but that's largely base effect. The year ago is 2.9. So, that's why this looks big. Food prices will rise in June. As we all know, vegetable prices are already up. But then there again, you're battling a base. So it will not show up so much in the headline. It will still come in lower. But the biggest number is the core inflation. At every point, people say, oh, it's gone down to 3.2. It can't go any lower. It was 5% year ago, 5.05, and 6% 15 months ago. Look at the extent to which core has fallen. And of course, this is a calculated number. There are some economists on the street who believe it is 2.97 because they calculated a little differently. This is actually deflation levels. So now what will the Reserve Bank do will be a big issue. Their overall forecast is a target is 4%. And they've always said that they will look at core rather than, food and fuel, over which they have less control. And if their targeted inflation is now down 1 percentage point lower, the cries will go up and expectations will go up that the Reserve Bank will at least change its stance. Considering that the Fed has said it's only going to cut once in the current year, maybe a rate cut will be difficult, but definitely a change in stance. And in any case, the bond markets will internalize it already. Now, of course, there are two dangers we will have to remember. That the budget is not out of the way, but the noises coming out are indicating that the fiscal deficit will be adhered to. The other big thing that we will have to wait out for is the RBI's June bulletin, where they will tell us what is the neutral rate. Now, the neutral rate is the difference between inflation, that is a 4.5% forecast for the current year, and the nominal inflation rate, nominal interest rate, which is the repo rate. Repo rate is 6.5, inflation 4.5. The difference of 200 basis points is too high. Originally, the Reserve Bank had said the difference should be, neutral rate is about 80, 90 basis points. But now after COVID gone, it's expected that they will bring it up. But will they bring it to 150, 175, 200? If in the June bulletin you get 200, then there are no rate cut hopes. But chances are they won't say that. So that's the next thing to watch, the Reserve Bank's June bulletin. And then, of course, the fiscal deficit. But today, prepare for a Diwali in banks and in bonds.
All right, Diwali in the middle of summer. But
not a good combo.
Well, Lata, thanks very much. Excellent wrap out of the data that we got here as well. We'll take a quick commercial break here. Deepan Mehta of Elixir Equities will join in for some fundamental stock analysis. Stay tuned for that's coming up.
గౌరవ్ నీలు కోనిదాల పవన్ కళ్యాణ్ గారు నేను
Welcome back here with us on Bazaar Morning Call. We've got Deepan Mehta joining in. Of course, he's from Elixir Equities. So let's get some thoughts going with Deepan. Deepan, good to have you on. To start off with, I really want to take up this whole business around life insurers because it's been so many months of policy uncertainty. Finally, I think we have the full and final, surrender value norms. And they seem to be slightly penalizing from, not from the policyholders' point of view, but from the product manufacturers, the companies' point of view. What's your sense on life insurance?
Thank you for having me on your show. I haven't really studied the exact details of this surrender value regulation. But look, life insurance is a great business. And end of the day, the industry has been able to navigate through many such regulatory changes, tax changes as well. And there are minor subdued demand or a minor hit on the profitability. And then it's business as usual. And the most important thing is that these products are being understood better. And the entire industry is going in for products which are more profitable. From that point of view, I think very positive on the insurance companies per se. I think valuations for private sector insurers also have come down to reasonable levels. They're going at 4 or 5 times now. They're in the range of 2 to 3 times their enterprise value. And of course, there's this behemoth LIC. And yesterday, particularly on your channel, I saw this presentation on LIC where they actually increased their market share as compared to private sector insurance companies. And that, I think, is a very bullish sign from LIC. And considering the valuation, considering that they have such a large exposure to equities, this is one company we have a very positive view on. Having said that, we and our clients are invested in LIC, so our views could be slightly biased from that point of view. But there's a company where there's scope for the valuation ratios to be re-rated higher. And of course, it's a PSU stock, which is the flavor of the season. And I think earnings also and new business growth also can compound steadily.
So I got that, and we'll talk more about this on the insurance side as we go along. Deepan, hi, morning. So immediately, what are we looking at? I mean, you got a big sort of down move in yields overnight. We got the Fed out of the way. So where will we see as an immediate reaction function? Will it be metals? Could it be banks and financials, IT services, or not the traditional IT services, but maybe some of the a few which react a little bit more whenever we have yields come off? What's your sense? Or you think a lot of it is already in the price because we've been moving up non-stop?
John, good morning. It's a multiple choice question, and I take on IT services. So if NASDAQ and US economy do well, then I think IT services should do exceptionally well as well. And the interesting bit is that across the board, IT services companies have been getting a lot of contracts. Order books are looking good. Contract values are looking up. It's just that execution was a problem last several quarters or so. So I think if there is more certainty in the US economy, and if the entire Fortune 500 companies start to look at growing their expenditure and investment in technology, then at least IT companies will see immediate benefit of it. And at least the execution will start on a lot of these multi-year, multi-billion-dollar contracts that these companies have signed. Even if the work has started, it can be scaled up. So very positive on IT services, and per se, the great operating leverage businesses as well. Even a minor uptick in the revenues, a lot of it can flow to the bottom line. The entire pressure on costs also, mind you, has come down. I think hiring costs and salary increments are more down to earth now. And a lot of IT companies are using productivity tools within the AI space to improve their cost structure. So from all points of view, I think IT services should have a good year, 24-25. And they have been laggards so far, but I think they could easily catch up over the next few quarters or so.
Okay, all right. Hi, Deepan. Good morning and good to see you in. Deepan, I need to ask you about the cement space. I put out 4 reasons earlier this week as to why the stocks were buzzing, but now it appears the 5th reason has come about. That's normally the low-hanging fruit. There's talk of consolidation, larger players want to get larger. The Adani Group, Adani Cement listed companies, so some articles are stating today that they are on the prowl. We've heard that in the past, but actually not much has happened, barring the Sanghi asset. On this inorganic growth, will you be looking at buying some of these mid or small-sized companies?
Very difficult to say now which is the next target, because not just the Adanis, I think all the large cement players are looking at acquisition. The balance sheets are extremely strong. And they know that they have to get market share at any cost because a lot of expansion is taking place within the industry. And by acquiring a new player in the same area or a different geography can certainly expand their marketing footprint as well. So yes, I think if there's an opportunity, I tend to think that industry players will overpay for it. But look at the dynamics of the cement industry. I think from what I read, a lot of the cement prices have been stable to have come off slightly also. Overall construction activity has been low in summer because of very hot summer season. And now we're entering into monsoon, which is also a low key activity. By then we'll have even more capacity coming on stream. So the picture is getting very muddled as far as cement is concerned. And I know I've been quite bearish, or I would say neutral on cement, and companies like Ultratech and I would say Shree Cement, even ACC have reported exceptional numbers. But I think that considering the valuations, considering the capacity build up, as also the fact that input costs will gradually inch up for these companies, and I don't think they have as much pricing pressure. So look at the full picture. At best, I'd like to be neutral weight, definitely not overweight, and that too in select companies and very efficient players, maybe like a Ultratech or even a Shree Cement.
All right, Deepan, a quick comment on a couple of these consumption names. Yesterday, you had Dabur, that was a relative outperformer. What do you like from the FMCG pack?
Nigel, actually nothing in the FMCG pack. I know that investors have been gung-ho because they expect the center to spend more on rural, and that would increase rural consumption. But there are other ways to play it, and could be auto, could be appliances. I think better way to play agriculture, maybe even fertilizers and agrochemicals. But I'm not that positive on FMCG. I think a lot of categories over there are pretty much mature, and volume will remain pretty tepid going ahead.
Okay, all right. Stay on, Deepan. We'll have some more questions for you in just a bit, but we also have Anuj joining in. So let's go across to him and find out what he's making of the setup today. So Anuj, this is one of those rare days where the Fed doesn't cut, but the street is very happy. What do you make of things?
Yes, so good morning. And I think the Fed perhaps would have realized that the market had already built in so much in anticipation that he didn't really need to say too much. But, overall the cues are quite positive for the market, equity positive actually. I think the most important cue was overnight from the US inflation. As expected, the US inflation was soft, and that's also tying in well with the recent data points, which indicate that sooner or later you will have rate cuts. Now, the Fed chair perhaps was not as dovish as market would have expected. I think the market was going in with dovish expectations. And over there, he said only one rate cut perhaps in 2024, but 4 in 2025. So the overall thesis of 5 rate cuts is still intact. It's just that it's not going to be front-loaded. So that may be a bit of a disappointment, but the bond market didn't see any disappointment. In fact, neither did NASDAQ. Overall, yes, the Dow did slip from the highs, but the US bond market or NASDAQ reaction was not at all negative to Fed speak. And Indian inflation was also on the lower side. So net, I would say that equities go into the, the expiry with some positive cues. One more thing which is in our favor is that FIs are still short. And, like we've seen in the past, when you are record short, when you start to cover, you go on till, you covered the last short position as well. And yesterday you saw a net covering of 45,000 shorts thereabout. And now if you look at the overall net shorts in the system, which was at 3.5 lakh, we are now at only 80,000 contracts net short and 41% long now. So maybe we get to even Steven by the time we come back from the long weekend. Coming to levels now on the Nifty, the first resistance today, remember, is expiry 23,400 to 23,450, which has been the recent high, and then 23,500 to 23,600 on the option side. The support comes in at 225 to 23,300, and then 23,125 to 23,175 based on hourly charts. On the bank Nifty, which has been making a heavy meal of 50,000 for last 2 or 3 days, that really is your resistance. 50,000 there, about 5150 to 5250, and then 50,400 to 50,500. The support comes in at 49,600 to 49,700, and then 49,350 to 49,500. Now, for the quote of the day, if there's one speech which you must listen if you have 35 minutes and make your children listen to, it's the speech from Roger Federer. And there's just 4 or 5 very interesting things. Effortless is a myth. Belief in yourself has to be earned. Grit is greater than gift. A lot of people say Roger Federer was just a gifted player. And I think he says that, look, I had to work my way out. Discipline is a talent. Trust and loving the process is a talent. And the most important one, you can do your best and still lose in life. That's life. Roger Federer.
There was that one line, Anuj, you said, I saw that. I mean, only a piece of it. I've not heard this, but saw it on Twitter. He said there's no such thing as perfection.
Yeah.
He says, I've played some number of sets, he said, but I've only won 50% of them.
He said that, you know, he won 80% of the matches,
but only 50%.
But only 54% of the points. Which also tells you that, you know, it doesn't matter, you know, you win all the points. It matters you win the big points. It's applicable in the market also.
Yeah.
You know, Rakesh Jhunjhunwala used to say that, you know, a good trader would only have 52 to 54% kind of success rate. But it's the days that matter in which you trade big and win big. That matters. Actually.
Oh, absolutely. Anuj, thanks very much. I think nice analogy here for the market as well. You know, I remember Jim Rogers used to say that, and again, I mean, it's slightly maybe the side track, but I think makes sense. He said, you know, I only go for the really easy, obvious ones. I don't try to do complicated stuff. I mean, it's got to be there, waiting to be picked up. I mean, he was talking about trades, and those are the ones I go for. I don't chase everything. Because that is usually sort of the road to ruin. Well, that's markets and how things are looking. But let's, I think, focus on the industrial space. UBS is expecting most of the policy initiatives for the sector to continue in NDA 3.0. We have Amit Mahavar, Executive Director, Industrial Analyst at UBS Investment Research, joining in now with some perspective. Amit, good morning. Good to have you with us here. Thank you for your time. I mean, you know, markets have shown so much love to the industrial space. So over the last few days, we've had lots of questions. I mean, it's just kind of questions from investors, etc., with regards to policy. Will the focus shift to the consumer side a little bit more? But it's no one's case really that the focus will move away from industrials, maybe a little bit more for other sectors as well. So how are we positioned? You must have spoken with lots of investors who track the space as well. What's the feedback?
Hi, morning, Prashant. Thanks for having me on the show. Yeah, I think most of the policy initiatives on the industrial side, whether it's right on the PLI, a bit of it, or on the defense manufacturing, you know, policy initiatives, which we've seen how it has impacted favorably in the last decade. We expect most of them to continue, and broadly, in our discussion with investors, that has been the view. But yeah, that's basically coming in select pockets. Not all segments might do well. So broadly speaking, whatever you know, the government had started in last two terms. In the third term, we believe bulk of that is going to continue, and you will see that reflection in the recurring order run rate in especially product companies, and even on the profitability, some of that is reflecting.
Amit, hi, morning. Good to have you on. So can you expand on that? Because given what you just said, that perhaps the ordering momentum and the policy momentum will continue, we come back to the drawing board and ask you the same question that we would have asked you before the 4th of June, right? Which is valuations and how much is really still left on the table. Because you've got, you know, these stocks like Siemens and ABB now trading between 70, 80 times. So can earnings keep up with these kind of elevated, you know, price to earnings multiples?
Yeah, hi Surbhi. So if you see, let me not go into specific stocks. I'm not allowed to talk on individual names, but I can definitely talk on the segments, right? If you've seen last 8 to 10 years, right? You've seen in mobility, we've seen upgrades in rail infrastructure, right? Then you have companies which are technology leaders who are catering to that. In data consumption, you have data centers where India is one of the hottest market in the Asia Pacific region, right? So you have again very specific companies who have the portfolio of products, software, power distribution units, cooling technologies, supplying to that, or genset standby, right? Likewise, in the entire electrification portfolio, you have medium voltage and high voltage product companies which are been benefiting from government initiatives, right? And then last but not the least, you have defense manufacturing and EMS. So broadly, if you see, we are more constructive and optimistic on these technology equipment players who are not only catering to the domestic demand, but also have a decent and expanding export business. So the challenge around valuations has always been there for last so many years in industrial, but it has gone up multifold in last particularly 12 months. But I think if you see the growth, at least on our coverage, we expect 18 to 19%, new order and earnings compounding in the next 3 to 4 years, which should keep the investors' interest high. To an extent, a lot of these companies are working on expansion of their addressable market, which also justifies the premium valuations, most of them are commanding right now, Sophie.
Hi, Amit. Good morning and welcome to the show. This is Nigel on this side. Hope to see you on the show more often, Amit. Well, I wanted your comment on private capex. Are there still only green shoots or is it coming back in the big way? Your comment on private capex. And what about margins? For Q4, most companies delivered good margins. But with the input cost spike, are they hitting a top?
Hi, Nigel. So first on private capex, we don't have a view that we are going to see a very strong greenfield capacity expansions like the one we saw between 2004-5 to 8-9 period. What we are saying is that in terms of the industrial subsets, the segments have increased multifold. The conventional segments like cement, steel, oil and gas, power, etc., used to be the bulk of demand for incumbent leaders. If you see today, there are like a dozen and two segments which are making the revenue streams much more diversified. The growth and earnings acceleration is far less cyclical than it used to be. Right, as I said, segments like railway, data center, the electrification portfolio is making the growth more recurring and sustainable. And in the private side, you have a lot of efficiency capex, right? You have companies expanding the portfolio of the automation that they have. The motors are more efficient, right? Deployment of drives. Then you have the entire factory setup where a lot of not only the large companies but medium and SME segment players are also upgrading the factory infrastructure. You have a whole host of new manufacturing with EMS ecosystem and defense ecosystem in India, which was not there 5, 10, 15 years ago, right? So I think generally speaking, we are of the view that the private spending is more towards upgrading the factory setup and also now catering to the export market, which might have a different requirement from a factory setup point of view. So that's our view, Nigel. Yeah.
Got it. So railways, data centers, medium and high voltage power equipment, defense manufacturing and EMS. These are the areas that you like, right?
Yes.
Yeah. Amit, on the data centers, I mean, what is published we're not asking you to talk about something which you're not published on. Is there a play with which you have coverage on?
Again, Prashant, I'm sorry, I will disappoint you here. I can't give names, but you have companies which are large suppliers. The market share, you have market share which are very high for some of these, technology companies on the data center value chain.
Amit, we'll leave it there. Thank you very much for your time. Good speaking with you. Appreciate it. We'll take a quick break here. We are back. Mitesh and Sudarshan on the other side. Stay with us.
నేను కొణిదెల పవన్ కళ్యాణ్ అనే నేను ఆంధ్రప్రదేశ్ రాష్ట్ర మంత్రిగా నా పరిశీలనకు వచ్చిన లేదా నాకు తెలియవచ్చిన ఏ విషయాన్ని నా కర్తవ్యాలను సక్రమంగా నిర్వహించేందుకు అవసరమైన మేరకు తప్ప ప్రత్యక్షంగా గాని పరోక్షంగా గాని ఏ వ్యక్తికి లేదా వ్యక్తులకి తెలియపరచనని లేదా వెల్లడించనని దైవ సాక్షిగా ప్రమాణం చేస్తున్నాను.
Welcome back. Well, let's get in our technical experts then. Mitesh as well as Sudarshan join in this morning. Good morning, gentlemen. We are bracing ourselves for a bright start. So, Mitesh, you go first. How would you trade the index?
Morning, Nigel. I think last 4 days, we've been kind of getting to levels of 23,400, 380 zones, not getting an hourly close above that. So, I think that's the level which I'm watching very closely. It's a rising trend line. So, the level keeps going up about 10 points or so every day. So, I think 23,390, 3,400 is the zone which I'm watching. we will start around that zone. I think it's a 70-80 point kind of a gap up. So once the Nifty spot gets an hourly close about 23,400, I would be more comfortable taking longs. We booked some longs on the index, but on the stock side, it's just a clear-cut situation when we are trading with a positive bias in all long positions.
Okay, got it. Sudarshan, what about you? What would your trade be? We're likely to start off with a gap up, I think, of 95 points if I got the implied opening right. What's your take on the index?
Yeah, good morning. See, my take is the same as yesterday. I have a sense that the market is topping out in the short term. The word is short term. Now, that process takes some time. So any gap up should be left alone. Even yesterday, I had suggested look for a 100, 150 point dip and then buy. And that we got that yesterday. The same view applies for today. Wait patiently for a dip. If you get a dip, a 100 point dip from the open, go long, you'll get some money out of it. But don't chase this gap up. And also, well, I'll repeat, it is giving, the markets are giving a sense that at least for the short term, they are likely to make a high and pause.
Okay, all right, Sudarshan, stay on. We'll have some more questions in just a bit. Quick break right now. We'll come back. We'll also have the pre-open rates and get to some stock-specific ideas from both Sudarshan as well as Mitesh.
ఉండబోతున్నారనేటువంటి ఒకనొక కాంక్షతో చూస్తున్నటువంటి సందర్భం
हमारे माननीय यशस्वी प्रधानमंत्री मुद्दतों में होती है शख्सियत उनके जैसे अंदाज ये बयान से हो इतिहास हो जाता है हमें गर्व है कि हम वो पीढ़ी है जिसने इतिहास बनते देखा है गौरवनीलु हमारे भारत के यशस्वी प्रधानमंत्री श्री नरेंद्र दामोदर दास मोदी जी को हम सब के तरफ से अभिनंदन और स्वागत करते हैं
నారా చంద్రబాబు నాయుడు అనే నేను విశ్వాసం విధేయత చూపుతానని భారతదేశ సార్వభౌమాధికారాన్ని సమగ్రతను కాపాడుతానని
Welcome back. Well, let's get to all the calls now. Of course, we are coming you live from the CNBC-TV18 Motilal Oswal studios. Time for the trading picks now. Let's go back to Sudarshan as well as Mitesh. Mitesh, hi. So what stocks are you looking at today?
Good morning, Subi. I have all long calls today. Buy on IEX. I think, good price and volume action there. The medium-term charts are turning positive. So we'll take a long with a stop below 170 for a first target of 182. Federal Bank had a strong candlestick pattern as well. So buy here with a stop at 170 for targets of 180. HUL after a good up move is giving a pullback, is now close to support level. So good entry point. 2505 should be the stop loss for long positions and 2580, 85 should be the target area. And Balrampur Chini, last 3 days I've had buy on Balrampur Chini. The stock chart still looks very good to me. There should be more on the upside. So revise the stop loss to 410, look for a target of 440.
Okay, all right. Sudarshan, what about you? What are your picks for the day?
Well, ABB is a buy with a stop under 76.20. Bajaj Finance is bottoming out. We have to keep on probing and seeing whether this buy works or not. So buy with a stop under 1500. Polycab is a buy with a stop under 65.75, and Siemens is a buying opportunity with a stop under 6512.
All right, gentlemen, thank you very much, both of you, for joining in with that. We will, of course, have the F&O trades now. Chandan Taparia is with us, derivative and technical analyst at Motilal Oswal Financial Services. Chandan, good morning. Good to have you here. How are things looking? New highs? Looks like it's going to be new highs. But what would you trade specifically?
Good morning, Prasad, Nigel. Thanks for having me. So market is holding the gains about 23,000 from last couple of days. In the last week, we have seen a decent recovery from the lower levels, and now a small follow-up can lead the index towards 23,700 to 24,000. So we believe that till Nifty holds about 23,100, continue to hold the long position, and index has potential to rally towards 23,700 to 24,000. If I look at the data internal, your India, which is continuously falling down, is now below 15. So lower volatility with rising put-call ratio supporting the overall sentiment of the market. Now, if I talk about the Bank Nifty index, that is also holding well. Now a small follow-up and pole unwinding of 50,000 can take it higher levels. So 49,500 is the major support. And with this support, banking index can head towards 50,500 to 51,000. Now looking at the stock wise, first is buy on IEX. After a long time, we have seen a consolidation breakout on the daily and the weekly chart. It is trading at multiple months high. It managed to close above key hurdle, and follow-up is clearly visible with bullish price pattern. On derivatives front, we have seen open interest decline with surge in price, which clearly indicates short covering. So momentum could continue. One can buy with support of 169, and IEX can head towards 181 to 182 levels. Second trading area, that is buy on Crompton. Strong price pattern. We have seen open interest surge by around 45% in last couple of days with positive price action. In fact, we have seen some put writing. Put call ratio of the counter is increasing. Technically, it has given a breakout from its pole and flag pattern. So one can buy with support of 412, and it has potential to rally towards 444 level. Last trading area, that is buy on Concor. We have positive on the selective railway name, and Concor has recovered well from the lower levels. We have seen momentum, major trend is positive. So one can buy with support of 1180, and here we have a target towards 1200 zone in the Concor.
Okay, all right, got that. Chandan, thank you very much for your trades today. Let's now shift the focus to the financial space. We have Rahul Jain, co-head of Asia Financials and head of India Research at Global Investment Research at Goldman Sachs, with us now to talk about his view on the overall sector. Rahul, great to have you with us on the show. You know, we've gone through this last week and a half of a lot of up and down in terms of what's going to happen with policy. Will it be more consumer focused now? And I think the market settled down to the view that there'll be policy continuity, and therefore the capex focus should continue. But the funny part is, while PSU stocks keep shooting through the roof, while capital goods stocks are trading at 80, 90 times, the money is not flowing into banks, which is supposed to be funding. I'm assuming if you're looking at fantastic economic and capex growth, then it's the banks that are supposed to be funding it. And yet we're not seeing that kind of investor love towards the banking and financial space. Your thoughts on this?
Sure. Good morning, Surbi, and good to be on your show. Look, I mean, before I straight away drill into the question that you asked, let me just paint the overarching view that you've got in the sector. So a couple of months back, we actually downgraded the earnings in the sector basis three key reasons. Number one was the cost of funds likely to remain elevated, and we've seen deposit rates going up by select banks over the last couple of months. Number two, the consumer leverage, which has been increasing, that's been raising the fears on potential NPLs coming through in the unsecured credit space. And of course, the third aspect was around the operating expenses, which so far along banks have managed it well. But given the fact that deposit mobilization is the key, banks will need to keep upping their investments in their resources and the branch infrastructure. So clearly there would be some earnings, facing the headwinds, at least in the near term. And in that aspect, clearly the investors are taking the view that where do they get good visibility in the near term. To answer your question, the reason why the private banks may have underperformed in the last few months or maybe last few quarters is because of both the technical reasons as well as the fundamental reasons. Technical reasons are well known. The flavor of the season has been the PSUs across the board. We have seen the PSU banks show good performance over the last many years. The other technical factors was the foreign flows into the country has been rather subdued compared to the domestic flows, and the flavor of the money in domestics has been more in the small and mid caps of the PSUs. On the fundamental side, like I just painted the picture, the visibility on the earnings growth has been a bit more hazy, at least in the near term, and that could be the reason why investors have chosen to look at other sectors compared to the financials.
Just to clarify, despite the headwinds that you mentioned, and that's the whole fight for deposits, increasing consumer leverage, which may lead to some more NPLs and rising operating expenses, despite those headwinds that you described, Rahul, you still have buys on a lot of the large blue chip private names, right? Axis Bank, HDFC Bank. You also like IndusInd. I believe you like Kotak as well. So just explain that. Are these sort of more insulated from the headwinds you just mentioned?
So without getting into the stock specifics, I would say that some of the private banks clearly would be better positioned because their incremental market share gains in deposits have been better, or their management of the operating profitability has been better, either through better margins or better fee income, which has been helping them absorb the operating cost. Some of these banks also have been at the forefront of investing in, opening new branches, putting more resources at the ground level, which is helping them gain more deposits. So when one looks at over the next 12 to 18 months, we believe that the market share and deposit will play an important role because that's also will allow you to get more customers and therefore get more operating leverage out of that. So really speaking, it's a call one is taking on the operating profit growth where one would have a more visibility, and compared to that where the valuations would be. We've seen the valuations also get derated for select private banks quite steeply, and when you compare to the fundamentals, you do see a good opportunity for investors to buy into these names.
All right, hi Rahul.
Guys, sorry, just a anecdote. Only yesterday I was talking to somebody, an investor, and he said, well, people ask me what to buy. He says, I tell them SBI. SBI will double in 2 years, whatever. Is where people don't want it. Something more masala, exciting, chota, small cap, mid cap. SBI as an idea. I mean, but that's true, right? When you think about what is an idea, sometimes the best idea could be
the most boring one.
Yeah, the most boring one. But I found it interesting that, well, people just don't believe. They just take it because it's, why do we need you to give us SBI as an idea? Even if they don't own it, I guess, right?
All right, let's get Rahul's view. Rahul, hi, good morning. Welcome to the show. Nigel on this side. Talk about SBI. What's your view on some of these other PSU names? That's clearly been the space that has done very, very well. All those concerns have been put aside, and the PSU banking names have done very well. At current prices, bulk of the good news is in the price?
Hi, Nigel. So again, going back to the overarching view that I painted, right? If you look at the PSUs, they've done a good job in the last 3 to 4 years. We've seen the ROAs improve like almost 4x from 0.2, 0.3% to now about closer to 1%. Or thereabouts, and the market has rightfully rewarded those. The valuations have improved. But now what we are observing is the valuation gap between the private and the PSUs have narrowed a lot. And when, when you're talking about the normalized macro environment over the next couple of years, it again comes back to which entity, which segment will be able to better protect the profitability both at the margins front as well as at the operating profitability front, while gaining the market share in deposits or credit. And there we are seeing that private banks have done a good job. At least in the last year, there was a lot of focus on whether PSUs will be able to retain their market share in deposits or they'll gain market share because they now all come back into the game with good capital ratios, with healthy balance sheets. But what we are seeing is the private banks still continue to gain market share out there. So in our opinion, we feel that there is more value in owning the private banks at this stage than the PSUs. And that's been our call, for the last couple of months.
Rahul, I wish we had more time, Prashant here, but we'll pick up on some of these points that you made in a later conversation. Thank you very much for joining us. Great to speak with you here on CNBC-TV18. So that's Rahul Jain. He's co-head of Asia Financials and head of India Research, Global Investment Research at Goldman Sachs. Let's now get you the 9-10 calls. Mitesh is here. Mitesh, what do you have?
Well, choose a long on IEX with a stop at 170 for targets of 182.
IEX as a long. Targets of 182. All right, fair enough. Now, Mitesh, thanks for that. Surrender value, back to it, right? The final norms are through. From the first time that we reported the draft in December, then the dilution early this year, then, of course, the last draft which was put out, and now this, the final norms. How do they look? Yash is here with the spotlight on it. Yash, morning.
Morning, Prashant. So as you rightly pointed out, multiple rounds of discussion over the last 1.5 to 2 years, multiple ups and downs, and finally the regulations on surrender value are out. And let me tell you one thing, life insurance companies are definitely not going to like it. Especially the impact is going to be maximum on 2 life insurance companies, that is HDFC Life Insurance and Max Financial Services. That is because they have the highest exposure when it comes to non-par segment, non-participating segment, which is most vulnerable to surrenders in this particular case. Now, what the regulator, through its final regulations, has said is that the surrender value will be kept at elevated levels. Remember, just last month, the regulator had put out a draft proposal only to the life insurance companies, suggesting the mechanism in which it thinks special surrender value should be increased, after which there were representations made by life insurance companies seeking various forms of relaxations. But the regulator, let me tell you, on most of those points haven't budged, except for a small relaxation which has been given, which is that the 10-year GSEC yield, which is used to calculate special surrender value, that on that a special cushion of about 50 basis points has been given. Now, I won't go into the formula, but through the formula which has been prescribed by the regulator, if 10,000 rupees premium is paid in the first year for any life insurance policy, it's surrendered in the second year, then life insurance companies will have to pay 7,823 rupees as surrender value, which is what? 78% of the premium which they receive. Remember, the first draft came out in December 2023, which created concerns amongst all life insurance companies because it proposed 83% surrender value, which was then reduced to 30%. But then regulators spoke about increasing the special surrender value and taking it back to 82% levels, the same concerning levels. And now, with that small relaxation also, it still stands at 78%. So, big negative for life insurance companies.
All right, Yash, thank you very much. This table on your screen is the most important. It basically, in a snapshot, tells you where we stand. There was hope in March. Stocks had rallied, remember, when the draft tweaks to draft had come out. But now we are basically back to the May level. So about 78%. Great news for consumers, you and me. But as insurance companies and stockholders, I mean, not so great news. So that's the insurance bit in terms of news flow. This entire surrender value saga coming to a bit of an end now. Let's just take a quick look at what the pre-open is going to is looking like, and of course what the opening itself will be coming up on our screens in just a bit. The first rates on the Nifty, the Bank Nifty. By the way, the mid and small cap indices have been firing. Yesterday, both indices were up 1 and 1.25%, and I think you've got momentum there. The Fed reaction function immediately, will it show up in specific sectors? Like, for example, IT yields are down, although IT services companies here are very different from the IT that we speak about in the US. Metals, perhaps, dollar is down about 0.5%. Naturally, that's a sector which will be in focus. Financials is the other space as well, as yields here are also expected to cool off. Lata was talking about the CPI numbers here. Few seconds, and I think we are going to hit the opening, sort of market opening on your screen now. So you've got the Nifty, which is starting at a new high, 23,428. It's up 104 points. I think we got to 23,440-ish kind of levels yesterday at the high point. So I'm not sure if we really hit that, but we're there at new all-time highs for practical purposes. The Nifty Bank, I think, is also starting higher. The indices, that is. Nifty Bank is up 170. That's about 1/3%. 50,055 is where the Nifty Bank is at. The mid-cap index is up 0.8. And I'm thinking about the small-cap index, which is also starting in the green. So those are indices, but as always, it's about stocks. So let's get this going.
Oh, absolutely. I mean, once again, the mid-cap index is off to the races. It's, the gain there is almost 1% versus the Nifty's tally of 0.5% right now. By the way, I think the L&T Finance block, yeah, that's happened. That stock's up about 3% as we speak. Sobha, which is looking at more fundraising, rights issue, is up about 4% as well. Look at some more names in the broader screen. Transformers and rectifiers, 5% higher.
Look at life insurance as well, Surabhi.
Oh, yeah, absolutely. Good you pointed that out. Let me pull up some of those stocks. Yeah, ICICI Pru is down about 1%. Max is down about 1.5%. SBI Life is actually, positive, is up about 1%. Even HDFC Life, for that matter, is up 1%. Seems the market's kind of digested this because there's been so much back and forth over the last, I think, 6 months. These regulations have gone all over the place. And again, the narrative, at least some of what I was reading was that now, how much surrender value do you have to give in 1 year? The counter argument was that the persistency ratio is actually pretty high for policies. It's well over 80%. So, I mean, how much is the real impact? May not be that much, at least in terms of the 1 year surrender rates that have to be given in. So, actually, life insurers are managing to take this up pretty well. Nestle was a stock in news because of no higher royalty to the parent, 2.5% up on that stock as well. So, these are some of the early movers and shakers as we see on the volumes charts. It's not all PSUs, which is the norm. It's some other names as well. Some of the sugar stocks, by the way, Renuka, Bajaj Hindustan, they're looking quite sweet and attractive as we start things off. So That's how it's going. Overall, 1% higher on the mid-cap index.
Well, that's right. If you look at a numerical number, we went ahead and we got that. The high of the day is 23481. So we did that 23456. That's the number that our colleagues at Avas as well have been tracking, Anuj and team. They've been talking about that 23456. Well, that came about earlier today, and now we have slipped a little bit from the top. Stocks that are moving around. Heritage Food is under some pressure. That's coming for some profit taking after the big run that we saw in the past week. And, it's down close to around 3%, but I think it was down 5%. So it's cut its losses a little bit. Heritage Foods comes up for you in the screen. Dabur, yesterday it was doing a relative outperformance. Today, in fact, that stock is under some pressure. It's down closer to around 3.5% or thereabouts. So we should get that one as well up for you in the screen. Heritage Foods, Dabur, both of them are coming up. We have L&T Finance. Well, that could be the stock of the day, as we mentioned earlier today. So we just mentioned that as well. Block getting out of the way. Valuation's very attractive. So that stock is up close to around 3%. GMR Power, that's another stock that's opened up with a gain of close to around 5%. So big move is what we're seeing on that one. And Trent, yesterday they had their AGM. So that stock had opened up in the green. Valuations are not cheap. It's flattened out a little bit. They aim to maintain the pace of store additions. They're talking about 30 West Side and 200 Zudio stores. They're also highlighting that Star could be the third engine of growth. So that one, in fact, has flattened out. Yesterday, it was up close to around 3% or thereabouts. So good start. Breadth of the market is something that's very, very good. We had 8 stocks that are advancing for just one stock that's declining. But Surbi wants to comment, please.
Guys, I just want to point out that this is not limited to Dabur, Nigel. All of FMCG is under a lot of pressure.
HUL, Marico.
HUL, yeah, exactly. Marico, Colgate, Britannia, Godrej Consumer. It's just pretty much across the board.
Yeah, I mean, so that's one sector. I think even yesterday, I think FMCG was one of the few sectors which was down. So there is a little bit more profit booking happening there. The last week, Friday to Friday, was a big week for FMCG stocks. The index itself ended about 7% higher. That's last week. So yeah, I mean, there is that positioning there. Heritage Foods is down 3.5%, about 4% now. I mean, and we maybe also, look at KCP, which is the other one of these movers, which is, of course, this entire election excitement with what's happening there. It's had a big move, KCP. Electron is down 2.5%. Sun TV was a big mover yesterday. It was up about 4%. It's down about 1.7, 1.8 right now. Godrej Consumer Products is down about 1.5%. And you've got PVR Inox, which is down 1.5%. I have to point out that it's still early, but it's a little slow as opposed to what we've had right out of the gates. Big volumes and a very vibrant screen. Today, it's a bit slow. It's still the first few minutes, and maybe it'll change, but not. It's not a whole long list of big volume-led movers that we have. Soba, of course, we highlighted. Lodha is up about 5% as well, 5.25% as well. These sugar stocks are up. Renuka, Bajaj Hindustan. I mean, one can spot these. JM Financial is up about 4%. There is you got to go down the list. But DBL, Dilip Bilkon is up about 4%. Name like Kriti Industries. Nimesh had that on his D Street chatter list yesterday. 5.5% after yesterday's 20% move. Repco is up about 3.5%. But then volumes start to fade away as we go down. Reliance Power, good move yesterday. It's up about 5% this morning as well. So that's the market open. 120 odd points higher. 23,440 is where we find ourselves at. Our market master is with us. Devina Mehra is founder, chairperson, and managing director at First Global. Devina, good morning. Great to have you with us here on the program. Thanks very much for your time. Up and up, breathless, runaway rally. I mean, I think we can run out of adjectives, or maybe we won't, describing this the move that we've seen. And what has been remarkable, Devina, is over the years, these sharp pullbacks take lesser and lesser time to recover. You go back the last many years, and this one, the last week was, I think there was a headline I read, which is the second fastest pullback after a sharp fall. Buy the dips and how. Just your thoughts on the context we are in right now and the way forward.
Good morning to you and to the viewers as well. If you go back to my pre-election interviews, I had said precisely this, that we are spending too much time thinking about the election results. And the parallel I had given was 2004, where not just stocks, the whole market was circuit down and the trading had to be halted. And then you had the pullback. So I had said that, regardless of the election results, the markets and economy have a logic of their own, and that trajectory I do not see being changed on a 1-2 year basis. However, there might be interim volatility. So prior to the elections, in our PMS portfolios, we were fully hedged. We've cut about half the hedges, but we are still about half hedged because in the short term, you might still see some volatility, but that was not my post-election analysis that coalitions are not bad, etc. That was my pre-election analysis too, that or regardless of the surprise or otherwise the election results, that doesn't change the trajectory of the market that much, and which is why we were always in cash. Even we had no cash. I mean, we never made a cash call. We were hedged.
Devina, hi, great to have you with us. And I want to start by complimenting you really on the debate that you raised on social media, because very few people in the market are able to do that. And I thought we really called a spade by saying what is the definition of reform. Anything that benefits the market, anything that benefits industry is obviously reform. But if there is some populism, if there is some giveaway in terms of, any of the more rural-focused schemes, is that really such a bad thing? I thought that was a very, very, thought-provoking post. So let's actually get your deeper views over there. I mean, I think the market's now, settled with a very cozy expectation that nothing will change, policy continuity will go on. But is that such a simplistic view we should be taking as we get ready for the budget? And if there are some giveaways, would you see it as immediately negative for the market?
Surabhi, I mean, in your question itself, by using the word populism, you made it seem as if
no, this is a bias.
Negative.
Absolutely,
So,
it's a bias that we're all guilty of. Yeah.
Just as in company management, the way you manage a company, you have to balance the short term and the long term. So also it's exactly the same thing for a government, that you have to manage the short term, but you also have to look for the long term. And in the long term, you have to, two areas which you really have to focus on is health and education, which actually ties into employment, which ties into consumption, because private consumption growth has been very poor, and we really need to up that. And unless you have better employment, you will not see consumption going up. And to have even employable people, you need the health and education spending. So that's not, money down the drain. And one of the parallels I had given was the midday food scheme. And I still remember at the time, I think I must have been in school or something, but when MGR was pushing this midday scheme in schools, the general consensus was that we should not do this. This is a huge fiscal drain, but look at how it transformed Tamil Nadu. Tamil Nadu, which used to be among the poorest states a few decades ago, is now in terms of poverty, or rather absence of poverty, is the number one large state. Above it are only one or two very, very small states like Goa. So that is the transformational effect of interventions at that stage. Giving cycles to girls, again, looks like a giveaway, but that changes the mobility, that changes the number of girls who are able to study beyond a certain, standard, because the high school or the college may be far away. So you have to balance that. And also, see, we are only looking at the spending side. Even on the spending side, for example, if you have to give even a giveaways, so to speak, to business, which is considered reform, is corporate tax cut the best way to do it? Because, if you look at the high tax paying companies, who are they? PSUs, banks and financials, and MNCs primarily in consumer goods. Now, giving them a tax break is not going to give a boost to any investment. So if you want, for example, investments by businesses, it has to come elsewhere. So that's one part. The other part is, how do you fund whichever segment you are trying to spend for, whether it's businesses, whether it is the poor. And that, if you look at, again, if you look at the fiscal way, if you want me to go into it, I can go into it, but because that's also very equally important, that how do you fund it? Because in the past, we have spent on social concerns without increasing taxes and having the debt go.
Okay, all right. Hi, Devina. Good morning and good to see you. Let's talk about markets and how you approach it from here on. You had added, I think, some cement, some metal-related stocks as well. And you'd also mentioned, I think, that tech at some point of time will bottom out during this year and could give an entry opportunity. How are you positioned right now? The top theme that you like and something that you think has already played out. I think industrials was something that you believe most of it had played out.
Yeah, industrials, but we still remain overweight. We are watching to see whether it will top out sometime. But for now, we are still overweight. We are overweight auto components, pharma for the last year and a half. Yes, we had added in metals, but that's, even last time I had said that in metals, or for that matter, any commodity, you don't know how long the rally will last because there are many more users of commodities than producers of commodities. So a commodity bull run hurts a lot more people than it benefits. So we're just watching. Metals are kind of at a crucial point. We're watching which way the thing turns. In terms of IT, yes, we think sometime this year it will bottom out, but we are not yet overweight on IT. So, one of the sectors you asked, that would be the broad view.
We've again, the other point which we're not talking about that much now, but which sort of occupied a lot of mind space was mid caps versus large caps. How has your thinking evolved there, Devina?
So, if you go by SEBI definition for mutual funds of large cap, mid caps, now the way they define mid caps are also pretty large caps because it is not in terms of market cap, it is top 100, then 250 and so on and so forth. Not so much the mid caps, which as I said are pretty large in themselves. The part where we are very, very careful is anything below a 5,000 crore market cap. We don't even look at micro caps below 1,000 crore market cap, but even 1 to 5,000 right now, we would still be very underweight compared to where we normally are in that segment because we think the risks are high and we always manage for risk first. So that's been our philosophy. And even without taking that exposure, the portfolios are doing pretty well with lower volatility. So I'm happy with that. I'm not trying to be this high risk taker, trying to get all the sixes.
Okay, they've been asking you about one hot sector on which I think the market's also trying to make up its mind, and that is life insurance. The rate at which policy changes, whether it's tax policy or some other policy, can get really confounding. But I don't know if you managed to see this whole sort of situation around surrender value, because I think finally we have the regulations. They are not as easy as what one was hoping, I think, back in December. But in case you've seen the latest on this and if you'd like to share any thoughts.
No, I have not really gone into the details of it, simply because we currently don't hold any our portfolios, but we are certainly looking at it. So only if I have a clear mind, I like to comment on it.
Financials, how else are you approaching it? What are you still liking in financials? Large banks has been a non-starter of a space for a long time now. What about NBFCs? What else do you like here?
So banks is not something that we particularly like. As I've said plenty of times, that's a sector I'm always wary of. And if you look at the macros in terms of household debt, not so much also the percentage of debt to GDP, but if you look at the servicing ratio for Indian households, the debts that basically your debt service as a percentage of income, that's very high. That's, in fact, I was looking at some number which showed that it is as high as what it was in US just before the 2008 crisis. So that doesn't give a lot of comfort to the lenders. But basically, I always think that lenders growing faster than expected is not always a good thing, because how difficult is it to give away money? It is getting the money back that's a problem. Having said that, because banks went through a very long period of underperformance, they may not underperform so much anymore. We have added some banks in our last rebalance, but we are still significantly underweight, and we are still significantly skewed towards the PSU banks.
Okay. All right, Devina, we will leave it on that note. Thank you very much for joining in. I really appreciate you being with us on the show today. Okay, that's Devina Mehra's view on the market which is actually a little quieter than most mornings. So just about 80 points higher on the Nifty right now, and even the mid-cap space It's about 0.5%, so it's not off to the races today.
Well, that's right. Well, good time to get in our next corporate then. Cummins is the stock that is in focus. Macquarie, well, they are bullish on the stock with an outperform rating. Keep in mind the stock has been buzzing this year. It surged more than 90% odd. So how is business momentum and how the outlook from here on? Well, we're joined by Mr. Ajay Patil, the CFO of Cummins India. Hi, Mr. Patil. Good morning and always good to have you on the show. Let's start off with focus on CPCB4. That's finally seeing the light of day. So how is demand for CPCB4? Given that, for the buyer, the prices go up by close to 40-50%, a rough estimate out there. How is demand on ground and how's the competitive intensity?
Hi, good morning to all of you and the viewers. Always a pleasure to speak with you. I think, yes, the transition is now July 1st of 2024. So we got an additional 1 year, which was granted last year. What we have seen throughout the last fiscal year is a good, interest and demand for CPCB4, while the customer still had a choice of buying the CPCB2 products, which is a function of how we got our products ready on time last year. So we had our products ready as per the original deadline. And we have seen that interest and demand come throughout the year. Now that we eventually transition to the CPCB4 Plus from July 1st, we do expect that the demand momentum to sustain. While always there could be a period of transition, maybe a quarter or so, just because there will be inventory liquidation which would happen this quarter, which might have some impact in the following quarter. But generally, directionally, we don't see any potential impact from a demand perspective. The second point you touched upon was on pricing. Clearly, we are looking at a step up in terms of the product and the technology. And therefore, there is a price impact that we have seen. Our experience of last year is that the price point that we have offered was something which resonated well with the customers from the value that we offer. However, the price discovery for the CPCB4 Plus, now that most players would have their product ready, would be a function of the next 2 to 3 quarters, is how we are assessing the situation.
Mr. Patil, hi, morning. So you're saying that pricing will take some more time to settle. Is that what you're saying?
That is right. That is right. Because as players come, I think the discovery process will play out in the next 2 to 3 quarters.
Sure. Okay. And post the 30th of this month, you can't sell the older products, right?
That is correct.
Okay. Now, Mr. Patil, just talking about demand drivers, what we, globally, one of the big sort of drivers is data centers, right? Could you tell us where are we? I mean, how much is data centers contributing to your revenues right now? Is that going to be the big growth driver with sort of plans afoot for building data centers across the country in a very large and aggressive way? Just give us some color, sir.
Definitely. I think it has emerged as one of the fastest growing segment. And in our assessment, I think it is going to be a multi-year, if not longer, in terms of how this segment is going to play out. I think the underlying rationale for why data center growth is there is well known in terms of how the digitization and the way in which the economy is transforming across multiple sectors. Take it from supply chain, e-commerce, banking, financials, or even the B2C forays that most companies have. Keeping that in mind, what our assessment is that given the need and the on-ground installation that we have, the pace of growth for data center as an end market will continue to be in high double digits, is what we think. At an overall data center level, not necessarily from our revenue perspective. What we have seen, though, in the last couple of years, that it is one of the fastest growing end market for us. And we are well positioned related to the product that we have and the technologies that we offer on the reliability that is demanded. And therefore, I would expect for our revenue composition as well as a generic data center as an end market, it's going to be a multi-year foray.
Okay. More questions on data centers in just a bit, but I just want to, go back to the CPCB norms to understand, so, what we see in the auto sector usually, for instance, whenever there's a transition to the next norm, next stage, BS5, 6, etc., there's a lot of pre-buying. Is that evident in your segment as well? So like April, May, June, has there been additional sales before one moves to the new set of products under the new norms with much higher pricing? And typically the average pricing, how much higher is it as of now? I mean, if a customer is to come to you on July 1st, for a product in the same category in the, with the newer norms? How much is the price increase?
Yeah, definitely the pre-buy phenomena we experienced last year same time. Because as you recollect, the original deadline was July 1st of 2023. And which means the quarter of April to June 23, we had seen an uptick on the pre-buy. I think somewhere towards the end of June, the deadline was extended. And therefore, what we have seen throughout the year is that the demand sustained on the CPCB2, and we continue to sort of position our product and got good response and good sale for CPCB4 in the last fiscal year. Having said, what we are experiencing now is really a phasing out of inventory, I mean, from this quarter perspective, because the pre-buy phenomena has played out in April to June 2023 quarter, as well as throughout the year, is how we are seeing it.
So that's important, because that means that, I mean, we're only looking at quarter to quarter and how we need to analyze the numbers as well. So that means the base quarter already has sort of higher sales because of the pre-buying that happened last year, as you're describing. So that's one. And now there's been inventory liquidation. So to what extent have prices come down? Because, of course, companies are, finally getting rid of inventory. Coming back to that point on competition that Nigel was raising.
I think the pricing is more important to see what the pricing differential is going to be for CPCB4 Plus, because we are talking about a step change in the technology. We are talking about, all electronics engines which are needed to comply to the new emissions. And therefore, in our assessment, and it is a broad range of products we are talking where the emissions are applicable. As we know, the emissions are applicable up to 910 kVA product. And the pricing, depending on which node and application, could be in a very broad range of between 15 to 40%.
All right. Mr. Patil, I wanted to ask you about the distribution segment. I think that's around 10% of your mix?
Not necessarily 10%. The total revenue level, I think it is little more than 10. It's closer to 22 or 25%.
22%. Okay. All right. And that's growing at a faster clip, and I believe that's relatively better margins?
That is correct. I mean, our distribution business, which is parts and services, obviously has a higher return. And it has been experiencing a pretty strong growth as a function of how we are focused on this business over the last 3 to 4 years.
Okay. So what kind of growth, sir, can you guide for this distribution segment of your business, which is parts and services, which, as you say, is around 20% roughly of your business mix? Will it outgrow the business, and what is the pace of growth you're looking at?
I think if you would have looked at the last 2 to 3 years, it has generally grown in excess of 20%.
Yes.
I think what is important to know is that the way our distribution business is positioned, when we sell out the first product, that requires a substantially long period of services and maintenance. And the number two, we being in the country for past 6+ decades, our installed base is very large. And what we are really focusing on as to how do we continue to drive a stronger penetration on the install base that we already have, and mining that install base and converting into some service relationship is really the emphasis that we have been giving. And we continue to hope that we maintain the growth rate.
Okay. All right. Mr. Patil, you have given us a fair idea about business. Now I'm looking for a couple of numbers, and I hope you're going to help me out with that.
Sure.
Exports has been a bit of a sticky region because geopolitical risk, you have supply side issues as well. So in which quarter do you believe exports get back to the normal contribution? I think they came down to high teens, in the last quarter or so because of the pressure that we saw. So by which quarter? Is it a story of quarter 2, quarter 3? And also margins. There were a couple of one-offs in the past quarter, and the street was very excited about that. But then you all clarified on the con call. So a rough margin guidance, and when do exports go back to what we have seen in the past?
I think exports, what we have been very consistently providing the commentary over the last years is really a function of 3 or 4 factors as to why the end market demand was softer. In our assessment, what we believe is that the exports demand is kind of coming to towards the end of its bottom, and we expect it to sort of rebound. Now, really, the most important question is, what is our assessment of rebounding, whether it can rebound in 1 quarter or 2 or 3 quarters? I think that's a difficult one. But if you see the composition of exports that we have between low and horsepower, the high horsepower products, I think on the high horsepower side, we are already seeing some sort of a rebound of demand. Low horsepower, we believe, might take some more time. Hard to tell exactly how much. period it will be. But we do see the exports, slowly rebounding back to traditionally where we have been always maintaining from a revenue profile of our domestic and exports. Number two, you asked me about margins. I think, consistently over the last 2 to 3 years, our emphasis on margin has been there. And what we continue to really look at margins in really a 3 or 4 manner. One, as to how much of pricing we can extract in terms of driving our margin expansion. Number two is with respect to a very disciplined material cost management that we continue to do. And then, of course, the obvious element of how we continue to manage our discretionaries. I think a combination of that has really, helped us maintain a very strong momentum on margin expansion. And our endeavor is to, continue to sort of hold and improve on the level of sorry to come in over there, but that's what we're trying to understand, because the exit margin at the end of FY24 Q4 was at, I think, record levels, 23.5%. But then you said that there are some headwinds with respect to material costs. So now I'm asking full year numbers, revenue growth as well as full year margins. What should be a reasonable expectation to have? I think on the revenue, we are already guided that we will have a double-digit growth rate for this year. That's the guidance we are already provided for. Margin guidance we haven't yet provided for a reason that we continue to see some, uncertainty and volatility with respect to how the commodities. We would have observed that the copper and aluminum has run up, and so is some amount of disruption when it comes to global supply chain. So therefore, we are not guiding on the margin side, but I think on the revenue, we continue to maintain that we'll sustain the double-digit growth momentum.
All right, Mr. Patil, we'll leave it there, sir. Thank you very much for your time. Great to speak with you. Appreciate you joining in with that perspective. Good luck, sir. We take a quick commercial break here. We have Mr. Vikas Gupta of PG Electro joining in to talk about product sales, AC sales, for example, which have been blockbuster in the summer season. We are going to get to him in just a bit after a quick break. Welcome back. The market's looking good. It's up and about and 60 points. I mean, so there is a bit of come off which has happened. We were up 120, so gains sort of cut in half. But the fact is that the market's been doing very, very well over the last couple of days. Insurance company reactions are pretty interesting. Stocks are up 2.6% in HDFC Life. Max Life is up about 2.5% and a few others as well. So, I mean, the reaction could be off of the fact that the May draft norms which had come, that basically said that out of 100 about the surrender, what insurance companies will have to give back as surrender value to insurance companies has to be 82%, that table that we put up. And now the final norms say it is 78%. So, it is not that different. So when the last month the draft regulations came, stocks had sold off. And this could be just like a clearing event with the overhang out. Now we know what is what, because this has been now going on for the last many months now. So that's the insurance sector. We'll try and have insurance companies join us because, I mean, the hope, of course, is this is 100% going to impact VNB margins on the non-par side. But the hope is that insurers will be able to adjust for this based on adjusting commission structures, etc., that they'll be able to offset it. That's the hope. But we'll have to hear it from insurance who we're trying to get. Let's move on to our next corporate right now. PG Electro is the company on our radar. The summer season, of course, has been scorching heat waves, record-breaking heat waves. AC sales, as our colleague Shilpa just told us, she did an industry-wide check. She said that AC sales for this season have been absolutely blockbuster, the best ever in the last 3 or 4 years now. Let's get a perspective from PG Electro Plus on this and more. Vikas Gupta is MD Operations at the company. Vikas, good morning. Great to have you with us here. Thank you very much for your time. So just, on the AC side, if you can tell us what are ACs as a percentage of your revenues? And now we have the season is kind of almost behind us. That it's been one of the best ever. Do you want to sort of give a relook at your full year numbers a little bit higher? Is there an upward drift here, or you'd stick with what you told us in late May?
Good morning. Definitely the AC sales are looking very robust, very strong. In fact, in the first half of calendar year, I think we must be experiencing a growth of upward of 50% as compared to last year. And all our clients have reported a very strong numbers for sales for the first half. In fact, the channel inventory is almost, the position is almost like a stock out kind of position. And the heat wave is still quite intense in the north part of India. So definitely the numbers are looking very good for air conditioners. Air conditioners for the current financial year, we have given a guidance of sales of almost around 1,800 to 1,900 crores out of 3,400 crores, which is almost around 55 to 60% of the sales for us. So AC is looking quite good for the current financial year. And we will not like to revise our guidance of revenue for upward revision this time. We'll be reviewing the position. Please understand, when we released our guidance, it was already in the late May. So we have already factored in the performance of the first quarter of this financial year.
And you're saying that inventory levels across industry are almost, out. There's no real inventory out there.
Yes. So there is always, still there is some pressure for the dispatches from our certain clients for the northern Indian markets. So we are fulfilling those requirements. So definitely the stock position is not very good in the channel right now.
Okay. Sir, can you talk about the expectations from here on margins and also sort of the factors at play, including your input costs, including, of course, how you're expecting pricing to be in the months ahead. So what's the outlook?
We would like to stick to the guidance of the PAT that we have given in our release of around 200 crores. That is what we would like to stick to. Right now, definitely the commodity prices are looking to move and inch up a little bit. We are just keeping a watch on that. And we might have to go for a price increase with our clients in coming quarters if this price pressure continues.
All right, I'm Mr. Gupta. Good morning and good to see you. And let's focus on the TV business. That's going to be another revenue growth driver from here on. The fear is that the TV business itself is in a little bit of overcapacity. I wanted your comment out there. I think Dixon, one of the larger players, they also delivered a degrowth in the past quarter. So that's from where the fear is coming about. I'm reading a sales note and they had mentioned this. Your comment on it? You don't think so?
So Nigel, please understand, we are coming with a very small base.
Yes.
Last year, when we look at our sales for televisions, which was almost around 350,000 TVs that we sold in last year in our parent company of PG Electro. So as we have moved our TV business to a JV company, which is Goodworth Electronics, we are very confident that we should be able to build on those numbers. In fact, we are looking at a revenue of around 600 crores for TVs from our JV company of Goodworth Electronics. We have already onboarded 4 new clients in the current quarter, and we are the kind of order book and the kind of forecast that we have for the upcoming festive season. It is very promising, and we are confident that we should be able to achieve those kind of sales with us.
Okay, that's TV. So broadly, tell us, so in FY25, we are almost, down one quarter. What will the big focus be in terms of the revenue breakup? And going forward, are you eyeing any new segments?
So please understand, definitely the product business will be a major growth driver for our revenue growth in coming financial years, for the current financial year as well. As we have given a guidance of around 3,400 crores for sales in our PG Electro class, Out of that, almost 2,400 crores will be coming from the sales of the products, which is mainly comprising of air conditioners and washing machines. So that is a growth of almost around 43% in that. Definitely, we are eyeing for new industries and new product categories. We are evaluating certain opportunities. And as and when we are able to mature that, we will be sharing the details with you. So definitely, we are looking at a growth pattern to continue for next quite a few financial years.
Can you give us a hint on what new categories?
So it will be basically, we will be trying to see how we can leverage our current manufacturing capabilities. And we will be getting into those products only which align with our current manufacturing infra, where the focus will be to see how we can sweat our assets in a much better way. So basically trying to see how we can use those capabilities.
So ACs, washing machines, TVs, I mean, so adjacent areas, right? So, I mean, you can tell us, Mr. Gupta.
So I would like to not make any speculation here. As and when we are able to have a firm business plan, we will be definitely coming out and making a statement on that.
Now, I want to ask you about the laptop segment. That could be a potential area, right, where you'll start making some inroads. And I was looking at the top players over there. Some of them are coming up with their own manufacturing facilities, or they already have tie-ups. So how do you penetrate that? And I think you have some targets under the PLI scheme as well. So how do you get there? If you could tell us laptops as a percentage of your business, how does it scale up? Or give it an absolute number, a few hundred crores, how does it scale up? Laptops only.
So, Nigel, basically in our PLI scheme for IT hardware, other than laptops, there are other product categories also, like servers and all-in-one computers. And we are discussing with certain clients. Till now, we have not been able to make any substantial progress in that. But definitely, there are certain discussions. I think in coming quarters, we should be able to have some kind of breakthrough on that. And maybe we'll be able to utilize that IT PLI also. So we are keeping our fingers crossed in certain discussions. Let them mature, then we'll be sharing the details.
So you'll have to target the top 5 or 6 players, right? Because they have around 83 to 85% of the market. So you're looking at penetrating and getting a contract from one of these players since they have 85% of the market, right, Mr. Gupta?
So again, I will not like to make any guess on that.
No, otherwise I'll tell you what is the issue, Mr. Gupta, because then if you don't penetrate with them, then how do you get to those numbers? But you're saying you have a plan, so we'll have to take it at that for now. Say, if you want to give us a number on laptops, then it'll be helpful. You know, your growth has been phenomenal in the last few years, but now the street is looking ahead that in the next 3-4 years, what could it be like? So that's why I'm asking you about laptops, which could be another, revenue spinner for you.
So definitely, Nigel, when we enrolled into this IT hardware PLI, definitely this laptop was one big thing which is still there on that horizon. In fact, other than laptops, as I told you, there are certain other product categories also. We are working on that. So give us some time. We'll be making a statement of that in coming time.
Going to be what, next quarter, sir? What's the time frame we can work with on more clarity basically on how you're looking to build up on the IT hardware PLI, the categories, the investments, and then of course, what you're expecting there. When can we get some more clarity on this IT hardware?
Maybe next quarter we should be able to make some statement on that.
And a completely new category also.
So by the way, so the new category that you were speaking about, is it over and above IT hardware?
Yes. So we are talking about some other categories as well. So it is not only the IT hardware. There are certain other allied product categories that we are working on. And as and when we are able to finalize and make a certain business case, we should be making a release on that, press release on that.
Okay. All right. We will leave it on that note. Mr. Gupta, good talking to you. Thanks very much. And we're looking forward to the future conversations to get more perspective on some of the newer lines of business that you would be looking at. Moving on now, we're focusing on BLS International Services, the biggest global players in visa application outsourcing. The stock has had a good run in the last 1 year. The gain is almost 90%. Talk about business momentum in the outlook. We have with us Shikhar Agarwal, Joint MD, BLS International Services. Shikhar, great to have you with us. I want to actually start not with Visa, we'll get to Visa in just a bit, but with your smaller business, which is digital businesses. And it's very interesting to note that you're looking at more tie-ups with banks and looking at offering last mile banking services. Give us some idea of the strategy here, the plan and the scale up. By the end of this year, by how much do you want to scale up this business? And how do the commercials stack up here in terms of profitability for this side of the business?
See, if you see BLS services, the profitability that we did last year, we achieved a bit of 46 crores, which was a 50% growth compared to the previous year. So definitely there has been a major growth in BLS services. The transaction volume, GTV, that we count, we were doing 60,000 crore, in 2023. Last year we closed at 72,000 crore. We are now in 21,000 BC points for different banks across India. We have 100,000 touch points across the length and breadth of the country. We are tying up with more banks, more private sector banks. We've started working for HDFC, Access, different other private sector banks. So we expect major growth to come in from BLS services within this year and next few years.
Okay. In terms of a percentage of the business, how much do you see it scaling up to? 20%, 30% in FY25 and FY26? And what would the margin of this business be compared to the visa services business?
See, this business has already scaled up 50% compared to last year. So we grew. So we definitely, we expect organically, definitely we can grow at least more than 20%. But definitely growth, we want to maintain the momentum, whatever we have achieved in the last few years. We are eyeing some acquisitions as well. We are working with different states right now, Karnataka, UP, Rajasthan. We've already added a few more states, this year. We've started some Aadhaar work also with UIDI. So definitely I expect more increment in revenue and profitability to continue this year. Margins in this business right now are lesser than the visa business. We do EBITDA margins of around 15%, whereas in the visa business, we do EBITDA margins of upwards of 21%. So definitely, as we have increased the margins in the visa business, we expect the margins also in this business as we mature as a company. This is a very new company. We started only 4-5 years back. So we expect margins to increase as we start more services from the existing centers.
Okay, now I'm coming to the bread and butter, the bulk business, Shikhar, and the world seems to be traveling like never before. You look at airports, you look at everybody trying to book a foreign holiday, look at load factors across airlines. So tell us, for this year, you should be doing a lot better than last year, right? Because FY23 versus 24, I think last year top line growth was just about 10-11%. So given that there's so much buoyancy in the global travel space, what should be an expected reasonable top line growth that you'll look at this year?
See, first of all, if you see last year, 2024, the financial year that we ended, we grew 60% at EBITDA level. So we did 325 crores of EBITDA compared to around 200 odd crores of EBITDA that we did the previous year. So there has been a massive growth, compared to last year. Definitely, the revenue growth has been a little less because, we changed certain structures across the world. Some of the partners, the local FMC partners that we were operating with, we took over those countries. So that is the reason, there was a less 10% increase only in revenue growth. But if you see EBITDA has grown by 60%. The margins have also grown. We did 21% of EBITDA margins in the visa business. We expect to grow further, at least by 300-400 basis points. That we expect to grow more in the visa business this year. Definitely, now if you see after COVID that happened 2 years back, travel has become new normal now. People are not only traveling one time in a year, people are traveling multiple times in a year. Everyone, all are traveling to newer geographies, nearby countries, to far off countries. So definitely there has been a major surge in applications across the world. But, we also operate under a limit by the governments that we work with. We have to work according to their capacity. So we have revamped our offices across the world. We recently launched new joint visa center in Delhi. We're going to launch a new center in Mumbai. We have launched a new center in London. We are expanding our capacities. We have won new contracts with a lot of governments, like we recently rolled Portugal government contract in Morocco. We won Slovakia, Global, Italy, Hungary, Czech Republic, Portugal, so Poland. So many new contracts we've been winning. We renewed our existing contracts. So I feel that we are on a good growth trajectory. Whatever numbers we've achieved last year, we expect to maintain that and grow further.
Okay, you said 300 basis points expansion. That's visa business EBITDA margin expansion, right? What was 21 should become around 24 this year. That's what you're saying?
I mean, the target is that 300 upwards of 300 basis point EBITDA expansion that we are seeing. We have seen a major surge in revenue in the applications, whereas cost has become rationalized. As we add more contracts, we can share the offices across the world. So economies of scale will kick in, and that is the reason that we have been talking about from the last 2-3 years, that as in when we win new contracts, we will add into our existing centers. So definitely margins will improve. And that is the same thing we are expecting this year.
Okay, all right. Hi, Shikhar. Good to see you on the show. And it's been a while since we spoke as well. Tell us about that inorganic growth. You briefly mentioned at the start of this interview and you just, sneaked it in and it went past. So what's the size of the acquisition you're looking at? And should we hear about something in this quarter, in the coming quarter? Quantum and timing.
See, the last acquisition in BLS International that we announced of iData, there is a multi-jurisdiction transaction. So there were some pending approvals. Most of them have come in. We expect to complete this transaction most probably within this month. That will be the first major acquisition. We are acquiring the 4th largest regional player, iData, which is working for German government and the Italian government. So we will be having 50% upwards of market share, for the visa business for Germany now globally. And now, as we go, our cash has definitely increased. We will be utilizing this cash in this acquisition. We are also eyeing other acquisitions across the world. Maybe within a few quarters, next 2 quarters, we will be announcing that as well in BLS International. And in BLS e-services as well, the money that we raised with IPO, that IPO happened only 2-3 months, 3-4 months back. The money that we have raised, we are seriously looking at acquisitions in BLS e-services, wherein we aim to finalize those acquisitions also within the next few quarters.
Okay, so more inorganic growth ahead. Looking forward to hearing more on it and more conversations around it as well. Shikhar, good luck with those plans. Thanks for joining in today. All right, with that, let's move back to the market. The market, which is like gradually inching higher, trying to build on the opening green that we had. 70 points up on the Nifty right now. Mid-cap index doing a shade better. Let's go back to Mitesh. Mitesh, so it's a more steady morning. What about calls now? Any new ideas?
Yeah. It's a good morning, actually. It's holding out well at just around the 23,400 mark. Berger Paints has come on the radar. It's been rising for the last few days. That's a buy with a stop at 495 and a target of 520 can be looked at. And Godrej Properties is just making a fresh swing high. Buy here with a stop at 2960 and a target of around 3100.
Okay, all right, Mitesh, thanks very much for that. So those are some trading ideas coming through. We'll take a break. We are back. Manisha will join in with the focus on commodity markets. Stay tuned.
గౌరవ్ నీలు కోనిదాల పవన్ కళ్యాణ్ గారు
నేను కొణిదెల పవన్ కళ్యాణ్ అనే నేను శాసనం ద్వారా నిర్మితమైన భారత రాజ్యాంగం పట్ల నిజమైన విశ్వాసం విధేయత చూపుతానని భారతదేశ సార్వభౌమాధికారాన్ని
गौरवनीय Nara Lokesh Garu.
Welcome back. Some interesting moves in the market. Thought of pointing them out to you. Paytm is surging 7.5% higher on Paytm. There is a Sobha that's been higher, right from the opening levels, 6.5% up over there. And Dilip Buildcon. Actually, some stocks are picking up some life now. Dilip Buildcon is almost 10% higher. There is Paras Defense, which is about 5.5% up. So the mid cap and the small cap arena continues to buzz around. That's the short message, short point. Mid cap index up about 0.6% as of now. Well, that's the equity space. Let's go across to Manisha and figure out what's the latest in the commodity markets. She's with us in the studio now. Manisha, you're looking at oil?
I am, yes, and that's because there is some pressure coming in for the prices. As was anticipated, this is a knee-jerk reaction after the US Fed meeting there. And 1 rate cut this year and 4 in the next year is what the street is looking at. But it also is about the inflation data, which is lesser than what the street was anticipating. And that in some sense is a supportive way there. And is the reason you haven't seen a complete crash in the prices, but just about 0.25% of a decline coming in there. But there are other various factors which are weighing on crude oil prices right now. One, of course, is the ongoing ceasefire talks in Gaza. I mean, we've been hearing about that for the last 3 months now, but nothing has happened. But the point being that the both sides are talking on that. The other is the US inventories, where we have seen an increase instead of a decline as the street was anticipating, and that too by 3.7 million barrels. But not just for crude. When you look at gasoline and distillate stocks, there has been a build-up in inventories in that as well, and that's weighing on to markets. The other is the IEA data and report that came in yesterday, which has cut demand growth forecast for this year to less than 1 million barrels per day. Remember, this is quite contrary to OPEC putting it out to 2.2 million barrels per day. So that is the range that we're looking at, but there is demand growth nonetheless for this year as well, and that in some sense could be supportive going forward. Interesting reports then, and Morgan Stanley for one says that by the third quarter, the global deficit estimate is at 1.2 million, which will take the prices to 86 on the higher side within the third quarter. There also is a report from Citi which says that there is deficit concerns for the near term, but for the next year, they've put the Brent crude price forecast to $60 a barrel as well. So it's all over the place the way that you see the crude oil prices and the fundamentals working in. But very interestingly, the EIA also has come out with a detailed report for India, which is the third largest importer and consumer in the world. And EIA says that they are looking at stronger demand going forward. India actually could lead the demand globally as we get into the second half of this year and for 2025 as well. The number that they're putting is in sense of 1.3 million barrels per day until 2030. So if I can get you the India demand chart in front of you, where we stand right now, that was in 2023, we were at 5.4 million barrels per day. Now, EIA says that by 2030, we will be looking at a higher demand at around 6.7 million barrels per day. So when it comes to India, the demand is only going higher until 2030 there, even as EIA talks about world demand peaking in 2029. If you look at the refining capacity, well, there as well, the number is almost doubling there. Also, India demand contribution, most of it comes in from diesel and petrol to the tune of 38 and 25%. And with urbanization, infrastructure, more cars being bought and population increase, that number is also expected to grow. EIA actually says that there is expected a 40% increase in India's car fleet by 2030. So huge numbers coming in, and the fact that the Indian crude oil demand is not going away in Ajifi.
All right. Manisha, thanks very much for that. So that's oil demand peak in 2029, but growing as of now. Small, very low single-digit growth, but growing. Manisha, thanks very much. Well, Sobha is the next is a stock we are focusing on. Sonal is here with details on this one. Sonal.
Thank you for that. Sobha is in focus because they've announced a plan to raise funds, and this is via rights issue to the tune of 2,000 crore rupees. The board approved that rights issue yesterday. The issue price is set at 1,651 rupees a share. This was 20% lower than yesterday's closing market price as well. Now, in terms of more details, the proposed equity issuance is of 12.1 million shares, and this could lead to a post-issue equity dilution valuation of 11.3%. In terms of the payment, there will be a payment on application which will be around 825.5 rupees a share, which is half the amount, and the rest can be paid in 2 installments as per the company and not late more than that. The process, according to the company, should be completed on or before 31st December 2025, and the entitlement ratio here is 6:47. The street believes that this money could be used for growth capital. They are talking about a lot of expansions as well, and that's why this positive reaction on the stock today.
Okay, all right, got it. Thanks, Sonal, for that. Sobha definitely in focus and in green. Now let's go across to Vivek, because that L&T Finance block trade did happen. Vivek, run us through the details.
Well, that's right. The block did happen, and along with that, it also appears as though the overhang which was there has also now passed by. So, along the lines of what we reported in the morning, BC affiliates, that is Bain Capital affiliates, which is BC Asia Investment, BC Asia Growth, as well as BNP Paribas. All of these funds likely sold in today's block deal. Remember, it happened in the block window itself. Around 3.5% of the total equity changed hands. So all three of these holders in the company now no longer have any stake. So it's a clean out trade, and which is why we say that the overhang is now done. The deal size, was slightly above the range of 1,500 crores. So now the overhang is done, and which is why you're seeing the stock trade in the green in today's session.
Well, nearly 4.5% higher right now. Vivek, thank you very much for that. Well, it's time for a quick commercial break here. On the other side, our special segment, it's the economy. Lata will get chatting with Jahangir Aziz of JP Morgan as the Fed holds rates and inflation cools down. Not just here, there in the US, but here in India as well. So all of that coming up with this special conversation.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18.
Welcome to It's the Economy. The US Fed did not cut rates as expected, but has sprung a surprise in terms of reducing the number of cuts forecast this year to 1 from 3 earlier. US bond yields didn't rise much because they are still elated by the lower than expected May inflation number, CPI number, at 3.3 versus estimates of 3.4. More important, the Indian inflation number has also come in lower than expected, with core inflation going down to 3%. So what's the way forward on US economy, US yields and the Indian economy? I have with me Jahangir Aziz, the chief economist for emerging markets at JP Morgan. Jahangir, I'm really grateful for you for staying up for us. So let me begin first with the Fed. It admitted that inflation fall is making progress, but it has reduced the number of expected cuts. What are your key takeaways from what you heard from Powell?
Last Friday, when the non-farm payroll surprised on the upside, we moved also to 1 cut for this year. And we had 4 cuts for 2025. So we broadly kept the number of cuts. We just pushed it back to 1 cut for 2024. and that was beginning just after the elections in November. I think what the inflation numbers today, and I think it was reflected in the tone of Powell, is that the probability that if this continues, then maybe September opens up. There's a probability of that, and maybe instead of one cut, you could get two cuts. But if you look at both the SEP and even our own forecast, we still have broadly 9 cuts till the end of 2026. So I think that the key takeaway is that we are still playing around with the start of the easing cycle. No one is talking about removing the total number of cuts. So I think that's the good news. It's just that it is, when does it start? Does it start in September? Do we get 2 cuts in 24? Or does it start in November or December and we get 1 cut in 24? So that, I think that's basically where the debate is.
Okay, but let me come to the yield. The US 10-year yield, will it continue to remain higher despite of this promise of cut? Because fiscal spending and the fiscal deficit is still very high.
You are asking questions that are very difficult to answer at this point. And the reason being that, look, we have probably about July where the Fed is going to be important. Once the Republican convention takes place in July, we go into a completely different world where the market and analysts and everybody else is going to start focus on the US elections. So fiscal spending doesn't really matter for 2024 as much as it matters for 2025. And I think that the US election is going to dominate not only the views about US assets, but almost certainly is going to start dominating EM and EM assets, including India. So I think that, in terms of the answering to your question, will fiscal policy dominate? Well, it depends on what will the elections results suggest. In the case of Biden, we have a certain idea of what the fiscal policy will look like. It's going to be more tightening in 2025. But if Trump comes back in 2.0, then I think that's a completely different ball game as far as fiscal is concerned. But it's not just fiscal, Lata. It is immigration. It is the fact that we don't know what actually will materialize. He hasn't spoken about policies, but he's talked about 60% tariffs on China and 10% tariffs on the rest of the world. Now, these are major shifts that will take place in economic policy. And let's not forget that he can also change the geopolitics in comparison to what the Biden administration's view was about geopolitics. So those are very big events. And I don't think any one of us are grappling with it at this point in time. We are still focused on the Fed. But my point is that it's probably up to July 15th when the Republican convention takes place. And that's about it. And then we'll all focus on the US elections.
Okay. Yeah, I know this looks scary. The whole geopolitics and tariffs can change. But let me come back to the Fed. As the Fed signals higher for longer, do you think that there can be any more financial accidents, like, commercial real estate loans of regional banks flopping?
I mean, there are always problems. If you want to look for concerns, there are always concerns. But look, we have gone through 4+, 4.5+ almost interest rate for a long period of time. And we've seen that, when there have been problems, which was back in, 23, when we had the regional banks crisis, the Fed did come up with a set of liquidity supporting instruments. If you move away from yields per se, and you look at the broader financial conditions index, if you look at the equity market, if you look at spreads, whether it's high yielders or investment grade yielder spread, or even GBI EM spreads over the 10-year rate, these are at its lowest. So broader financial conditions are not only easy, they are easing as we speak, even though the 10-year yield is probably telling you a different story till about yesterday. Today, after the inflation print, is telling you a different story. So I think, even if you do get a start of an easing cycle I don't think that the 10-year is going to reflect a lot of that, because a lot of it has to be priced in already in the 10-year.
Okay. Well, let me come to India now. Now, the inflation, even we got lower than expected inflation. So now the inflation differential between India and the US is shrinking. US core is at 3.3 and India's headline is 4.7, but core is only 3%. So what are the implications of this narrowing inflation differential for yields and currency?
I think that, apart from the usual implication, what it does to real effective exchange rates, which RBI seems to have been targeting implicitly, even though it will deny that it's targeting real effective exchange rate, it's kept it completely stable. I think that's about it. That's about the only direct implication. But I think indirect implication is, what does a 3.1, 3.2 core inflation tell you about the state of the economy, as opposed to what CSO's growth data or national accounts data is telling you about the state of the economy? It's telling you two completely different stories. If you truly take the inflation numbers at its face value, then for the last 7 months, core inflation has been declining. It's the lowest we have seen since this index was started in 2012. And most economists will look at this number and say, not only is there excess capacity in India, that excess capacity is actually widening, not narrowing. That's not what the CSO's numbers are telling you, at least not on the face of it. But if I come to tell you, Lata, that there is this economy which last year nominal GDP grew at 9.5% and CPI grew at 5.5%, you wouldn't immediately say that real growth in that economy was 8%, would you? But yet we have a CSO which tells me that nominal GDP is at 9.5%, we have inflation at 5.5%, and because of the very peculiar way in which CSO deflates service sector, nominal service sector, and parts of manufacturing with WPI, we get this very strange situation where you have an economy that seemingly is growing at 8% by the numbers, and then you have inflation telling you, no. Not only is there excess capacity is widening. If you even dig even a little deeper into CSO's own national account statistics, it will tell you that services inflation was 1.9%. Services inflation is doctors' fees, school tuition fees, telecom fees, restaurant charges. You use that on a daily basis. You tell me whether you truly believe that services inflation was 1.9% last year. But that's not the most egregious part. Yes. The most egregious part is, by CSO's own data, manufacturing inflation was minus 1.7% last year. We worry about deflation in China. By CSO's data, we should be worried about manufacturing deflation in India. So I think that it is very difficult to look at these inflation numbers and growth numbers and the inside of the granularity that is the basis of the GDP numbers, that the national accounts, and have a very clear sense of the direction of policy or direction of the economy, and therefore the direction of policies. I mean, you're asking me a question about, I'm guessing, is that what is the direction of RBI policy? What is it? How can RBI even make a decision if that's the kind of messaging it is getting from growth numbers and from inflation numbers?
The WPI part, the fall in subsidies last year actually distorted the GDP. So I take your point about the GDP numbers being exaggerated.
I'm not even going there. Yeah. Even without going there, even if you stick to GVA, we have to have it has to pass a smell test. How can manufacturing inflation be minus 1.7% in India in fiscal year 24? That's what the growth numbers are telling me.
Okay. That's a WPI high-based distortion. Okay, that's not the topic for today. As you expected, my next question, when do you expect Reserve Bank to cut rates?
Right. So the DNA of every policymaker is being confronted with this kind of data to err on the side of caution. If you don't give me clarity in the data, I'm going to err on the side. Fed is doing exactly the same thing. They're not getting clarity on inflation. They're not getting clarity from the labor market. Therefore, they're erring on the side of caution and holding. I think that Reserve Bank will do exactly that. That they will err on the side of caution and they will turn conservative, whether it is appropriate or not. Which is, I think, what you intend by that question. Is it appropriate to cut? Of course, it's appropriate to cut. If you have core inflation 3.1% and you have rates that are real rates about 200 basis points above that, of course you have to cut. But you can't cut because there is no clarity in the data. So my sense is that until and unless the Fed cuts and gives them that space, which they can then say, well, financial stability is not going to get impaired, I don't think the RBI cuts. But this is not because, macroeconomic fundamentals is telling them they shouldn't cut. It is just that there is very little clarity in the data for them to say, just like the Fed, that we are okay cutting rates.
It might interest you that the former statistician T.C. Anand has written about the WPI issue even today in the Mint. But anyway, let's come back to growth. What's your growth forecast for India in the current year and maybe next? Also, how do you see the rupee panning out?
We're looking at in a growth rate about, look, all of us do exactly the same thing. We just try to forecast what the CSO will print rather than what the growth rate is going to be. And just by looking at global commodity prices and how that is going to impact WPI, growth is going to arithmetically slow, even though there is no change in the economic momentum in the economy. And so we are probably headed towards somewhere around 6-ish or even below 6-ish if WPI starts rising because global commodity prices rising. That's almost an arithmetically given to us. So that's what we're looking at. Rupee, I think, is hostage to the Fed policy. And it is hostage to the Fed policy and the very small spread we have over the Fed. And I think as long as that policy, as long as the Fed doesn't cut and the dollar does not weaken by itself, I think the rupee remains under stress. And again, every emerging market country is under stress because of that. Look at what's happening to Brazilian real or to the Mexican peso. At least we are not in that space, at least.
No, you're not. Thank you very much, Jahangir, for staying up for us and for your very interesting comments. We have to do how the WPI is distorting the GDP as a separate show. But Indian rupee is safe, obviously, because the flows are excellent. On that note, we wrap up on Bazaar Chartbusters up next.
PM.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
The Indian market continues to do well, starts strong. The Nifty and the Sensex as well as the mid-cap index all open at record highs, led by strong global cues following the Federal Reserve's policy decision. Realty and IT stocks lead gains, though off the morning highs, the stocks are a little low.
Nestle climbs after the board approves the continuation of royalty payment at 4.5% to its parent company for 5 years. Brokerage CLSC upgrades the stock to outperform and raises its target price to 2,798 rupees per share.
Sobha zooms nearly 7% after the board approves rights issue to raise up to 2,000 crore rupees.
L&T Finance surges close to around 4% after a large block deal where 3.5% equity changed hands via the block window. Bain Capital and BNP Paribas are likely to have sold stake.
Life insurance stocks, HDFC Life and Max Life surge after the Insurance Regulatory and Development Authority of India introduces revised surrender value norms for life insurance policies.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always is Mangala Malu. Well, as we speak, the markets continue to hold well in the green. We've come off a little bit from the top. But good times, Mangala. I think the Nifty Bank, that's the one that's not able to, put its weight behind the Nifty. Otherwise, we would have been much higher. As we speak, I think the Nifty Bank is on the verge of moving into the red. So let's keep an eye on that one.
It is not sustaining above 50,000. Over the last 8 sessions, 4 times it hit intraday 50,000. If you include today, then it'll be 5 times out of 9. But it's closed above 50,000 just once. So that is one of the problem pockets for the market. The Nifty too struggling to close above that 23,400 mark. So let's see where it goes from here. But the fact that it's not falling too much and the mid caps are doing well should make portfolio investors feel a lot better as well. Let's welcome Sachidanand, the taker of Trade Bulls, for a quick check on the market. Sachi, we have seen some supply at higher levels after a big rally that we've seen already. It is weekly options expiry today. Where do you think the indices go from here?
Good morning, Nigel, and good morning, Mangalam. I think clearly, if you look at today's data, the opening is evident that Nifty is facing some resistance at 23,500 kind of a mark. And on the lower side, there's a good evidence that we may not close this particular session below the 23,350 mark. So I think we may see the Nifty, resting within this particular band. Clearly, Nifty Bank is under pressure, and even there, I think there's a good chance that we may see the oscillation somewhere close to around 49,800 to 50,000 kind of a zone itself. So I think both the indices may remain range bound, and Nifty may unfold its next rally once it starts confidently, trending above that 23,500 cluster resistance. So I think for the day, it looks like this particular resistance may hold for the day, and we may see Nifty expiring within this particular range of 23,300 to 20,450.
Okay, all right. Hi, Sachi. Good to see you in. What about individual stocks? What are you tracking?
Nigel, clearly the focus is on IT stocks, and even here right now, what we have recommended to our clients is building long positions in Coforge. The stock has already displayed some signs of reversals. Even on the 60-minute chart, we have a kind of a bullish flag formation exhibiting a target somewhere close to around 54.60. So we are recommending our clients to build fresh long positions here. One can keep a trailing stop loss somewhere close to around 52.40 on the lower side, and the mark of 5,300 has just been breached. So we may see a good strong momentum rally right towards 54.60. The other stock which is being on my radar is Lalpath Labs. Even here, if you look at the last 4 trading sessions, we did see some unwinding pressure here, but the kind of data which has been exhibiting here, it is trending well above its 5-day exponential moving average. We are expecting that there could be a turnaround in this particular counter, and we may see a rally towards 29.60 eventually on a positional basis, and that's why we are recommending building long positions here, keeping a stop loss somewhere close to around 28.10.
Right. Just apologies, if we could Repeat the first stock that you said.
It's Coforge Limited. We are
Coforge, okay, got it.
expecting to move towards 5460.
All right, take that point. Thank you, Sachi, for joining in, giving us your views on stocks as well as the entire market setup right now. Though what we're seeing is a pickup in all these IT names. Some of the mid-cap IT stocks doing extremely well. We saw a big move in Oracle yesterday. That continues today as well. That's moved to the high point of trade. And alongside that, we are seeing some traction come by in other mid-cap IT names as well. Coforge, one of them, as Sachi pointed out, was at the high point of trade too. Take a short break. Come back, get you more on the housing finance space and the affordable housing space itself. We have Varun Gupta, who's the director at Ashiana Housing, to discuss the government's PM Awas Yojana scheme and much more. Stay tuned.
Celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Well, frontline indices doing what they are, with the mid-caps doing a lot better. Let's talk about the affordable housing space now. And this, as the new cabinet expanded the Pradhan Mantri Awas Yojana, PMAY as we know it, to build 3 crore additional houses at a cost of about 4 lakh crore rupees. And also, the affordable housing finance scheme, or to increase finances towards affordable housing, both rural and urban, is something that there is a fair amount of thrust on. So to discuss this in further detail, we are joined by Varun Gupta, who's the director at affordable housing builder Ashiana Housing. Thanks a lot, Varun, for joining in. The first question obviously is, what proportion of sales come in from affordable housing for you? How is it that you define affordable housing versus what the definition under PMAY is? And what proportion did you get from PMAY 1, as it were?
Nigel, I'm sorry, I thought we were discussing our financial year results when I came in, and I would.
We will speak about that as well.
I'll just specify. We are not really a affordable housing developer.
Right.
We do mid-market homes within, let's say, a 40 lakh to a 2.5 crore bracket, with an average about unit size of about 1 crore now, and we have lots of units in the 40, 50, 60 lakh bracket. Most of it actually does not qualify for PMAY in the earlier definition. Part of it did. I'm hoping that they will increase the income slabs and the home loan quantum that they were allowing for this, given inflation over the last 5, 6 years, 7 years since the last scheme was announced. We had lots of units qualifying for those for PMAY 6, 7 years ago. But I think with inflation and general increase in pricing across markets and sizing also across markets, this is something we don't qualify for much.
Okay, all right. Hi, Varun. Good morning and welcome to the show. This is Nigel on this side. Let's focus on business then. For the past fiscal, you've done roughly around 1,800 crores. And I think in volume terms, it's around 26 lakh square feet. For FY25, how's it looking? Things have looked up. You've shown some good growth. Should we brace for a number of around 2,500 crores for this year? And what could it be in terms of volumes?
So hi, Nigel. I would say we should cross 2,000 crores this year, and there should be roughly the similar kind of volume growth. I don't over this period. So we would expect if we cross 2,000 crores, it will be a good year. We ramped up significantly over the last 3 years. We have more than tripled in sales volume, and now continuing as long as we continue to get double-digit growth, I think we'll be more than happy.
So if you are looking at double-digit growth with the same volumes, you're expecting realizations to increase by about 10%. Is that correct?
Yeah. So no, through a mix of it. So I would put it this way. I don't know whether we will have realization improvements or volume improvements. We have targeted sales volume of value of more than 2,000 crores. It will be driven by a mix of volume and pricing, depending on what projects do better and which markets do better. So I think, but we are more than confident to get 2,000 crores plus this year.
Okay, we asked that because we saw a little more than 30% increase in your realizations last year from FY23 to FY24. And
Yes.
over the last 4 years, if I look at it, it's more than doubled a little. So just wanted to know, what is the quantum at which prices can increase after a dramatic increase that we've seen already?
So a large part of the dramatic increase also for us, Nigel, has been change in mix of our markets and mix of our projects, where Gurgaon has started kicking in substantially more revenues than it was earlier, which is seen as a market price growth, and also it is priced in base prices also more than our general other markets. And also senior living has become a larger category for us, and senior living also we price higher. And that thing is probably played out significantly. Now increases in our pricing will be driven more by general increase in prices across the board. So therefore, muted price growth as compared to earlier price growths. But we will continue to see increasing prices because the real estate markets across are supply constrained. And till they remain supply constrained, I would expect prices to increase.
Okay, all right, Varun. So that was Mangalam. This is Nigel back again. Since you briefly mentioned senior living, the segment, how much does it contribute in terms of volumes or value? If you could help us out with that.
So it's contributing between 15 to 20% of the company right now in value terms, and we expect this to increase to a third to 40% over the next few years, as about 40% of our stock now is senior living. We are over investing in this segment because we expect this segment to do better, improving demand, improving margins, increased value for the customers by giving a much more differentiated product that services their needs. So all of that put together, I think senior living will get a larger focus from us.
Okay, you talked about 15% ROE as a target. This year you hit that number?
So we track ROEs on a two basis, on a reported basis. The reported basis, we have not hit the target of 15% ROE. But on an economic basis where we track, because reported profits come in as per deliveries, on an economic basis, we have more than crossed the threshold of 15% ROE. And I think we seem to be on good trajectory to also improve reported ROEs going forward.
Right. What about, land acquisition? I remember you were looking for some land in Mumbai. Just wanted to know whether you've earmarked some amount for that. If yes, how much? And also the land in Kolkata and Milakpur, both were under sort of court orders. What's the update there?
So from Kolkata, we have exited and we are from the transaction, and there we are looking just to get our money back from the counterparties there. And in Milakpur, the land remains under legal disputes, and we are looking to resolve that as we go ahead. But I don't have any sort of light to give on that when it can happen. At the same time, we have earmarked amounts for different parcels in different places, but it's flexible depending on where we get transactions. We are actively looking at the Mumbai external areas of Mumbai for senior living. We have been happy with the launch of Ashana Amod in Talegaon, which is servicing both Mumbai and Pune, and looking for one more project in that corridor. And we continue to look for more senior living projects across the country in the future.
And the proposal to co-invest with IFC, what are the identified projects here, and what projects of yours are currently with them?
So we have we did three projects with IFC. One is Ashiana Daksh in Jaipur, which is more or less completed, and we have returned with returns most of the capital back there. And we have Ashiana Amara in Gurgaon and Ashiana Vatsalya in Chennai, where IFC has co-invested with us. And the second platform, we have working on a few projects. Nothing has been identified yet, because we typically look to deploy in new projects with them. So as in when we pick up a project, they will invest in themselves. We have term sheets and we are in advanced negotiations in projects, but nothing concrete as yet.
All right. Thank you, Varun, for joining in, giving us an outlook on the year ahead as it looks like to you right now. Over 2,000 crores on the top line, led by a mix of both realization and volume growth, with an increased focus of revenue coming in from senior living. We'll await some more details on the expansion that you're planning in all parts of the business that you operate in. Thank you for joining in. The stock up around 1.5% as we speak, has seen a decent traction over the last couple of months or so. Take a short break, come back, get you more on all right. Before we take that short break, let's get you a special segment where we get you ideas for profit coming in from our colleagues at Money Control Pro. As always, Khushbu Rai Gupta today joins in.
Today's idea for profit is Home First Finance Company. Home First is a technology-driven housing finance company that operates in the affordable segment, targeting first-time home buyers. If we look at the earnings, Home First has been a consistent performer despite intense competition in the sector. The company started the year on a strong note as the asset under management crossed rupees 10,000 crore mark, backed by buoyant demand from Tier 2 and 3 cities and strong policy thrust. Now coming to the recent developments related to the housing boost by the government. In the first cabinet meeting, the newly elected government maintained its earlier stance that affordable housing sector will be a key focus area, and it was decided in the meeting that 3 crore more houses will be built under Pradhan Mantri Awas Yojana. We believe that Home First will stand to benefit given the robust loan growth and stable asset quality. If we look at the recent performance, the stock has rallied by more than 10% after the news and is currently trading at 2.7 times FY26 book value. Investors should consider buying the stock on big corrections with a long-term view.
Thanks a lot for that, Khushbu. Well, time to slip into a short break. We'll get to you more on markets and on stock-specific action on the other side. Stay with us.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
కొణిదెల పవన్ కళ్యాణ్ అనే నేను ఆంధ్రప్రదేశ్ రాష్ట్ర మంత్రిగా నా పరిశీలనకు వచ్చిన లేదా నాకు తెలియవచ్చిన ఏ విషయాన్ని నా కర్తవ్యాలను సక్రమంగా నిర్వహించేందుకు అవసరమైన మేరకు తప్ప ప్రత్యక్షంగా గాని పరోక్షంగా గాని ఏ వ్యక్తికి లేదా వ్యక్తులకి
Welcome back. Well, a few stocks actually are coming off the high point of the day. Intellect Design, well, that stock has slipped a little bit. It was up close to around 5%, so that's come off a little bit. But on the flip side, you have stocks like Piramal Enterprises as well as Siemens Mangalam that have moved higher. So I think we should get both those two up. But Yash is waiting for us. Let's go.
Yash is indeed waiting for us. This has to do with the surrender value. I mean, he's been talking about that for a while now. Seems like the final word on that has come in from the insurance regulators. And Yash is joining in with the details. Yash.
Well, Mangalam, as you rightly pointed out, the final word as far as surrender value regulations are concerned, and let me tell you, life insurance companies, particularly two life insurance companies, HDFC Life and Max Life Insurance, are definitely not going to like these elevated surrender values. Why did I say particularly these two companies? Because both of them have high exposure to the non-participating product portfolio, which is highly vulnerable to surrenders. Now, what the regulator has said is that surrender value, which is the special surrender value, needs to be increased. Remember, just last month, IRDAI had sent a proposal to various life insurance companies, talking about how it expects special surrender value to go up, what should be the mechanism, what should be the formula. And after that, life insurance companies had said that this would take special surrender value and hence the total surrender value to really elevated levels. They had, sought various exemptions from the regulator to balance it out in their interest as well. Well, I would say most of those exemptions sought have not been accepted, except for one small thing, which was that life insurance companies had asked, for a 100 basis point spread when it comes to the usage of GSEC yield, which is 7% for the calculation of special surrender value. What has been given in turn is not 100 basis points, but just 50 basis points. Now, if you put that, formula of 7% as GSEC yield plus 50 basis points, the surrender value that you get, by putting all the values of a life insurance policy is about 7,823 rupees on a 10,000 rupees premium paid, which is 78%. Which is what the elevated levels that we are talking about. Remember, the first proposal had come in December 2023, where the regulator had spoken about taking the surrender value to 83% of the premium received. Of course, there was a lot of resistance, after which the regulator reduced the guaranteed surrender value to just 30%. Insurance companies were happy. They were very relieved with that. But then after that, the regulator started talking about increasing the special surrender value. The proposal which went through suggested 83% of the premium received. After that, again, resistance came through, and finally we are here today with the final regulations, which talks about 78% of the premium received will have to be repaid to policyholders in terms of special surrender value. Insurance companies are talking about 100-200 basis points impact on their VNB margins, simply because the expenses will increase. But, you never know that there could be a few long-term implications also. We'll have to wait and watch out for those if it impacts their persistency, asset liability. So all those will unfold in longer term. But for now, the immediate impact on margins of about 100-200 basis points.
Thanks, Yash, for that. Well, let's move on then. The IT sector is one of the top gaining sectors today and is in focus on the back of a number of triggers. Hormo's always on top of it. He joins us to fill us in with those reasons and why the stocks are moving. Hormo's, take it away.
Well, multiple triggers, as you just mentioned, for IT stocks, and you know what happened with the Fed last night. So that is one of the key triggers as well, opening the door for more rate cuts in 2025. Now, also the Nasdaq, in response to that, hitting a record high overnight, and also Oracle Corp, after its earnings, the very strong reaction in the stock there as well. Now, IT as a sector has also been in focus because of the recent deal wins that the companies had. Wipro just won a $500 million deal. HCL Tech yesterday signed a $278 million deal as well. But Nasdaq hitting a record high has not necessarily reflected or rubbed off on the Indian IT sector, because the Nifty IT as of yesterday's close was still down 3% for the year compared to Nasdaq's, which is almost 18% up so far in 2024. And the management commentary also has not shown any improvement compared to what we had seen earlier. There were some companies at the Morgan Stanley India Investment Forum and TCS said that there is no change in the demand outlook, but margins may have a positive bias in FY25. LTIMindtree said that there is positive momentum in the near term, but their margin aspiration that they have of 17 to 18% may get delayed further. And while Infosys was possibly the only one that has some positive commentary coming in, that while there is still status quo on discretionary demand, but the deal pipeline is strong. The deals that they have won in the recent quarters is getting converted to revenue, and they are confident of their Project Maximus also contributing to margins in FY25. So in response to that, Morgan Stanley is overweight on both TCS and Infosys, while it is equal weight on LTIMindtree. But all in all, positive news for the IT sector when it comes to the global cues as of now. We'll see how this moves forward as well.
All right, take that point. Horma's a decent move is what we're seeing on the IT space. But Citi's chief global economist, Nathan Sheets, has said that inflation data in the US is improving, but 1 month's data may not change the Fed's forecast much. On India, he does believe that policy continuity will be a positive. So let's hear him out.
previously, the soft CPI number was very important. And if we get a couple more months of inflation, like we saw this morning, the Fed's going to be cutting rates. And my sense is that that very well may happen as soon as September. I think the broad view is that some of the hotter inflation we had earlier in the year is breaking. And given that, I think that the expectation, as I mentioned, is that the Fed is going to be data-driven, and that's going to open the door for more rate cuts. We are seeing some improvement in inflation that was not fully factored into those projections. Broadly speaking, global investors are aware of and comfortable with the investment regime and know how to invest in India. We've certainly seen that over the last several years. And then, as you point out, I think the question is, on the margins, are policies going to be changing in some way because it's a coalition government that might have an effect on either the ability to invest or the attractiveness of investment in India. And I think those are the open questions. But for now, based on where the equity market is, I think investors are giving Modi the benefit of the doubt.
All right, so that's about the markets in India. Just keep an eye out on a couple of cash market stocks. One of them is Kaya. It was locked in 20% upper circuit yesterday. Continues to do well today, and with the same amount of volume uptick, that stock is up another 20% in the first hour of trade itself. So we'll watch out for all of this, but the rest of the market at the top of your screen. From Nigel and me, thank you for watching.
లేదా వెల్లడించనని దైవ సాక్షిగా ప్రమాణం చేస్తున్నాను. ఉండబోతున్నారనేటువంటి ఒకనొక కాంక్షతో చూస్తున్నటువంటి సందర్భం.
हमारे माननीय यशस्वी प्रधानमंत्री, मुद्दतों में होती है शख्सियत उनके जैसे, अंदाज ये बयान से हो इतिहास हो जाता है. हमें गर्व है कि हम वो पीढ़ी है जिसने इतिहास बनते देखा है. गौरवनीय हमारे भारत के यशस्वी प्रधानमंत्री श्री नरेंद्र दामोदर दास मोदी जी को हम सब के तरफ से अभिनंदन और स्वागत करते हैं.
నారా చంద్రబాబు నాయుడు అనే నేను విశ్వాసం విధేయత చూపుతానని, భారతదేశ సార్వభౌమాధికారాన్ని సమగ్రతను కాపాడుతానని
Good morning, hello and welcome to Trading Hour. We are here with you at 11 a.m. I'm Surabhi Upadhyay. With me as always is Hormis Patakia. And what we're seeing is some consolidation, though the bias continues to be positive. But yes, this is a market that's not running off to the races today. Mid-caps are outperforming. And you're seeing a very diverse set of stocks move higher even as we speak. There's Divi's, there's Wipro, there's L&T, there's Nestle. So as you can see, top contributors to the Nifty. It's stocks from all kinds of different sectors today. So we've got lots to talk about. We'll kick it off right away. Harmas, good morning.
Good morning, Surbhi, and it's a good morning indeed. But the Nifty following a familiar script, right? Making a new high and then cooling off slightly from those levels. And it's the start of a new weekly expiry. It's the weekly expiry today for the Nifty. So we'll keep an eye out on that as well. Now 23,460 or for 23,480, somewhere the high that the Nifty made this morning in terms of opening. And since then, it has cooled off around 100 points from those levels. But as you highlighted, a lot of stocks that are doing well and from a very broad gamut as well. Divi's is the top gainer on the Nifty, 3.5% higher is Divi's. HDFC Life is the other top gainer on the index. Yash did a very detailed analysis on why the insurance companies are in focus today. So that as well, those stocks did very well in today's trading session. What is also doing well though is IT, and we'll talk about that as the show goes on. Meanwhile, these are visuals on your screen. The visuals of Arunachal Pradesh Chief Minister Pema Khandu and his Council of Ministers who are taking oath currently in Arunachal Pradesh there. Remember the BJP taking another majority there in the state assembly polls. So Pema Khandu there being sworn in as Chief Minister for the third consecutive term. Now the other stocks that we were mentioning is IT, that is doing well for various reasons, multiple triggers behind it. We'll talk about that as the show goes on. And the others among those that are doing well is L&T, there is Hindalco. So almost every other sector, barring FMCG, is doing well in today's session as well. FMCG was an underperformer yesterday, continues to remain an underperformer today as well. But we'll kick off trading hour with some market opinion coming in. Sumit Jain from Ask Investment Managers is joining in now to discuss market fundamentals and his top sectoral bets as well. Sumit, good morning. Thanks a lot for joining in. To start off with possibly the sector of the day, that is IT, because management commentary has not changed whatsoever from where it was at the end of the previous quarter. And right now, with the hope coming in from the Fed that, okay, there will be rate cuts maybe in the second half of the year and more rate cuts in 2025. But demand, at least discretionary demand, has not picked up whatsoever. Do you believe that, okay, let's wait it out, let's bet on this sector, wait it out for a quarter or two, and once the cycle turns, it'll start to pay off?
Thank you, Armas. Thank you for having me here. So, see, in case of IT especially, things have not turned out the way most of the managements have anticipated. Clearly, growth rates for some time, as you rightly said, have disappointed. But these businesses keep responding to how things play out globally. Not only with respect to global macros, how GDP growth rates there play out, but also with respect to how interest rates are expected to behave. But these are, I would say, more shorter term behavior. We really believe that those businesses which characteristically can't grow at a pretty decent pace for a significantly longer period of time actually would be more of trade rather than more of compounding opportunities. So in this case, in specific, we would like to believe that even if we see a bounce for some time because of these factors, we would think that there are better opportunities to play in markets rather than being focused on businesses which possibly should grow even if things kind of normalize, probably at about low single digit, rather high single digit or low double digit. In the short term, we still don't anticipate growth rates to be of the number that I'm talking about. In fact, this year is going to be a year where growth rates possibly should be mid-single digit. This year, for most of these businesses, margin maintenance or possibly improvement in margins, that will be a priority rather than focusing as much on growth. They are continuing to see leakages on business, right? So we still need to watch out for as to how trends shape up for these businesses before we kind of take a longer term call. But having said that, we would rather like to believe that there are some businesses within this pack which are more specialized, something like ER&D or those kind of businesses where growth rates possibly can be of a number which is significantly higher for a length of time because trades or rather businesses are possibly benefiting out of the long-term trends that are playing out. So that's the area where we would focus on rather than focusing on businesses which are really run the business kind of scenario rather than change the business.
Okay, that's an outlook on IT. Sumit, overall, I mean, I was going through your note, and I think you're expecting a slightly more modest FY25 in terms of overall, market returns compared to what we've seen in the past. So just give us the portfolio construct right now. You still seem to be quite optimistic on capex as a theme. So just tell us, biggest overweights, number 2, number 3.
Sure. Thank you, Surbi. So see, fundamentally, we are more positive on domestic story as compared to more kind of businesses which are rather internationally driven or globally linked. So to that extent, if you look at our portfolios, they would be more focused on how things play out on the domestic macro front. So we actually are very positive on, we continue to remain rather very positive on investment related businesses because now we are seeing this continuity, the confidence there has increased further, at least for some more time. So to that extent, there is an expectation that we would see significantly higher acceleration in many of these areas, which are, let's say, defense, railways, green energy, energy transition. Many of these areas should see continued growth or rather acceleration of growth. Second area where we believe growth rates will accelerate and have not been the case for some time though, is more related to small ticket consumer discretionary. We really believe that rural distress, which has been happening at the current point in time, has had impact on growth rates of many of these businesses. And with, IMD also kind of predicting that La Nina conditions should prevail this year, should mean that rainfall should be either normal or above normal. And with focus on bottom of pyramid as well, we should start to see rural recovery, which actually has been a problem area. So quite a few businesses there with respect to consumer discretionary, even autos, those should start to do well. While auto on the two-wheeler side, especially, things have been all right. And we really believe that that is one area where we should see continued growth.
Sumit, you spoke about sectors that will do well. Let me ask you about a sector that you believe is facing some challenges, and that is specialty chemicals. The entire sector has been a massive underperformer over the last 12 to 18 months. And you also believe that there are still pricing challenges that persist when it comes to China and other uncertainties as well. Now, you have reduced your exposure to this sector in the recent past, but do you believe that there is a cycle turn coming anytime soon? And if that happens, would you want to have a relook at this sector?
So it's not that we have reduced our exposure now, we have been reducing it for a while. Our view on specialty chemical is, if you look at the impact on these businesses, they have actually got impacted because of significant destocking that many of, or rather this industry was witnessing. Also, China came in a big way. So there was huge supply that came up. At the current juncture, possibly destocking effect should be behind. Many of the management are now talking of at least normalized volume numbers, but pricing remains a concern. So we will have to clearly watch out for as to how pricing really plays out, because if pricing doesn't play out, possibly ROC of these businesses would be lower than what they used to be in the past. And that would mean that value creation possibly would be kind of lower as compared to what we have seen in the past. So to that extent, pricing behavior remains a key monitorable there for us to really take a call there.
Okay. Where do you stand on financial, Sumit? And do you have a view on life insurers? Do they make it to your portfolios?
So we have limited exposure towards life insurance businesses in general. Coming to the financials, we believe that banks per se will continue to face some challenges. While credit growth should remain buoyant, pressure on NIMs should continue, at least more so for banks, because deposit growth remains a challenge. Having said that, NBFCs is one area where we are seeing growth rates continuing, and there is a high chance that if interest rates go down, we may start to see margin expansion as well. And those NBFCs which actually understand their customer really well, who can control their gross NPA, and they can kind of show a decent growth and yet report a decent ROE, I think those are NBFCs where we would like to focus more on within financials as compared to banks.
Interesting, Sumit. Thanks a lot for joining in and sharing your opinions on the markets and specific sectors as well. Some more visuals coming in from New Delhi there. G. Kishan Reddy taking charge of the coal ministry at Shastri Bhavan. Remember, G. Kishan Reddy was previously the MOS home in the earlier government, and now he's taking charge as the Ministry of Coal and Mining as well there. G. Kishan Reddy taking charge, MP from Secunderabad for the second time is G. Kishan Reddy. He was sworn in along with the other Council of Ministers as well. He won by a margin of close to 60,000 votes in Secunderabad this time, around 50,000 votes actually. He won by 60,000 in 2019. So, two-time MP. He was earlier Minister of State for Home. He handled multiple other ministries in the previous government as well, tourism, Northeast. So, he handled multiple portfolios, and now he's taking charge as the Minister of Coal and Mines. There, visuals coming in from Shastri Bhavan in New Delhi. Time for a short break here on Trading Hour. Up next, we'll discuss what's buzzing in the commodity space. Manisha Gupta joins us on the other side.
గౌరవ్ నీలు కోనిదాల పవన్ కళ్యాణ్ గారు
నేను కొణిదెల పవన్ కళ్యాణ్ అనే నేను శాసనం ద్వారా నిర్మితమైన భారత రాజ్యాంగం పట్ల నిజమైన విశ్వాసం విధేయత చూపుతానని భారతదేశ సార్వభౌమాధికారాన్ని
గౌరవనీయ నారా లోకేష్ గారు
Okay, markets are flattening out even at the Nifty level. Bank Nifty anyway has not had a great morning, absolutely flat. Yeah, that's the index for you. Let's take a look at what's happening in commodities now. We have Manisha joining in as always. Manisha, what do you have your eye on?
Well, I'm looking at the silver prices. Almost all the commodities actually have had a knee-jerk reaction towards on the lower side after the US Fed meeting yesterday. But silver clearly seems to be hit the most. This is the fourth straight week that we have seen a decline come in for the silver prices, trading now just at about $29 an ounce. Well, we have seen prices decline by almost 11% from that 11-year highs that the silver prices was trading by the end of May. Remember, in the Indian markets, we almost hit that 1 lakh rupee a kg mark. The all-time high has been at around 96,000 rupees. But from those kind of levels, we've seen nearly a 10,000 rupees come off. The prices did gain on the back of one, strength in demand there. There was a lot of portfolio diversification happening. There was an expectation of a Fed rate cut as well. The safe haven buying was happening into the markets. But all of that seems to have changed a bit at this point in time. There are various factors which are having pressure right now. One is, of course, the Chinese buying, which has declined for the month of May. In the month of May, the Central Bank of China has not bought any more gold or silver. That's weighing on both of these precious metal prices. The other is that the US also has imposed sanctions on China's solar cells, so that seems to be putting some pressure. And then you have had the base metal prices decline as well. Remember, silver is half precious and half base metal. That's impacting the markets. And then the dollar has strengthened as well, making all of these dollar-denominated commodities also slightly under pressure. The street does believe that if we break that important $29 per ounce mark, then we perhaps are heading towards 27. But most banks and brokerages still believe that we could be closing this year higher at 32. There are targets of 35, 38 for the next year as well. So this perhaps could be a near-term correction.
Well, I guess profits were more precious than precious metals themselves, as it chose to take some profits off the table there when it comes to silver. Manisha, thanks a lot for that. And the correction in silver is also showing up in names like Hindustan Zinc. Now, Nigel has been highlighting for a while now that it's the only pure play listed silver player in the country is Hindustan Zinc, and that stock is also trading around 2% lower in today's trading session. They're 674.5. But remember, stocks like Hindustan Zinc, Vedanta, almost all the metal stocks have seen a very sharp outperformance in the last month and a half. And there you can see the 17% higher in a month is Hindustan Zinc as well. So some bit of profit booking coming in terms of precious metals and the stocks linked to those as well. But time for a short break here on Trading Hour. On the other side, we'll discuss market technicals. Apurva Sheth of Samco Securities joins us on the other side.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of marketing.
Here on Trading Hour, and the market continues to remain where it was at the start of the show now. The Nifty now cooling off slightly, now below 23,400 now is the Nifty. 23,380 is where the index stands. And I'll take a look at some of the stocks that are buzzing in today's trading session. One of them is L&T Finance, and that is surging on the back of a block deal that took place earlier. Vivek is here to tell us more. Vivek.
That's right. So L&T Finance Holding, there was a bit of an overhang regarding almost 3.5% of total equity that was being held by Bain Capital affiliates, and also a few funds that they were actually having P notes. So today, what's actually happened is that 3.5% of total equity, this was sold by Bain Capital. The two affiliates, BC Asia Investment as well as BC Asia Growth Investment, and the P notes, that were being held under the name of BNP Paribas Financial SNC. So total 3.5% equity. So now, it's a total clean out trade. No more overhang exists for sale from these particular investors, and the total deal size was a little over 1,500 crore. On the back of the overhang going away, you're seeing the stock gain after this particular deal happened in the block window, given the fact that the discount that was given to yesterday's close was less than 1%.
Okay, got it. So that's L&T Finance in focus. Vivek, thanks very much for that. Let's also talk about Sobha. Now, Sobha has been rising in trade right from the morning, and this after the board approved the rights issue. This would be looking at raising close to 2,000 crore rupees. We have Sonal joining in with all the details over here. Sonal, fill us in.
That's right. Sobha is surging in trade, and it is on the back of the 2,000 crore rupee fundraise that they have announced. This is via rights issue. The company says that the issue price is set at 1,651 rupees a share, and remember, it's around 20% discount to yesterday's closing market price as well. The proposed equity issuance is of 12.1 million shares, and this could lead to a post-issue equity dilution of 11.3%. Now, all of this is assuming that it is fully subscribed as well. In terms of payment, on application, the investors have to pay 825 and a half rupees a share. This is at the time of application, and the remainder will be an equal amount which can be paid in 2 installments, not more than that. And this entire process of payment has to be completed by 31st December 2025, on or before that particular period. The entitlement ratio is at 6:47, and the street believes that this is the capital that they can use for growth. They've been talking about expansion, they've been talking about growth, and this money can be used for that purpose, and that's why the buoyancy of the stock today.
Buoyancy in the stock, indeed. The entire real estate space is buzzing in over the last few days. Now, Sonal, thanks a lot for that. And Sobha announcing a rights issue. Prestige is doing the IPO of its hospitality division. So, plenty of action happening in the real estate space as well. But the action that is happening today is in the IT sector. Now, remember, the IT sector has been an underperformer through this week. It saw a bout of profit booking on Monday, and then ahead of the Fed decision has been extremely flat all over Tuesday and Wednesday. But today the sector is up, the IT index is up over 1%, and that is because of multiple factors. The first and the most important one being the Fed rate decision that was announced overnight. Interest rates were left unchanged, but the commentary from the Fed that there might be rate cuts that will take place in the second half of 2024 and more in the 2025 as well. So that has given some bit of buoyancy to the IT sector. In response to that, the Nasdaq hit a record high overnight as well. And Oracle, in terms of stock-specific activity as well, Oracle saw very strong quarterly performance. The stock surged in US trading yesterday, and that is reflecting on the India unit as well. Oracle Financial is at a record high in today's trading session. So good going, multiple factors there. The sector has been in focus also because of the deal wins that they have done recently. Wipro won a $500 million deal. HCL Tech won a $280 million deal yesterday in Germany, and Morgan Stanley also had written on this that whether discretionary demand is not picking up, but then such kind of deal wins gives them confidence that okay, HCL Tech, like companies like these will meet their guidance for FY25 that they have given. But as I mentioned, Nasdaq hit a record high last night, but that has not rubbed off on the Nifty IT index at all, because until closing of yesterday, the IT index was down 3% for the year. The Nasdaq is up 17% for the year. So it's been an underperformer when it in comparison to the Nasdaq. And as I was mentioning, the commentary from the managements have not changed compared to the previous quarters. Now, a lot of these managements spoke to Morgan Stanley at their India Investment Forum in 2024. TCS mentioned that there is no change to the demand outlook so far, but they said that margins may see a positive surprise in FY25, and the management itself has said that FY25 will be a better year compared to FY24. Now, LTIMindtree also spoke to Morgan Stanley. They said that there is positive momentum in the near term, but their EBIT margin aspiration that they have of around 17 to 18% might get delayed further. So that is something that LTIMindtree said. The only bit of positive commentary that is coming in is from Infosys. And they said that while there is status quo on discretionary demand, that remains, but the deal pipeline is strong in other segments. The recent deal wins that they have won in previous quarters have started to convert into revenue. So that is a positive. And they are also confident that the Project Maximus that they have they are confident that that will contribute to their margins in FY25. Now, in response to this, Morgan Stanley is overweight on both Infosys and TCS and has an equal weight rating on LTIMindtree. So demand may not have picked up on ground, but there is some hope coming in from the Federal Reserve as well.
Okay, well, let's see. Yeah, indeed, it's one of the worst performing sectors. Actually, IT's performed even worse than FMCG or banks, for that matter. For the year as a whole now, with the latest numbers, if you pull that together, IT is actually down 1.5%. So yeah, it's failed to start, and commentary from companies isn't sounding any better, at least as of now. But some of course, defensive buying has come in after the budget, and so we're seeing some green on the screen today as well. Okay, let's take the conversation forward. Apurva Sheth from Samco Securities is with us for a quick technical check on the market. Apurva, hi, good to have you on the show. So just tell us, what are you thinking? I mean, the market's getting more range-bound today, looking at the bigger indices. What's the advice and what are the individual stocks that you're eyeing?
Hi, thank you for inviting me on the show. So markets had hit a new high on the exit polls when the exit polls were announced, and that new high level has not been crossed decisively. Markets have been chugging along that levels. So I think so far market is consolidating, and it looks like it will continue for a few days. So the strategy on the Nifty is to buy on dips around levels of 23,200 with a stop loss at 23,000 and for a targets of 23,500 till the expiry. On stock specific front, we have a buy call on IEX. So IEX has been trading in a range of 120 to 160 for quite some time, and this week it has managed to cross this level and it is currently trading around 180. So the strategy over here would be to buy on dips around levels of 170 with a stop at 160, and the targets for IEX would be around 200 to 220 in the short to medium term. Apart from this, there's another stock which is HDFC Bank, which is a very short-term trade. So HDFC Bank is trading around 1580 levels, and we would like to recommend a buy with a stop at 1550 for a target of 1675 and 1700.
A buy call on HDFC Bank, that's interesting, as the stock is up around 8% in the last month. But Apurva, since you spoke of HDFC Bank, I had to ask you about the Nifty Bank as well. That index has been struggling to cross that mark of 50,000. It's significantly away from its record high as well. But the first hurdle remains that 50,000 mark. Does it have enough strength, courtesy that HDFC Bank might contribute to the upside going forward? Can it manage to sustain above that 50,000 mark? And if it does so, what are the levels that you are seeing on the index?
So that is one major resistance that we are seeing on Bank Nifty, and I feel that if Nifty consolidates, then Bank Nifty is something which can push the markets slightly higher. So that's where we are looking that there could be some strength over there. So on the higher side, 51,000 and 50,500. These two are major resistance points for Bank Nifty.
All right, Apurva, thanks a lot for joining in and sharing your views on the index and on specific stocks as well. That was Apurva Sheth of Samco Securities, one of his buy calls being HDFC Bank, the other one being IEX. Now, earlier, we spoke to Devina Mehra, the founder and chairperson and MD of First Global, to discuss fundamentals, the top sectoral picks and more. Listen to what she had to say.
Regardless of the election results, the markets and economy have a logic of their own, and that trajectory I do not see being changed on a 1-2 year basis. Just as in company management, the way you manage a company, you have to balance the short term and the long term. So also it's exactly the same thing for a government, that you have to manage the short term, but you also have to look for the long term. Two areas which you really have to focus on is health and education, which actually ties into employment, which ties into consumption, because private consumption growth has been very poor. And to have even employable people, you need the health and education spending. If you look at the high tax paying companies, who are they? PSUs, banks and financials, and MNCs primarily in consumer goods. Now, giving them a tax break is not going to give a boost to any investments.
Devina Mehra there with her views on the markets. Time for a short break here on Trading Hour. On the other side, we find out why stocks like SBI Life and Nestle are buzzing in today's trading session. Stay tuned. Back on the other side.
And more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years ago.
Welcome back. Well, what have the bigger institutions, domestic institutions, been doing in the month of May? What are they buying? What are they selling? I know, Harmaz, you've been looking at a lot of the research around this. So what's in, what's out?
It's a very interesting observation that Novama has made in what the fund houses did in the month of May. Now, the biggest takeaway here is that ahead of the Lok Sabha election results, which were announced earlier this month, most of the fund houses booked profits in PSUs, barring an SBI or say a HUDCO as well. We'll talk about HUDCO in a bit, but that was the bigger takeaway. Most of the PSUs saw some profit booking, and there was barring SBI ahead of the Lok Sabha election results. What they also did is that they increased their positions in Vodafone Idea ahead of after their fundraise and the FPO and all of that, but subsequently they reduced their positions in Indus Towers. So that is another observation there. In terms of the small caps, well, they added positions in Suzlon. Of course, Suzlon has been seen a lot of analyst coverage initiations recently. They added HUDCO as well. So that is an outlier in terms of the PSUs along with SBI. And they have also cut positions in Hindustan Copper and Whirlpool. Now, Hindustan Copper also saw a big surge over the last few months or so, and so some profit booking seeing there. And mind you, they have not exited all of these positions, but they have reduced their exposure to these stocks. So that is one thing, that is a caveat that needs to be kept in mind. What are those PSUs where they have reduced their positions? HAL is one of them, PNB is the other one, BEL. Take a look at their returns until the 31st of May, up 80%, up 35%, up 60%. And after the election results were announced, all of these had a very sharp correction. Now they are recovering from those, and they are still down on a month-to-date basis. They are down 1%, 1.5%, 2%. Some of the other PSUs where they booked profits, Bharat Dynamics, BEML, Hindustan Copper, as we just mentioned. Bharat Dynamics almost doubled in the recent, almost 12 months. If you take a 12-month period, the stock has, I guess, almost tripled as Bharat Dynamics. So BEML another 55%, Hindustan Copper 30%. All of these stocks are still down 9-10% on a month-to-date basis. So some reduction in exposure that the fund houses have done when it comes to these kind of PSUs. Now, what have they done in the month of May when it comes to the large caps? Of course, a lot of these large caps that we just highlighted were PSUs, but in terms of additions, they've bet on HDFC Bank, they've bet on Infosys, they've bet on Kotak Mahindra Bank. Kotak Mahindra Bank also had some regulatory issues last month, so they've bet on that. HUL is one they have bet on, and SBI, of course, they've bet on that as well. One of the outlier PSUs. When it comes to the mid caps, I just highlighted Suzlon and Vodafone Idea, but other than that, Persistent Systems, Oracle Financial, that is at a record high in today's trading session as well. And an interesting addition here is Star Health Insurance. Now, Star Health has been an underperformer when it comes to its other insurance peers. It's still trading below its IPO price. So that is an addition that fund houses have made. When it comes to reduction in their mid cap portfolio, Thermax is one that they've reduced portfolio. That they've added Persistent Systems, they've reduced Coforge. So that is a trade that they have done. Indus Towers is one, Solar Industries is one, and also, of course, some small cap exits that they have made. So, and Aptus Value is one. When it comes to the small cap additions, there you can see small cap reductions as well. GMR, Urban.
Harmaz, I think right now, sorry to interrupt. I think the coal minister is now speaking. He's just taken charge, as we know. I think he's addressing the press. Let's just see if we can listen in.
इससे पूर्व पीयूष गोयल जी, प्रधानमंत्री जी के मार्गदर्शन पर इस डिपार्टमेंट को आज एक इम्पोर्टेंस लाने के लिए प्रयास किया है। आप सब लोगों को मालूम है 10 साल पहले भारत में कोल शॉर्टेज होता था। कोल शॉर्टेज के कारण बिजली का भी शॉर्टेज होता था। हर गांव में, हर प्रांत में किसान हो, इंडस्ट्री हो, डोमेस्टिक हो, बहुत तकलीफ लेते थे पावर शॉर्टेज के कारण। आज मोदी जी के नेतृत्व में इस 10 साल में आज हर जगह सफिशिएंट पावर अवेलेबल है, वो खेती का हो, इंडस्ट्री का हो, कमर्शियल हो, डोमेस्टिक हो। इसके कारण कोयला मिनिस्ट्री है, पहला कोल शॉर्टेज के कारण पावर सफिशिएंट मिलता नहीं था। आज पावर हो, एनर्जी हो, कोयला मिनिस्ट्री के द्वारा होता है। मोदी जी के नेतृत्व में जो संकल्प पत्र हम घोषणा किया है, आने वाले इस 5 साल में घोषणा पत्र में जो जनता को जो अश्योरेंस हम दिए थे मोदी जी के नेतृत्व में, हम पूरा उस संकल्प पत्र को इस 5 साल में पूरा करेंगे। और एक बात मैं हमारे सीनियर अधिकारियों से, अदर ऑफिशियल्स के साथ आज ब्रीफिंग भी लेने वाला हूं। आज से लगातार हमारा अधिकारियों के मार्गदर्शन में मोदी जी के आदेश पर पूरा डिसीजंस जो भी लेना है हम भारत को एक शक्तिशाली भारत बनाने में हमारा कोयला मिनिस्ट्री और माइंस मिनिस्ट्री आगे रहेंगे।
G. Kishan Reddy there taking charge as the coals and minings minister there in New Delhi. But moving on then, the other space that is buzzing in today's session is life insurance, and these stocks are surging after the Insurance Regulatory and Development Authority of India introduced revised surrender value norms. Yash is here with the details. Yash, this surrender value saga just does not seem to end.
Well, that's correct, Hormaz. And today's reaction is quite contrary to the kind of impact which this move would have. The move is largely negative for all life insurance companies, particularly Max Financial Services and HDFC Life. But the stocks, as you see, are surging on your screen. That's largely because, the uncertainty is now out of the way in terms of what would happen with respect to surrender value. Would it be higher? Would it be lower? Second thing, these stocks have been on historical low valuations at this point of time. And third, now with this uncertainty going out, it is essentially, for these life insurance companies to decide how to mitigate the kind of impact which they would see. Now, what is the move exactly? The regulator, that is IRDAI, has spoken about and finalized regulations about increasing special surrender value. Last week, there was a proposal which was sent from the regulator to various life insurance companies, where the regulator spoke about how it intends to see the special surrender value increasing, the formula and the way it sees it increasing. The life insurance companies had sought various exemptions, relaxations with respect to that IRDAI proposal. Something that the regulator did to those representations is that only gave a very, very small relaxation and did not budge to most of those relaxations which were sought. And the relaxation which was given was, with respect to the GSEC yield interest rate, which would be used to calculate the special surrender value. An additional spread of about 50 basis points was given as relaxation to these life insurance companies. Now, as per the prescribed formula from the regulator, on a 10,000 rupees premium which has been paid by a policy holder, with the formula given by IRDAI, he will be getting about 7,823 rupees as special surrender value, when the policy is surrendered. This is about 78% of the premium which the life insurance company gets. The first proposal spoke about surrender value being at 83%, then it was brought down to 30%, then IRDAI spoke about increasing special surrender value and taking it back to 82%, and now the final regulation has been frozen at 78%, which is still a very big negative. And as I said, especially for HDFC Life and Max Financial Services, because these two companies have higher exposure to the non-participating portfolio, which is most vulnerable to policy surrenders.
Okay, all right, got it. Thanks very much, Yash, for the details over there. It does seem that the norms are not as easy peasy as perhaps what was earlier anticipated. Well, let's move on and take a look at Nestle now. Nestle is in focus. The board has approved to keep the royalty license fee rate unchanged at 4.5%. Of course, this, we remember, was something that was voted down by shareholders a couple of weeks ago. We have Mangalam joining in with the details. So, no change, Mangalam?
No change, and that was expected, and as a result of which the stock saw a sentimental pop. Though from the highs, it has seen a bit of a decline, and that's in line with the way we've seen profit booking in all the other FMCG names as well. Importantly, though, another trigger for Nestle would be a CLSA note that has come in this morning, where they've said that F&B is actually the best way to play rural boost, as home and personal care does face greater urban challenges. In fact, CLSA says that during FY5 and FY8, along with FY16 to FY18, where there were periods of increased spends by the government on various schemes, Nestle and Britannia saw revenue growth which were either equal or above median as against the other home and personal care space players. There is high competitive intensity as well out there, which makes it a less attractive bet versus F&B players itself. But, the belief now is that the street expects the policy continuity to be underway and not much stops for boosting consumption, so to say. So as a result of which, all the other FMCG stocks have also seen a bit of a decline. But if there are some stops given, F&B would be a better play, and as a result of which, CLSA has upgraded Nestle to outperform. They've increased the target price to just under 2,800 rupees, while they maintain their buy rating on Varun Beverages and maintain outperform rating on both ITC as well as Britannia.
Mangalam, thanks a lot for that update. Nestle India off the highs of the day, but still trading with gains of close to 1%. And then CLSA, as Mangalam was highlighting, upgraded the stock and raised its price target there as well. But moving on, then Citi's global chief economist Nathan Sheets says that inflation data in the United States is improving, but 1 month's data may not change the Fed's forecast a great deal. On India, he believes policy continuity will be a positive. Listen in.
Previously, the soft CPI number was very important. And if we get a couple more months of inflation, like we saw this morning, the Fed's going to be cutting rates. And my sense is that that very well may happen as soon as September. I think the broad view is that some of the hotter inflation we had earlier in the year is breaking. And given that, I think that the expectation, as I mentioned, is that the Fed is going to be data-driven, and that's going to open the door for more rate cuts. We are seeing some improvement in inflation that was not fully factored into those projections. Broadly speaking, global investors are aware of and comfortable with the investment regime and know how to invest in India. We've certainly seen that over the last several years. And then, as you point out, I think the question is, on the margins, are policies going to be changing in some way because it's a coalition government that might have an effect on either the ability to invest or the attractiveness of investment in India? And I think those are the open questions. But for now, based on where the equity market is, I think investors are giving Modi the benefit of the doubt.
All right, that's a view from Citi on both the Fed's trajectory as well as Modi 3.0. We'll take a break on that note, come back on the other side, and then we decode how the banking sector has performed in the quarter gone by.
All about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Welcome back. Well, let's now focus on the big cues that we got from Wall Street. You just heard Nathan Sheets react to the Fed meeting that took place yesterday as well. Now, the U.S. Central Bank has decided to keep interest rates steady at the current range of 5.25 to 5.5%. But it has revised the outlook for rate cuts to just 1 in 2024 and then 4 rate cuts instead of 3 in the next year. That's 2025. CNBC's Steve Leisman has a roundup of all the latest from the Fed.
It was a dovish morning followed by what you might call a hawkish afternoon for markets. And you can see the entire drama playing out in bold relief in the bond market, where yields plunged on the 2-year note with that better than expected inflation report this morning. Then they bounced higher with a more hawkish Fed statement and projections than the market had expected. Though bonds did hold on to some of their gains, and stocks seemed to, well, ignore at least a good part of the what the Fed did today. Forecasts for the Fed this year for the funds rate went from 3 in March down to 1 right now for the full year. They did raise the neutral rate, suggesting they think they're less restrictive than they were before. They see higher inflation this year and a modest nod in the statement to the recent inflation progress that we've seen. Fed Chair Powell was maybe a bit more dovish than the statement and the projections. He suggested 1 or 2 cuts were still possible beginning in September and that he welcomed today's inflation report. But he suggested Fed officials remain cautious because of that spike in inflation we had in the first quarter.
What we've been getting is good progress on inflation with growth at a good level and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that. But so far, they haven't had to. And, that's why we're watching so carefully for signs of weakness.
The September Fed funds futures tells the story, too. Exuberance about rate cuts after the inflation report lifted that probability 73% from 55 before CPI. Traders then dialed back their enthusiasm and bid it down to 61% after the Fed meeting. I think you can think of the difference between the Fed and the markets as one between optimists and pessimists about inflation. The Fed, maybe a bit like the groundhog that saw its shadow in the winter and crawled back into their hole, declared 6 more months of high inflation. The market, they've seen the sun break out from behind the clouds during the last 2 inflation reports, and they're ready for summer, the beach, and rate cuts when they come back in September.
Steve Leisman there of CNBC. But Fed Chair Jerome Powell, the center of attraction all through the week, he also spoke about how the Fed needed more good data on inflation in order to have the confidence to cut interest rates and have no hikes on the table.
The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. We think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but no one has that as their base case.
All right, so that's a view coming in on the Fed's latest moves. Let's listen in to some expert views on the Federal Reserve's latest decision and their outlook on the Fed future rate moves.
Either 1 or 2 rate cuts would be appropriate, but basically that's only 25 basis points we're talking about. So that means it's the same monetary policy, steady as she goes. It means that close to the election, the Federal Reserve will probably sit tight. It's very, very rare that they would change just before November. And so the next rate cut may well be in December, right after the election.
I think the market will have been responding to better news and inflation this morning. But of course, the summary of economic projections, that was revised since March, not since the May meeting. So that's relative to what they thought 3 months ago. But still, I think it was reasonable to say that, of the officials in March, maybe on average they go up 25 basis points at the end of the year, not 50. So this would be a hawkish result in the summary of economic projections. And the problem is that if the Fed doesn't project a September rate cut on average, then it's much harder to implement one. So, of course, we're just playing with small numbers here and decimal points. But overall, the market, which was reacting very well to this morning's CPI report, will be somewhat disappointed the Federal Reserve now sees only one rate cut this year.
Only one rate cut this year. We'll see if that changes in the next 2 to 3 weeks. But time for a short break here on Trading Hour. Up next, we decode how the banking sector performed in the quarter gone by. Stay tuned. We'll be right back.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. You're with us on Trading Hour, and as promised, now let's get to the banking sector's report card before we take your leave. The banking sector continues to outperform quarter after quarter. Abhishek is here with how the sector fared in Q4 in our special segment Fin Street. Check this out, and of course, thank you very much for watching. We'll take the action forward right after this.
Well, FY24 has seen the highest profitability in the banking sector, coming in at rupees 3.2 lakh crore, which is up nearly 14% on a YOY basis. Now, this number is after accounting for HDFC Twins merger. Please note that. So, profit growth for the private banks is not comparable YOY due to this merger of HDFC Limited with HDFC Bank. Treasury gains and robust fee income actually aided in profitability in Q4 FY24. Asset quality continued to improve, hence lower credit costs also aided in the earnings momentum for the banking sector. FY24 profit growth for PSU banks was about 7.9% YOY, while that of private banks was 19.4% YOY, which includes the HDFC Twins merger. Let's now look at the Q4 FY24 performance of the banking sector. PSU banks have had an amazing Q4 FY24. Sequentially, their net interest income growth was at 4.7%, which compares to 3.4% recorded by their peers, that is private banks. Dhanlaxmi Bank is the only lender to see YOY and quarter-on-quarter decline in its NII. Operating profits of the PSU banks have grown at a robust 16.7% sequentially versus 12.9% sequential growth that you saw for private banks. Overall, operating profit growth of the banking sector was at 14.7% quarter-on-quarter. Now, 9 out of 42 lenders saw operating profit decline YOY and quarter-on-quarter. For 50% of these lenders, the employee expenses weighed on the operating profits. Now, Dhanlaxmi Bank again is the only lender to report an an operating loss in Q4 FY24. PAT growth has been robust for PSU banks. PSU banks, the profitability has grown more than 40% sequentially versus 6% sequential growth that has come in for private banks. Overall, banking sector's PAT growth was about 20.3% sequentially. 4 lenders saw their PAT decline both YOY and quarter-on-quarter, which includes AU Small Finance Bank, Bandhan Bank, Karnataka Bank as well as South Indian Bank. Lowest profitability or the return on asset was seen for Bandhan Bank. Now let's look at the asset quality. Slippages increased massively for PSU banks compared to that of private banks. Slippages increased 15.5% quarter-on-quarter for PSU banks, which was largely led by agri as well as MSME segment. So slippages declined more than 4% quarter-on-quarter for the private banks. Overall, slippages increased more than 5% sequentially for the banking sector. Now asset quality overall for the banking sector is perhaps one of the best that you are seeing in last 9 to 10 years or even more. Interestingly, the net NPA ratio difference between PSU banks and private banks is now down to 27 basis points only, which is perhaps the lowest ever. In FY18, this gap was around 552 basis points. Now, lenders whose risk-weight assets have outpaced the growth of loan growth that they saw in the balance sheet YOY and quarter-on-quarter are Bank of Maharashtra, Canara Bank, CSB Bank, Equita Small Finance Bank, IDFC Bank, Karur Vysya Bank, Kotak Bank and Ujjivan Small Finance Bank. Now, SDFC Bank's numbers are not comparable YOY, but sequentially, that is quarter-on-quarter, its RWA growth has outpaced the loan growth. Outlook in terms of what analysts and lenders have mentioned is that loan growth rate will decline in FY25 when compared to the growth in FY24. Net interest margin can come under pressure in the near term owing to their high deposit rates. Some banks can see treasury gains owing to decline in 10-year GSEC, especially in Q1 FY25. Credit cost as well as asset quality will rise owing to normalization of them in FY25. Recovery and upgrades in FY25 will not be as high as they were seen in the last couple of years. Microfinance loans and small ticket unsecured loans have started to see defaults or rise in slippages.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
కొణిదెల పవన్ కళ్యాణ్ అనే నేను ఆంధ్రప్రదేశ్ రాష్ట్ర మంత్రిగా నా పరిశీలనకు వచ్చిన లేదా నాకు తెలియవచ్చిన ఏ విషయాన్ని నా కర్తవ్యాలను సక్రమంగా నిర్వహించేందుకు అవసరమైన మేరకు తప్ప ప్రత్యక్షంగా గాని పరోక్షంగా గాని ఏ వ్యక్తికి లేదా వ్యక్తులకి తెలియపరచనని లేదా వెల్లడించనని దైవ సాక్షిగా ప్రమాణం చేస్తున్నాను. ఉండబోతున్నారనేటువంటి ఒక కాంక్షతో చూస్తున్నటువంటి సందర్భం.
हमारे माननीय यशस्वी प्रधानमंत्री, मुद्दतों में होती है शख्सियत उनके जैसे, अंदाज ये बयान से हो इतिहास हो जाता है. हमें गर्व है कि हम वो पीढ़ी है जिसने इतिहास बनते देखा है. गौरवनीय हमारे भारत के यशस्वी प्रधानमंत्री श्री नरेंद्र दामोदर दास मोदी जी को हम सब के तरफ से अभिनंदन और स्वागत करते हैं.
నారా చంద్రబాబు నాయుడు అనే నేను విశ్వాసం విధేయత చూపుతానని భారతదేశ సార్వభౌమాధికారాన్ని సమగ్రతను కాపాడుతానని
Stocks stay bid up following a tech rally in the US overnight. Realty and IT are the prominent gainers, even as FMCG and utilities drag. Mid-caps fare better.
IRDAI has sharply hiked the sum a policy holder of non-linked, non-participating policy will receive on surrender after a year. The move is likely to impact the profitability of life insurers and also possible incomes of distributor agents.
L&T Finance jumps after prominent private investors exit via block deal. Sobha climbs on its rights offer at a steep discount, while Nestle bucks the FMCG weakness on keeping royalty rates unchanged.
US Federal Reserve kept policy rates unchanged and indicated only one rate cut this year, but the committee noting progress towards the 2% inflation objective was a real positive signal.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Manglam Malu. Well, it is turning out to be a session where the broader markets continue to outperform. So we have the mid-cap index, which is up around 0.6%, a good advance decline ratio on our hands as well. I just want to point out that now on a week-to-date basis, the mid-cap index is up around 2.5%. The BSE small-cap index is up around 3.6% as well. Today, there are around 244 stocks as per the Bombay Stock Exchange, which are at fresh 52-week highs, and only 12 stocks which are at fresh 52-week lows. Also, a lot of stocks with a lot of interest, which we can see on the screen within the broader market. So, fresh 52-week highs for the likes of Exide, Nesco, Home First Finance, just to name a few. Lively market, Manglam, on our hands.
Lively indeed, and what's interesting is that today the sell-off from the highs happened in the earlier part of the day, and from the lows we've actually seen a recovery. So we're back closer to the 23,400 mark for the Nifty and the 50,000 mark for the Nifty Bank as well. So as you can see, there was a mild dip, and from there has been a recovery from the low. So currently we're going back towards the higher end of today's trading range. The Nifty Bank briefly dipped into the red as well, and that has been bought into. But other stocks which are doing well, we have from the front line end HDFC Life, which continues to do well. Maybe the street is now looking beyond this uncertainty and looking at the surrender value as maybe buy on news and sell on rumor earlier. We're seeing decent traction on names like Shriram Finance as well, which has moved to the high point of trade. Titan as well, as we speak, is doing well. And then we have a bunch of other IT stocks. Mid-cap IT in particular is doing a lot better because yesterday, going into the event, the Fed event, the IT stocks had sold off. The IT index ended at the low point of trade. So maybe some bit of a pop happening out there. Look at names like Oracle. The global parent has gone ahead and signed a deal for artificial intelligence. That stock doing extremely well. Not sure if there is a financial angle here between Oracle and the parent apart from the ownership. But, there is sentiment up move which is taking place.
Yes, absolutely. But the other stock that we're going to kick off the show with is Nestle, which is in focus today. The board has approved to keep the royalty license fee unchanged at 4.5%. Manglam, explain how relevant this is for Nestle India.
Well, for Nestle, this was a foregone conclusion, largely because the royalty that they would pay earlier was 4.5%. It was very recently where the shareholders had rejected the proposal of the company, increasing the royalty rate from 4.5% to 5.25% over a course of 5 years. And as a result of which, the board has gone back and said that now they'll pay only 4.5%, and which is what it was earlier as well. So no change out there. A sentiment positive, an overhang gone away, and which explains the stock being in the green. But what explains that even more is CLSA has written a note this morning saying that F&B is actually the best way to play the rural boost to consumption. They've gone ahead and upgraded Nestle to outperform. Target raised to just under 2,800 rupees. They've done some analysis, periods of FY5 to FY8 or FY16 to FY18, where they've said that this was the time when Manrega spends were increased. And during these periods, Nestle and Britannia actually saw their business grow higher than medium. and median, and the higher competitive intensity in home and personal care makes it a lot less attractive as against F&B. So if there is a rural push, then it's best played via F&B stocks. But speaking about consumer itself, let's put focus on the FMCG sector. ICICI Securities expects higher spending on welfare schemes, and these welfare schemes would likely drive faster private consumption. They also expect sustainability of recovery in rural demand as the tailwind for FY25. So to discuss this and more with us, we have back in our studio Manoj Menon, who is the head of research and FMCG expert at ICICI Securities. Manoj, thank you. Always a pleasure having you with us in the studio.
Thank you, Mangla. Thank you, Ekta.
So let's dive in immediately. Everyone is saying there will be perhaps some push coming in from the government, SOPs to boost consumption, etc. And you've also in your note written that not only is the street expecting that, but a large part of that is also priced in. Yeah. But over the last few trading sessions, people are believing that maybe policy continuity will come by. There will be more rational spends by the government to boost consumption. So as a result of which we saw the stocks come off as well.
Right.
What are the expectations now?
Okay, let me take in two parts, as always, right? Because there's always both sides to the coin. The first part is actually that leave for a minute what happened in the last 1 month or couple of weeks, right? I mean, so if you go by the commentaries by most of the companies after the fourth quarter, company has been clearly calling out two aspects. One, the syndicated data, whether it's Nielsen, IMRB, Kantar panel, etc., is already showing some signs of rural recovery. Secondly, since companies have got visibility on outlet level revenue, they're also qualitatively committing that they're actually finding some green shoots, right? Majority of the companies, not all of it, right? So it appears that a rural recovery is absolutely on track. Okay. Now, what does that actually mean? That even if valuations are punchy, let's say in line with the last 5 and 10-year average, the fact of the matter is that the expectations of an upgrades will remain for a fairly long period of time, right? Second point is that if you generally look at the ownership of FMCG stocks in particular, let's say versus discretionary, it appears it's under-owned, which essentially would mean that it will be a buy into dips sort of a situation rather than a sell into rally.
Okay. Well, just wanted your thoughts in terms of what the expectation is when it comes to the budget. And, what are you telling your clients when it comes to purchasing consumption stocks ahead of that? Do you think that it's probably going to be consumption friendly, consumption focused?
See, going by the expectations currently, it appears a fair probability that there will be a slew of announcements, etc. That said, we just don't have any concrete evidence to actually take a call this way, that way, right? I mean, just about the short term. Our take is that, if I look at FY25, let's say 12 months from today, let's say for the sector, price growth, let's say, didn't exist in FY24, right? That kind of is getting into the base. Point number two, there are green shoots of volume recovery already happening. Point number three, urban continues to perform well. So if I put plus valuations and expectations of upgrades, etc., essentially would mean that, the companies which in our opinion, which are doing self-help, right? What I mean is essentially that they have a strategy on their own and not just waiting for macros, which is a thesis for a fairly long period of time. They should continue to outperform because they have a strategy in place. On top of it, if there is a tailwind, it's a double engine sort of growth for them.
All right, so they're doing well, and if the environment does well, they'll only do better because they are already put in, levers for growth. So speaking about levers,
that's right.
High rural wage has high correlation with HUL's volume growth.
That's
so
right.
What are you penciling in this year for HUL's volume growth? And do you think time now has come for one to look at this giant because it's underperformed for a very long time?
Good question. So we have done this analysis over the last 20 years, based on Reserve Bank data. So Reserve Bank publishes rural wage growth and rural consumer inflation, right? Now, essentially, the gap is the actual purchasing power, right? If you actually plot this versus HUL volume growth, you actually find a correlation of almost 0.8, right? It's undisputable, right? If the expectation is of a rural affluence incrementally, it's a logical assertion to actually say that whether it's HUL, whether it's Dabur, whether it is Nestle, Marico, the whole host of companies, right, will actually get a tailwind. So I'll not really single out HUL here. Companies which has got a fairly high rural exposure, in conjunction with a good performing urban portfolio also, right, are the winners here.
Dabur is not in your top picks, why?
It's actually fairly punchy in terms of valuations. There is nothing really wrong in the strategy as such.
Okay. All right. If you had one key risk that you had to point out, going into the rest of this year, what would it be for consumption stocks? Which one do you think would probably even be more vulnerable?
I think unexpected inflation, right? Typically, consumer staple companies perform well when there is a certain predictability in terms of inflation, right? So that you can actually plan your budgets appropriately, right? Let's say Ukraine war happened, right? Suddenly there was a significant inflation. Companies were forced to take price increases to somewhat protect margins. And consumer incomes are not growing in line with the inflation, right? So which in that sense, kind of down trading, etc., all those issues actually happen. So if there is an unexpected crude inflation basket sort of a scenario, I think the sector kind of would struggle.
But the probability of that happening is quite less.
That's that's a toss of a coin call, right? So you never know. We're talking about a commodity, right?
Just from an upside from current levels, what is it that you see on stocks, and where do you see the maximum upside? Because, okay, if things improve and all of that and stuff, stocks are trading at punchy valuations as compared to their averages.
Yeah.
Where do you get that alpha? Is it likely to, just be a little over what the Nifty is doing, or how much more scope for outperformance is there?
So I'll put again consumer staples into two baskets here. Let's say companies like Marico, which are trading at acceptable valuations, where there is the D2C execution aspect, there is a distribution expansion which are implementing. So the potential for upgrades, let's say in a company like Marico, is very high. Earnings upgrades, that's point number one. Or there are companies like Jyoti Labs, right, where the visibility of let's say distribution expansion, market share gains is very high. The valuations at around 30-32p is absolutely acceptable, right? The second basket is company like Godrej Consumer, Tata Consumer, which we spoke last time as well, where valuations are punchy. But the predictability for the next 12-24 months is so high that you can expect earnings rollover-led stock performance.
Okay. I can't see Titan on your list. If you could just give us a sense in terms of what your approach is towards Titan.
Yeah.
And you also like Kalyan Jewelers.
The thoughts are same actually for a very long period of time. Look, we are downgraded Titan some time back, and the thought process actually has been that two aspects has happened in the market currently. One, there has been a higher acceptability of newer brands from a consumer point of view.
Yes.
Tanishq is not the only choice for the consumer at a pan-India level. Point number two, there is also availability of capital for most of the regional jewelers also. And point number three, hallmarking has essentially increased awareness from a consumer point of view, saying that I can trust multiple, otherwise you would have, let's say, not so be comfortable sort of brands as well, right? Now, Kalyan specifically is a classic case of being in the investment for a very long period of time, and they're just getting the benefits of the earlier over-indexed investments in terms of brand awareness, visibility, etc. Lastly, on Kalyan, one trivia about the Kalyan is that, I'm not sure how many consumers actually realize that it's actually a brand from Kerala, because the brand, the word Kalyan, essentially stands for goodness, etc., in almost all Indian languages, right? See, from a consumer perception point of view, if you have to walk into a jewelry store, you need to believe that it's either your regional sort of an affiliation, or you have to believe that it's a pan-India brand, right? I think the name also kind of helps. Apart from the other good execution what they've been doing.
I'm not sure that was the only reason.
Apart from multiple reasons,
because of the founder, Mr. Kalyan Rama, as well. But just to wrap this discussion up, retail. Eventually, if you're looking at consumers going ahead and increasing their purchases, they would have to purchase it via retail. So where do you stand on that? Value retail. What are your thoughts? Which ones do you like? And then quick commerce. That's suddenly blown up as a channel.
Yeah. Look, I think we do believe that there is an intersection of value and convenience, right? Now, obviously, quick commerce is performing well, but I do believe that there will be a point in time, 12-24 months hence, right? I mean, kind of quick commerce will have to find newer avenues of growth, because it's actually over-indexed on convenience and not necessarily on value. And India, relatively being a poorer country, DMart is probably the only value retailer at scale. I'm not talking about VMart, which is an apparel retailer. I'm talking about the larger, retail, right? So we continue to like DMart. I think a lot of the perceived disruption from quick commerce is already there in the price.
With the growth in Zudio and now possibly Star, would you think of Trent as a value retailer as well?
Trent, business is value. I'm not sure about the stock.
Okay. Well, before we let you go, just a question in terms of the one stock which you would recommend as a buy across the sectors within the FMCG space, and the one top sell that you probably have in this year.
Okay, so without looking at market caps, right? So we continue to back Jyoti Labs on the consumer staple side. We do find that Zydus Wellness is likely to turn around, etc. So that's another aspect which has been a forgotten stock for a fairly long period of time, right? I think they're getting the execution right, and it's been a great summer, etc. Right? So that's on the staple side. Large caps, again, it's Marico, Godrej, the boring names, Tata Consumer, etc. Right? I mean, it's nothing new. Outside of that, we have a reduced rating on Asian Paints, and it's been a high conviction for a fairly long period of time. And as each day passes by, which we do believe that downsides actually is higher, and as Grasim continues to execute over the next 12 months.
What have you found out on the ground with regards to the early acceptability of Grasim's product?
It's too early. Let's say, for example, I was in Chennai last week and I just found a lot of hoardings of Birla Opus. So I think the context to note here is that they have put up the capacity, but the front-end brand building, let's say supply has been created, but the demand side is yet to happen. But when we talk to dealers, etc., we do find that there is a reasonable amount of acceptance, in let's say nation-dominated markets, etc., of the willingness to actually try out a newer brand at a dealer level as of today.
But smaller paid companies, would you be incrementally more negative on them?
So we have a thought process that which we have been publishing over the last 6 months, saying that for any contrarian investor, right, from a game theory point of view, if you really believe, let's say you can have a point of view saying that, let's say Grasim may not succeed. We don't have that view. I'm just saying you can have that view, right? If you have that view, you're better off playing the paint sector by actually having a positive stance on the smaller names, which is Axo, Indigo, and Kansai, for a variety of reasons. Point number one, these companies, let's say Axo and Kansai Nerolac, has got a higher exposure to non-decorative, automotive and industrial, where it is business as usual, right? Second point is that, let's say an AkzoNobel is a premium company, right? It's very unlikely that a premium player, consumer stickiness is low. It will be fairly high, right? And Indigo has been executing well, actually.
So, since we have you with us and since it's time for a meal as well, what are your thoughts on F&B space and QSRs? There's liquor as well, where there is still some policy clarity awaited?
Yeah. I wouldn't really put Nestle. I heard you speak about it a little earlier, as an F&B play, right? Because it's just about probably...
That was CLSA's call, not
No. I'm just, sorry, it's not about that. So what I'm just saying is that, look, Nestle, probably about 1/6 of their revenues and profits come from, let's say, F&B, right? It's really not an F&B play, right? So Varun Beverages, for example, squarely is, right? I mean, so probably Varun Beverages is a better option out there. Other than that, look, QSR, we are finding at least things bottoming out, right? And lastly, on Jubilant, the strong conviction that the delivery fee waiver by Domino's, in our view, is a potential upgrade opportunity, because it's a unique situation where they are the only brand which can actually offer you delivery waiver because they have their fleet and they have their app, etc. So to that extent, they're not that reliant on the aggregators, right? It's a certainly competitive advantage, and I think it's a J-curve sort of recovery we expect in Jubilant.
We heard that from Samir Khetarpal when we spoke with him. He said that the delivery cost waiver has actually led to good growth in not only the fourth quarter, which we know about, but first quarter as well. India-Pakistan game, he said that a lot of pizzas were sold at that time, and they've opened 2,000 stores now on the Domino's front.
That's right.
Okay, all right, Manoj. But on that note, it's been a pleasure as always. Thanks very much for joining in and speaking with us. I'm sure we're going to touch base with you as we move closer towards the budget and post-budget as well. Thanks very much.
Thank you.
Well, before we take a short break, let's in fact just take a quick look on the markets. The Nifty is holding with a gain of around 0.3% at this point in time. So really unchanged for the markets at this point. The mid-cap index is up around 0.6%. So holding up very well for the mid-cap index. The BSE small-cap index should also come up for you. In terms of sectoral gainers, we have a couple of, we have the IT, the Nifty IT index, which is holding with a good gain of around 1%. The BSE cap goods index, which is up around 1% as well. On that note, we'll
just wait about. I think we may be getting some pictures of Rajnath Singh taking charge as the defense minister. So we'll while we await that, just keep an eye out on a couple of these other stocks as well. Ramco Cements, for instance, for the last couple of trading sessions saw a bit of profit taking for a lot of these south-based cement companies, but now they've found some bottom as well. So they're moving off lows, currently moved to the high point of trade into the green for Ramco Cements. India Cements, the other one, though it is in F&O band, it has recovered from the lows, was in the red for most part of today's trading session so far, has now moved into green as well. And we have Dixon Tech. Yesterday we saw a big move coming in from Amber, and now Dixon too has done well, and we have Voltas, which has moved to the high point of trade.
Yes, absolutely. A lot of stocks, but one particular stock that I'm tracking is Biocon. So that particular stock should come up for you. Before that, that is Rajnath Singh. There are some visuals coming in of Rajnath Singh, in fact, taking charge as the defense minister. We'll keep getting you more updates on that, but those are some visuals which are coming in terms of the cabinet ministers in the past couple of days taking charge, and now we have visuals of Rajnath Singh taking charge as the defense minister. Okay, well, we'll keep getting you more visuals of that. As of now, the markets are quite stable and quite steady. And remember, it's been a huge run up for the markets since those June 4th lows, simply because of the continuity, the stability that the markets really like with Modi 3.0.
గౌరవ్ నీలు కోనిదాల పవన్ కళ్యాణ్ గారు
నేను కొణిదెల పవన్ కళ్యాణ్ అనే నేను శాసనం ద్వారా నిర్మితమైన భారత రాజ్యాంగం పట్ల నిజమైన విశ్వాసం విధేయత చూపుతానని భారతదేశ సార్వభౌమాధికారాన్ని
Welcome back. Well, there are some more visuals of Rajnath Singh, in fact, taking over or his position as Defence Minister. So those are some visuals which are coming in on your screen at this point in time. Well, for the markets, it's holding very steady. So there's no real problem which is coming in terms of the market. Steady state for the Nifty as well as the mid-cap index has been this entire week, with the markets really showing steady gains. As you can see, some more visuals coming in of Rajnath Singh.
I think it will be very interesting to see whether he addresses the press also, just the way we've heard from other ministers, including the likes of Hardeep Singh Puri, etc., largely because the street is betting not only on continuity anymore, they're looking at accelerated reform, etc., especially with the defense space, indigenization and upgradation of the defense equipment that we have. That would mean higher allocation towards defense spends. And at the same time, we've seen a big opportunity come by for all these defense stocks, which have seen a big rally already. So that is something that the street would be betting on. So we have some visuals coming in of Rajnath Singh once again taking charge as the Minister of Defense.
Yes, and I think he has indicated that, modernization would be one of the key themes that he would be looking to play out. And safeguarding India's border will also remain one of the top priorities for Rajnath Singh. So that will be important to watch out for in terms of his key priorities. I think that's on Rajnath Singh, and we'll keep getting you more updates from there. But as of now, let's focus on life insurance stocks, which have surged after the Insurance Regulator and Development Authority of India has introduced revised surrender value norms. Yash is here with the details on this. Yash.
Well, Ekta, as far as the revised surrender value norms from the regulator are concerned, there's certainly a big negative for life insurance companies, particularly for two life insurance companies, HDFC Life and Max Financial Services, because these two companies have the highest amount of exposure to the non-participating business, a business which is highly vulnerable to policy surrenders. If the move is that big a negative, then why are the stocks up? Essentially, the reason is that this takes away the uncertainty of what will happen on surrender value. Now, the insurance companies know that surrender value has been increased by the regulator. They know the levels to which it has been increased. And now the market will focus on what will be the strategy from these life insurance companies when it comes to mitigating or minimizing the impact which may come on the margins because of higher surrender value. Also, these companies were anyway trading on historical low valuations, plus it was being factored in as far as the price is concerned when it comes to higher surrender value. So all those reasons leading to this pop in insurance companies' prices today. But what is the move? Essentially, IRDAI has made regulations on increasing the special surrender value. Now, with the regulations and the formula suggested by the regulator, on a 10,000 rupee annual premium, if the policy surrender after the payment of first year premium, annual premium, then the insurance company will have to pay back about 7,823 rupees to the policyholder as surrender value. Now just look at this in the form of percentage. It's about 78% of the premium received by the life insurance company will have to be paid back to the policyholder in case a policy is surrendered. There has been a lot of back and forth on this one. December 2023, the first draft came out which suggested 80% as surrender value. There was a lot of resistance from life insurance companies. After that resistance and representation, the surrender value was brought down to about 30%, but that was the guaranteed surrender value. After that, the regulator spoke about increasing the special surrender value, which eventually will take the total surrender value higher. Again, the regulator suggested taking it to 83%, and now the final regulations with a little bit of relaxation that has been given, the surrender value, special surrender value has been fixed at about 78%. As I said, a big negative, particularly for HDFC Life and Max Financial Services, but the good part out of this is that the uncertainty is now out of the way.
Uncertainty is out of the way, and that is something that the street is relieved by, Yash, going by the stock price moves. But let's talk about Biocon. It's informed CNBC-TV18 that they've received an adequacy letter for a generic drug. Ekta, what drug is this and what does this mean?
Well, yes, Biocon has told us that they have received the adequacy letter for Biocon's generic liraglutide API, which is basically a drug master file from the US FDA. What it means is that an adequacy letter is issued when the review finding of the particular API is adequate and is completed. It attests the quality of the API in suitably controlled tests. So that means that this particular liraglutide API, which they did file with the US FDA, has filed the required or gone through the required tests which are needed. Now, why is this important? Is because liraglutide is that GLP-1 drug. They already received approval for it by the EMA, the European Medicines Agency in the UK. It is Novo Nordisk's first generation GLP-1 medicine. Remember, GLP-1 medicine is basically the weight loss drugs which are making all of the waves world over. But it is a first generation drug. It's not semaglutide or the other ones which are introduced by Eli Lilly. It is the first generation liraglutide. But nonetheless, it is expected to be an important drug. The drug size is $500 million plus in the US. There is an expected generic entry in June 2024, which is anticipated. So that would be something that the street would probably watch out for. The impact also, according to analysts, is that it helps validate the company's scientific capability of developing complex GLP-1 drugs, because that's going to be the next big trigger for all pharmaceutical companies. How are they going to capitalize on the GLP-1 opportunity in the next couple of years? Now, Biocon, by doing this, just gives you an indication in terms of their prowess within that space. The UK liraglutide approval also was the first generic approval for this molecule in any advanced market. So that's the important part to note. It just gives evidence of the scientific capability of Biocon. Maybe they could be front runners just based on what you're seeing when it comes to liraglutide.
Take that point. Thank you, Ekta, for that. With that, we'll step into a short break. On the other side, we speak technicals. Aditya Agarwala, Head of Research and Investments at Invest for Edu, joins in with some trading strategies.
గౌరవనీయ నారా లోకేష్ గారు
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most.
23,400 on the Nifty as we speak. The dip has been bought, but not bought into to the extent that we go back to record highs that we hit earlier in the part of the morning. And the biggest reason for that is the Nifty Bank. So if you just take a look at both these indices, the Nifty is up around 1/3%. The Nifty Bank just about 60 points higher, or 0.1%. And that's exactly the concern that the street has been facing, because in the last 8 sessions, if you look at it, the Nifty Bank has gone ahead and crossed the 50,000 mark on an intraday basis 5 times, but closed above that only once, and that was on June 3rd, which was basically the day where we saw the big pop in the markets on account of the exit poll, and thereafter there was a big decline and then recovery. All those recoveries, every time the Nifty Bank has crossed that 50,000 mark, it hasn't closed above that. Nifty options expiry today, it's a Thursday, so we have the 22,400 call, which is extremely active. That's 23,400 call, I apologize, and that has a premium for almost 100 rupees. So just take that call off. The 23,400 call is extremely active, telling you 23,450 to 23,500 could be a bit of a resistance. At the lower level, we have the 23,300 put as well, which is equally active. So there's the 22,300 put, the 23,300 put equally active, telling you that the support in the market is closer to 23,250 or 23,300 itself. In terms of stocks, looking at fresh longs coming in on Oracle Financial Services for the second day running, the stock has been doing extremely well. A lot of shorting activity in the FMCG space. So we have Marico and Dabur, both of them in the red, seeing some short positions being added. Let's see whether there is follow through or not. And yesterday we spoke about how Z is likely to exit F&O ban. It so happened, but it seems like the street wants at least one media stock in the F&O ban, and that's what Sun TV Open Interest is indicating, that the stock may enter F&O ban today. So that's something we'll watch out for. On the options, 23,350 to 23,550 is the range that the street is playing for when it comes to expiry.
Okay, all right. Thanks, Manglam, for that. Aditya Agrawal now joins in to discuss the technicals of the market. Aditya, welcome to the show. Well, stable as she goes for the markets, what would your call be on the index as well as specific stocks?
Good afternoon, Ekta. Good afternoon, Mangalam. Thanks for having the show. It's a flat market, absolutely. Even though we are making new highs on the Nifty, we're not seeing a runaway rally, and I think so that is likely to continue, Ekta. On the upside, as Mangalam pointed out, the option data is also suggesting a resistance around 23,450, 23,500. I think markets will face resistance around those areas, and you could see again buying around 23,300, 23,200. So between this 250, 300 point range, I think market will continue to oscillate for this week, maybe for next week as well. And maybe once this time-wise correction and consolidation is done, then maybe we can have a next leg of rally towards 23,600 or 24,000. Case in point being, banking index is something which is underperforming. So that has to start outperforming from here on, and the banking stocks have to chip in for the overall market to start inching towards that 24,000 mark. And 50,000, as Mangalam also pointed out, is clearly acting as a major hurdle for the Bank Nifty. Between 50,000 to 50,200 is what I'm eyeing. Once Bank Nifty sustains above that, that will give a clear indication that the Bank Nifty is also poised towards 50,500 to about 50,900 on the upside. Overall, there is more stock-specific and sector-specific activity which we are seeing for the past couple of trading sessions, and I think that is likely to continue going ahead as well.
All right, and individual stocks, what would you recommend?
So I've got a couple of buy recommendations, Mangalam. The first on my radar is UPL. Now this stock after a decent correction, has finally started to inch higher and is trading above its 200 DMA after 1.5 years now. And a good consolidation has led to a breakout in today's trading session. So on the upside, one can play the stock for a target of 580 to about 600 with a stop loss at 544 on the downside. The second stock recommendation is Muthoot Finance. This again has broken out into an all-time high territory. Now I think from here on, stock has further upside. Can test levels of 1900 with a stop loss at 1750 on the downside. I will be a buyer in the stock.
Okay, just a quick question. Wanted to understand if you are looking at Sanofi, that stock is doing well today. 52-week highs over 10,500 odd rupees. It's currently at around 6,500 odd rupees. Is that a stock which is looking good technically? What would your approach be?
Yes, Ekta. So it has broken out from that range, and I think so. One can definitely look at the stock. This is a long consolidation from which it had broken out last week as well. So I think this is likely to continue, and you can see levels of 7,500 about 8,000 on the upside, with a good support on the downside 6,000. In fact, a lot of these stocks within the pharma space, the names like Abbott, Zydus, all of them are looking very interesting, and Sanofi also is one of them which actually stands out within the entire pack.
All right, thank you for joining in, Aditya, and giving us your view on the markets and individual stocks. What we'll do is take a short break, come back, focus on the primary market space. Pranav Haldia, who's the MD at Prime Database, joins in as the IPO season is back with more than 24 companies expected to go public over just the next 2 months. Stay tuned.
Entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube.
Welcome back. Well, IPO season is back, or rather is continuing, with more than 24 companies chasing around 30,000 crores, which is expected to go public over the next few months itself. To discuss this and more, we have Pranav Haldia, who's the MD of Prime Database, joining in. Pranav, hi. Thank you very much for taking the time out. Well, you know, now that we have the elections out of the way, we have a verdict which the markets are quite happy and sanguine with, and you know there is stability in terms of the markets. What is your sense when it comes to the IPO pipeline for the remaining part of the fiscal? You know, it was up around 19% in terms of IPO fundraising in FY24. If you had to put some numbers, what are you expecting in FY25?
Well, so first of all, thank you for having me. You know, this time elections were actually a non-event for the primary market. You know, if you look at historical data of the 4 previous, election cycles of 2004, 2009, 2014, and 2019, you had a total of 28 IPOs raising about 7,500 crores cumulatively across those 4 election cycles. In this year, in you know the 6 months leading up to the elections and the 2 months of the elections, you had 52 IPOs raising 50,000 crores. Like you said, you know, IPO season is continuing. It's not back. In fact, April and May of election years has typically been an extremely dry period. But again, this year you saw 7 IPOs being launched, raising close to 15,000 crores. So this year, this election season has been a bit of a anomaly. Of course, there's been a bit of volatility in the recent past. And as we've seen that primary markets generally do not like any kind of volatility. But I think, the kind of run-up that you've seen recently bodes extremely well for the pipeline. As we said right now, there are 18 companies which already have SEBI approval, which are looking to raise close to 20,000 crores. Of course, Ola Electric, we all read about a couple of days back. Allied Blenders is another one. At the same time, you have about 37 companies looking to raise 50,000 crores, which are filed with SEBI and are awaiting approval. Some of the larger ones, of course, Afcons Infra, Bajaj Housing Finance, Vary Energies. So I think the pipeline looks extremely strong as long as secondary market continues to be buoyant the way it is. And at least at this point in time, it doesn't. There seems to be no reason why it shouldn't, especially with the kind of flows that you're seeing from domestic investors, institutional and retail. I think you should have a stellar year for IPOs in 24-25.
Take that point. The SIPs every month have become 20,000 per month for 2 months in a row. So if that trend continues, there's 2,40,000 crore rupees waiting to get into the markets. Obviously, not all can go into secondary markets. Some part of that has to find its way through primary offerings as well. I just wanted your thoughts on how much higher can this year be in terms of raising of funds as compared to last year, because that was a record year, over 60,000 crores raised.
Well, of course, you had previous years as well. 17-18 was another stellar year which had gone back. It's very hard to put a number really, but I think we should safely be able to cross last year's figures. One important aspect is also that unlike last year, wherein you had a lot of IPOs, but relatively smaller deals, the average issue size was only about 800 crores last year. I think what already you've seen in the last couple of months and some of the issues which are in the pipeline as well, you will see some larger deals hitting the market as well. Of course, we haven't spoken about it, but the mega issue of Hyundai is eagerly anticipated, which is expected to be the largest IPO, even beyond what LIC had raised. Okay. So, I think we should comfortably be able to cross previous highs as far as IPO fundraising is concerned.
Okay. If you could just dissect it sector-wise for us, Pranav, because last year there was not that much participation from the BFSI space. Are there more IPOs lined up from that space as well as these new age companies where the presence was quite limited?
Well, of course, as far as new age is concerned, you have Swiggy, which could potentially be listing for this year. As you rightly said, last year you did not see BFSI segment in a major way. In previous years, you've seen 60 to 70% of the total funds being raised actually from the BFSI sector, which actually is not a huge negative as far as I'm concerned. You saw issues from a whole wide variety of sectors. Manufacturing sector also came in a big way. And I think that bodes extremely well, for the overall capital market ecosystem when you're seeing a large number of companies across sectors, across sizes, having the confidence to tap the primary market.
Right. I just wanted your understanding of the trends over the last few. Hang in there. Actually, as we speak, we have visuals of Ram Mohan Reddy taking charge as the minister for Ram Mohan Naidu rather. Taking charge as the Minister for Civil Aviation, the youngest minister in the cabinet, all of 36 years.
Just 36 years old.
TDP and is taking charge. So that's pretty cool. In fact, we had heard from him. One of our colleagues had done an interview with him about a couple of days ago as well, and he said his focus was to make air travel a lot more accessible, because earlier what was actually something that was a mode of travel for the rich is now becoming a lot more broad-based, a lot more affordable, and that is something that he will continue to do. So maybe make air travel a lot more accessible with the number of airports that are announced and a lot of the things that we'll be tracking here.
Yes, absolutely. And he's a youth leader, 36 years old.
Yeah.
His mindset towards aviation might, in fact, be different from what we've seen. So that'll be interesting to note. But nonetheless, his plans are to also address those high ticket prices, prioritize Andhra Pradesh projects, as well as focus on the common man's issues. So these are some points to note in terms of his tenure as the aviation minister. And obviously what stands out is that he was born in 1987. So he's definitely younger
Youngest
than
minister,
me.
high flying, literally out there. And I hope he makes flying a lot more comfortable, a lot more affordable, and a lot more accessible, along with us going to a lot of other places in the country which are not connected by air as well. But let's go back to our conversation on IPOs. I just wanted your understanding on the funds, the sellers side. I mean, earlier you would have a lot of the money that was raised by companies in terms of a fresh issue. Then you had a lot of promoters offering their shares as OFS. Now you have a lot of the private equity investors, offering their shares to the public market. So how has that trend changed? The quantum raised via fresh issue versus the quantum which is secondary sale?
Well, so again, last year, which is 23-24, was a bit of an anomaly. When you saw 47% of the total amount being raised, was actually fresh capital. In comparison to previous years, where this used to be about 15 to 20%. So last 5-6 years, you've seen the OFS component being 80-85% of the total amount actually being raised. So last year was a bit of an anomaly. At the same time, this entire debate of stay away from issues, if there are private equity investors selling out. I don't buy into that argument. I think it's a sign of a maturing capital market ecosystem. We have to realize that these investors are the ones who are identifying these companies at the early stage, putting in the risk capital at that point in time. And of course, they need to provide an exit to their investors as well. If we go back to the 90s or even early 2000s, a lot of these companies were actually coming to the primary market for this risk capital. And which is why you saw so many companies, either completely shutting shop. You also had a few vanishing companies. But, what you're now finding is that companies which are hitting the market are far more evolved, far more mature in their life cycle. They've had multiple rounds of fundraising, multiple rounds of due diligence, and I think that gives a lot of comfort, especially to retail investors, for some of these issues.
Okay, all right, Pranav. We're going to leave it on that note. Thanks very much for joining in and giving us all of your insights in terms of what we can expect in the overall fundraising and primary market action going into the rest of the fiscal. Well, we need to take a short break, but on the other side, we'll get you more on the markets. A lot of stocks lined up in terms of trade today. More on that in just a bit.
Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheel listing.
Welcome back. Just watch out for Torrent. That stock is down around 1% in what is a relatively good market, and that is because their Indrad facility was inspected by the US FDA. It was a pre-approval as well as a good manufacturing practice inspection, which took place from the 3rd to the 12th of June. The company was issued 5 observations in that particular inspection, And none of it was related to data integrity. But remember, this particular plant already has a warning letter issued in 2019 and already has an official action indicated status issued to it in Jan of 2023. So I think the street will watch out for what the status of this particular facility is post the inspection. On that note, we will take a short break. On the other side, Manisha Gupta will join in. She has with her Atul Chaturvedi of Sri Renuka Sugars. Stay tuned.
Commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Welcome back once again. That excursion towards that 23,400 mark for the Nifty was sold into, but thereafter the Nifty has shown resilience back again at 23,400. We'll keep an eye out on that. At the bottom of your screen, you have Orient Pro, which is up around 5% as one of its arms gets the RBI not to operate as an online payment aggregator. What it means in terms of business opportunity for them and, the size is something that we will try and ascertain, but until that happens, the stock is up 5%. The street likes the direction in which this news has gone. Even as the market is holding up around 23,400, a couple of these stocks are doing a lot better. So from a stock which was recently excluded from the Nifty, UPL has seen a recovery of almost 2.5% from the lows. So it's a vertical up move that we're seeing out there, up at the high point with a gain of about 2% We're seeing the India VIX decline as well, and a stock which was a recent inclusion into the Nifty, Shriram Finance too, is doing well. It's sitting with a gain of about 3%. So we are seeing some traction, even as HDFC Life and all these life insurance companies continue to see some gains, and that's on the back of relief coming in on clarity from the IRDAI. But I do believe we have with us Manisha in the studio. Manisha, all things commodities.
All things sugar, by the way. I mean, the way the sugar prices have been in the international markets and the way the sugar stocks have been surging, it does tell you that perhaps some policy and reform is in the markets, is in the works. And that's exactly, or something that the street is actually anticipating. We are then joined by Atul Chaturvedi, Executive Chairman, Sri Renuka Sugars. Mr. Chaturvedi, hi, thank you so much for joining us. First of all, on MSP, because that is what the street believes can be the first reform that we can see from the government. The expectations are quite on the higher side. What are you hearing and what is your sense? Because in the last 4 years, we've seen FRP being continued to be hiked, but not the MSP.
No, in fact, the industry has been asking for a revision of MSP or minimum selling price, essentially to make this as a kind of an institutional, rather institutionalize the whole process. Because FRP keeps getting increased and the minimum selling price doesn't move. So once if this is increased, then it will send the right signal, and it will also give the signal to the farmers that their money is going to be assured in future, as the industry is not going to lose money. So I think this message, hopefully the government will probably revise this. So we are quite.
Mr. Chaturvedi, what is your sense on what is the industry asking for? Because the current minimum selling price is 31 rupees a kg.
In fact, if you really, the industry has been looking at something like 41 rupees as the price. So we just have to see whether, and this is all ex-factory. Whether this happens or it doesn't happen, we still are watchful. But I think some action is definitely looking to be on the cards.
All right. Ms. Chaturvedi, one, of course, is the sugar minimum selling price. The other is very bullish statements coming in from the Ministry of Petroleum and Gas, where they have talked about the blending on track, 15% already done in the month of May, and on track for 20% blending. That sends a very bullish signal for overall sugar as a sector. What are your numbers, and would you also say that 20% is on cards now by the end of next year?
In fact, this announcement by the Honorable Petroleum Minister has actually come as a whiff of fresh air. In fact, in December, when the cane juice ethanol and B-heavy ethanol was banned for making ethanol, so we were all very disappointed, and the headwinds were pretty high because sugar production was going up and it was adding on to our interest burden. But now this statement reaffirms that the government has not put the plan on the back burner, and the government is committed to ensure that the Prime Minister's target of achieving 20% blending by 2025 gets achieved. And I'm sure the kind of thrust which the new minister is giving and the kind of signals the new minister is giving definitely augurs well, not only for the sugar sector, but for maize as well. And if we look at the numbers this year they were expecting 825 crore liters to get 15% blending. As of 31st of May, almost something like 327 crore liters has been supplied. And the big change is that grain ethanol is now competing strongly with sugar. And it's a kind of 50-50 ratio. So I think all this is good signals, and it should be helpful to the sugar industry to cut down on their interest burden.
So while both of these things are quite bullish and in works perhaps, and that's exactly where the sugar stocks seem to be reacting with, do you think that this would be a part of the first 100 days, the sugar minimum support price, and of course, a long-term pricing policy for ethanol?
So what is more important and at this point of time is that the industry has been asking the government to increase the price of ethanol which was supplied to the OMCs till now. So that needs correction, and as the FRP for the new season has already been announced, increase in FRP. So it is imperative that this is also done for next season. So what the industry is anticipating is that the price of cane juice ethanol should be more or less in tune with what the government is giving for maize-based ethanol, which is about closer to about 72 rupees, which means an increase of about 7 rupees from the current price. And similarly, the B-heavy ethanol price also needs to be jacked up in the same proportion, which would mean that it will now become something like 65, 66 rupees or thereabouts. That's the industry's requirement and demand. Let us see how things pan out as we go forward. And I'm sure some action is likely to be taken.
Right. Yeah. That may spell decent news for the space, and we're seeing decent traction in all of these sugar stocks as well. Thanks a lot, Mr. Chaturvedi, for joining in, and Manisha for taking us through that conversation. We'll wrap up on this note from Halftime Report, but stay tuned because Business Lunch will take all the market action ahead.
And what a great way to celebrate our own 25th year, with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
నేను కొణిదెల పవన్ కళ్యాణ్ అనే నేను ఆంధ్రప్రదేశ్ రాష్ట్ర మంత్రిగా నా పరిశీలనకు వచ్చిన లేదా నాకు తెలియవచ్చిన ఏ విషయాన్ని నా కర్తవ్యాలను సక్రమంగా నిర్వహించేందుకు అవసరమైన మేరకు తప్ప ప్రత్యక్షంగా గాని పరోక్షంగా గాని ఏ వ్యక్తికి లేదా వ్యక్తులకి తెలియపరచనని లేదా వెల్లడించనని దైవ సాక్షిగా ప్రమాణం చేస్తున్నాను.
Stocks stay higher following a tech rally in the US overnight. Realty and IT are the prominent gainers, even as FMCG and utilities drag. Mid-caps continue to fare better. The IRDAI has sharply hiked the sum a policyholder of a non-linked, non-participating policy will receive on surrender after a year. The move is likely to impact profitability of life insurers and also possibly incomes of distributors and agents. L&T Finance jumps after a prominent private investor's exit via block deal. Sobha climbs on its rights issue at a steep discount, while Nestle bucks the FMCG weakness trend on keeping royalty rates unchanged. The US Federal Reserve kept policy rates unchanged and indicated only one rate cut this year, but its committee, noting progress towards the 2% inflation objective, was a positive signal. Hello and welcome to Business Lunch here on CNBC TV18. I am Hormuz Fatakia in the Mumbai News Center. Let's first take a look at how the markets are faring this afternoon. It's a bit of a cool off from the highs of the day. We made another new record this morning, but then we cooled off from the highs of the day, and now we are struggling to hold on to that 23,400 level. That is a very important level, mind you, on the Nifty. It's picked up from the lows of the day again, but there you can see the Nifty nearing towards 23,400. The high somewhere close to 23,480, which was at the start of today's trading session. So this 23,400, 23,500 band remains a congestion zone. What is also doing well though is real estate, and that index is up for the 7th day in a row now. 2.5% higher is the Nifty Realty. So that sector continues to do very well. Lots of stocks from the real estate space also buzzing in today's trading session. The broader markets continue to do well. The mid-cap index, small-cap index, both up for the 7th day in a row. What is not doing well though are media stocks. The Nifty Media Index was the top sectoral gainer in yesterday's trading session. That's not the case today. It's seeing a bit of profit booking in today's session, down 1%. FMCG, that continues to remain weak. The index is down 0.5% in today's trading session. It was down in yesterday's session as well. PSU banks have cooled off from the highs of the day. Remember, that was also one of the top sectoral performers in yesterday's trading session. So that is seeing a bit of a cool off, as is the metals index. So that index has also completely turned flat after a positive start in today's trading session. Also pull up L&T. That is the stock that I would want to highlight, because just a few minutes earlier there was flashes on your screen that the company has won a large offshore order from ONGC, and that is impacting the stock as well at the highest point of the day now, 37.13 on L&T, 2.5% higher. It was a large contract, so the large contract is defined by the company anywhere between 2.5 to 5,000 crores. So positive news coming in for L&T stock at the day's high. But let's begin business lunch by focusing on the big Q that came in from
from Wall Street overnight. The US Federal Reserve has decided to keep interest rates steady at the current rate of 5.25% to 5.5%, but the revised outlook for rate cuts to just 1 in 2024. CNBC's Steve Leisman has a roundup of that data.
It was a dovish morning followed by what you might call a hawkish afternoon for markets. And you can see the entire drama playing out in bold relief in the bond market, where yields plunged on the 2-year note with that better than expected inflation report this morning. Then they bounced higher with a more hawkish Fed statement and projections than the market had expected. Though bonds did hold on to some of their gains, and stocks seem to, well, ignore at least a good part of the what the Fed did today. Forecasts for the Fed this year for the funds rate went from 3 in March down to 1 right now for the full year. They did raise the neutral rate, suggesting they think they're less restrictive than they were before. They see higher inflation this year, and a modest nod in the statement to the recent inflation progress that we've seen. Fed Chair Powell was maybe a bit more dovish than the statement and the projections. He suggested 1 or 2 cuts were still possible beginning in September, and that he welcomed today's inflation report. But he suggested Fed officials remain cautious because of that spike in inflation we had in the first quarter.
What we've been getting is good progress on inflation with growth at a good level and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that. But so far, they haven't had to. And, that's why we're watching so carefully for signs of weakness.
The September Fed funds futures tells the story, too. Exuberance about rate cuts after the inflation report lifted that probability 73% from 55 before CPI. Traders then dialed back their enthusiasm and bid it down to 61% after the Fed meeting. I think you can think of the difference between the Fed and the markets as one between optimists and pessimists about inflation. The Fed, maybe a bit like the groundhog that saw its shadow in the winter and crawled back into their hole, declared 6 more months of high inflation. The market, they've seen the sun break out from behind the clouds during the last 2 inflation reports, and they're ready for summer, the beach, and rate cuts when they come back in September.
All eyes now on the Fed's policy in September as to whether they would eventually bite the bullet or not. But the Fed chair, Jerome Powell, also spoke about how they would need more good data on inflation in order to have the confidence to cut interest rates. He also clarified that rate hikes are off the table.
The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. We think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but no one has that as their base case.
Jerome Powell there, no one has a rate hike as their base case. That was something that the bulls would take a lot of heart from. But time for a short break here on Business Lunch. Up next, we'll take a deep dive into India's banking sector in our special segment, Fin Street. Back on the other side.
ఉండబోతున్నారనేటువంటి ఒకనొక కాంక్షతో చూస్తున్నటువంటి సందర్భం
हमारे माननीय यशस्वी प्रधानमंत्री मुद्दतों में होती है शख्सियत उनके जैसे अंदाज ये बयान से हो इतिहास हो जाता है। हमें गर्व है कि हम वो पीढ़ी है जिसने इतिहास बनते देखा है। गौरवनीलु हमारे भारत के यशस्वी प्रधानमंत्री श्री नरेंद्र दामोदर दास मोदी जी को हम सब के तरफ से अभिनंदन और स्वागत करते हैं।
నారా చంద్రబాబు నాయుడు అనే నేను విశ్వాసం విధేయత చూపుతానని
Back with us here on Business Lunch, and moving on to some macro data now. India's CPI inflation eased to 4.75% in the month of May, while core inflation cooled to 3.1%. Industrial output in April remained steady with a 5% growth rate. Lata Venkatesh is joining in now with more details. Lata, good afternoon.
Thanks a lot for that. Well, actually, the inflation number at 4.7 is undershooting the Reserve Bank's forecast. It's of course lower than our poll, but if you take April, May, June, the Reserve Bank has forecast 4.9, and with only 4.7 in the current month, that is in May, the expectation of June being even lower because it's a very high base, we're clearly undershooting the Reserve Bank's forecast for the current quarter. Food inflation is high at 8.7, but again, that's largely because of the base. The base month, May 23, was only 2.9, and although veggie prices have gone up in June, again, there is a very high base in the year ago, June 23. So we're really not in any danger on the headline inflation from food, although the number itself at 8.7 is high. There is a sugar MSP increase. We have to worry and see if more MSP increases will come. But for June, there is no expectation of a big number. The big startling number in the main CPI data is the core inflation, going to 3.1. By some calculations, it is even 3% for some economists. Now, remember, a year ago, it was 5.05, and 15 months ago, it was 6%. So look at the steep fall at 3%. The Reserve Bank's MPC target for inflation is 4%. Okay? The Reserve Bank has repeatedly said we don't have much control over food and fuel because, so much depends on weather, etc. So if your controllable part is 3, you are way below your target. Some people would say it is even deflationary that core CPI is 3%. So the cries will definitely go up for at least a change in stance. And, that can come as early as the August policy itself. So the market is reading the entire number as very dovish. Of course, the US CPI numbers are only adding to the dovishness. But today we did not see a very big rally. We just saw the Indian yields go down to 6.99, and now they have come back to 7%. Not a very big rally because of the Fed forecasting that it has only one rate cut, and Reserve Bank is extremely unlikely to go in for a rate cut before the Fed signals, and definitely perhaps not even before the US elections, because that can be a very important in terms of what tariffs can come if there is a Trump administration. So at the moment, not much celebration. I just want to add one more point. The market is not celebrating also because the Reserve Bank bulletin is going to give, the June bulletin will give out something called the neutral rate. What is the neutral rate? It's the difference between the repo rate and inflation, the nominal interest rate and inflation. Repo rate is 6.5, and inflation forecast for the year at 4.5. So the difference is 200 basis points. In the past, the Reserve Bank has said that the neutral rate should be 100 basis. That was during COVID. But now the higher number could be 150, 175. If the bulletin says that the neutral rate is around 150, 175, people will expect a rate cut. But if it says the neutral rate is 200, then there is no rate cut in the offing, because that's where we are at this point in time. So despite a very good inflation number, the market is still waiting and watching for the bulletin. A word on the IIP, it's come in at 5 compared to a poll of 4.7. So even that's a good number.
That's a good number. All eyes on the RBI bulletin then. Thanks a lot, Lata, for that update. Now back to the markets then. From the macro, some very interesting mutual fund data that has emerged in the month of May. Now, some of the key takeaways here, though, was the fact that before the Lok Sabha election results were announced, mutual fund houses have chosen to book profits in a lot of these PSU stocks ahead of the Lok Sabha election results. That is one big takeaway. Now, the other big takeaway is the fact that they have added positions in Vodafone Idea, but they have reduced positions consequently in Indus Towers. So that's another takeaway that they have, that from the month of May. This is a note from Novama that they've come out with what mutual funds did in the month of May. Now also, what they've also done is within the broader markets, they've added positions in Suzlon, in HUDCO, and cut positions in Hindustan Copper and Whirlpool. So they've chosen to book profits in PSUs, barring certain stocks like SBI, and HUDCO is one of the other outlying PSUs where they have increased positions instead of reducing them. Mind you, just a clarification, when I say profit booking, it means they've reduced their exposure to PSU stocks and not completely exited them. So which are these PSU names where they have reduced exposure? HAL is one of them. PNB is the other one. Bharat Electronics is the other one. There you can see now the returns until the 31st of May. Almost 80% is HAL, PNB is up 35%, BEL is up 60%. Now, once the Lok Sabha election results were announced, these stocks had a very sharp fall on the 4th of June, and now they're recovering from those levels, yet they are down almost 1%, 1.5%, 2%. Some of the other PSUs where they have reduced positions, Bharat Dynamics, BEML, Hindustan Copper. Now, Bharat Dynamics if you take a 12-month return, it's almost tripled in the last 12 months. BEML 55%, Hindustan Copper 30%. This is a year-to-date return that I'm talking about. For Bharat Dynamics up 80% as well. Even these stocks now, since the start of June, are down anywhere between 9 to 10%. So PSU still recovering from the losses, but mutual funds chose to book some profits before the election results were announced. Now, when it comes to large cap stocks, what have mutual funds done? They have increased their exposures in HDFC Bank. They increased their exposure in Infosys, in HUL, and in SBI as well. In Kotak Mahindra Bank as well, it saw some regulatory issues in April and in May. Now the mutual funds have chosen to add their positions there as well. Now within the mid-cap stocks, I just mentioned Suzlon, I mentioned Vodafone Idea, but they have added Persistent Systems there as well. They have added Oracle Financial. Remember, Oracle Financial is at a record high today after the parent reported some very strong earnings in the US. And an interesting addition here is Star Health Insurance. That has been an underperformer compared to peers, still trading below its IPO price, but finds a mention in the mutual fund buy list. Now when it comes to reductions, now when I spoke of mid-cap IT, they've added Persistent, but they have reduced exposure to Coforge, Sundaram Finance, as I mentioned, in the towers as well, Thermax and Solar Industries. Some of the other stocks, they have exited a lot of small cap names. GMR Power is one of them, Pitti Engineering is the other, Ujjivan Financial is one of them. Among the top small cap additions, I just mentioned HUDCO, but after that, they have also added positions in Aptus Value and Prudent Corp. So these are some of the other small cap additions, and small cap reductions other than the PSUs include stocks like Whirlpool and Carborundum. So very interesting note coming in there from Novama on what mutual funds did in the month of May. The big takeaway, additions in Suzlon and in Vodafone Idea, and profit booking in some PSUs. But moving on then, the banking sector continues to outperform quarter after quarter. Abhishek is now joining in with a roundup of how the banking sector fared in the fourth quarter of FY24 in our special segment, FinStreet.
Well, FY24 has seen the highest profitability in the banking sector, coming in at rupees 3.2 lakh crore, which is up nearly 14% on a YOY basis. Now, this number is after accounting for SDFC Twins merger. Please note that. So, profit growth for the private banks is not comparable YOY due to this merger of SDFC Limited with SDFC Bank. Treasury gains and robust fee income actually aided in profitability in Q4 FY24. Asset quality continued to improve, hence lower credit costs also aided in the earnings momentum for the banking sector. FY24 profit growth for PSU banks was about 7.9% YOY, while that of private banks was 19.4% YOY, which includes the SDFC Twins merger. Let's now look at the Q4 FY24 performance of the banking sector. PSU banks have had an amazing Q4 FY24. Sequentially, their net interest income growth was at 4.7%, which compares to 3.4% recorded by their peers, that is private banks. Dhanlaxmi Bank is the only lender to see YOY and quarter-on-quarter decline in its NII. Operating profits of the PSU banks have grown at a robust 16.7% sequentially versus 12.9% sequential growth that you saw for private banks. Overall, operating profit growth of the banking sector was at 14.7% quarter-on-quarter. Now, 9 out of 42 lenders saw operating profit decline YOY and quarter-on-quarter. For 50% of these lenders, the employee expenses weighed on the operating profits. Now, Dhanlaxmi Bank again is the only lender to report an an operating loss in Q4 FY24. PAT growth has been robust for PSU banks. PSU banks, the profitability has grown more than 40% sequentially versus 6% sequential growth that has come in for private banks. Overall, banking sector's PAT growth was about 20.3% sequentially. 4 lenders saw their PAT decline both YOY and quarter-on-quarter, which includes AU Small Finance Bank, Bandhan Bank, Karnataka Bank as well as South Indian Bank. Lowest profitability or the return on asset was seen for Bandhan Bank. Now let's look at the asset quality. Slippages increased massively for PSU banks compared to that of private banks. Slippages increased 15.5% quarter-on-quarter for PSU banks, which was largely led by agri as well as MSME segment. So slippages declined more than 4% quarter-on-quarter for the private banks. Overall, slippages increased more than 5% sequentially for the banking sector. Now asset quality overall for the banking sector is perhaps one of the best that you are seeing in last 9 to 10 years or even more. Interestingly, the net NPA ratio difference between PSU banks and private banks is now down to 27 basis points only, which is perhaps the lowest ever. In FY18, this gap was around 552 basis points. Now, lenders whose risk-weighted assets have outpaced the growth of loan growth that they saw in the balance sheet YOY and quarter-on-quarter are Bank of Maharashtra, Canara Bank, CSB Bank, Equita Small Finance Bank, IDFC Bank, Karur Vysya Bank, Kotak Bank and Ujjivan Small Finance Bank. Now, SDFC Bank's numbers are not comparable YOY, but sequentially, that is quarter-on-quarter, its RWA growth has outpaced the loan growth. Outlook in terms of what analysts and lenders have mentioned is that loan growth rate will decline in FY25 when compared to the growth in FY24. Net interest margin can come under pressure in the near term owing to their high deposit rates. Some banks can see treasury gains owing to decline in 10-year GSEC, especially in Q1 FY25. Credit cost as well as asset quality will rise owing to normalization of them in FY25. Recovery and upgrades in FY25 will not be as high as they were seen in the last couple of years. Microfinance loans and small ticket unsecured loans have started to see defaults or rise in slippages.
Abhishek, thanks a lot for that. That was Fin Street. Now, time for a short break here on Business Lunch. Up next, we get you the latest details on the NEET exam issue and the Education Minister's comments on the same.
భారతదేశ సార్వభౌమాధికారాన్ని సమగ్రతను కాపాడుతానని
గౌరవనీయులు కొనిదాల పవన్ కళ్యాణ్ గారు
నేను కొనిదల పవన్ కళ్యాణ్ అనే నేను శాసనం ద్వారా నిర్మితమైన భారత రాజ్యాంగం పట్ల నిజమైన విశ్వాసం విధేయత చూపుతానని భారతదేశ సార్వభౌమాధికారాన్ని
Welcome back. Let's get you some more political updates now. Ministers from the third installment of the NDA government continue to take charge of their respective ministries. Earlier this morning, Rajnath Singh took charge of the Defence Ministry at South Block. Now, the TDP's Ram Mohan Naidu, one of the youngest MPs in the Lok Sabha, also took charge of the Aviation Ministry earlier today. Remember, back in 2014, it was the TDP itself which held the Aviation Ministry under the NDA government in power back then when Ashok Gajapati Raju was the Aviation Minister. Earlier this morning, the BJP's G. Kishan Reddy also took over the coal ministry. Speaking to the press, he also said that he would like to discourage coal imports and increase domestic production going forward. The Education Minister Dharmendra Pradhan also took charge of the Education Ministry this morning and addressed the issues of grace marks given to students appearing for the NET exam. Let's listen in to his comments.
सरकार उसकी सामना करने के लिए उसको संतुष्टि के साथ बच्चों को उत्तर देने के लिए बहुत प्रामाणिकता के साथ खड़ा है। स्पेसिफिक घटना जो आए हैं उसको सरकार गंभीरता से लिया है। एकेडमिशियंस की कमेटी बनी है, उन्होंने कुछ रिकमेंडेशन किया है, उस हिसाब से सरकार आज कोर्ट के सामने उस पक्ष को रखेगा और बाकी जो नीडफुल सुप्रीम कोर्ट के आदेश से ही कुछ साल पहले से एनटीए की गठन हुई है। पिछले दिनों में आज एनटीए लगभग 3 बड़े एग्जामिनेशन कराते सक्सेसफुली कराते, नीट, जेई और सीयूई।
Staying in the national capital but shifting focus to the water crisis over there. Now, in a major setback, the state of Arunachal Pradesh has said that there is no water available for release from the state to Delhi. Ashmit is here to tell us more. Ashmit, what are you picking up?
Well, the situation not getting easier here in the national capital, especially in terms of the acute drinking water shortage. Keep in mind that a couple of weeks back, the Apex Court had passed a very pointed direction, allowing for the Himachal Pradesh state to release 137 cusecs of water, for that water to be transmitted by the state of Haryana, and then finally for that water to travel to the national capital. The concern here today, Himachal is now saying that it does not have that additional water. The Apex Court was taken aback, said that that submission, that the initial undertaking by the Himachal that there is additional water to release to Delhi, that was the entire basis of the Supreme Court direction for allowing for this release of water. Now with the situation coming back to square one, that's the term used by the Apex Court, we're back to square one. What the Supreme Court is now saying is that, look, we just don't have the expertise to decide on this matter. Even to pass any interim directions would be unfair because we don't enjoy the expertise. And to that end, the Supreme Court points in the direction of an MOU that was signed between the states of Himachal, of Haryana, as well as Delhi, where importantly an understanding was reached. A board was formed, the Upper Yamuna River Board was formed. This has the necessary expertise. The Apex Court has said that the Delhi government needs to move this board, the Upper Yamuna River Board, and it's this board that enjoys the credibility, that enjoys the expertise to pass final orders. The only caveat that the Apex Court has ordered is that this board needs to take a decision at the earliest, and that it needs to convene a meeting as early as tomorrow to decide on Delhi's application seeking additional water as a one-time basis to deal with the acute water shortage in the national capital. Back to you.
Things not getting better in the national capital. Ashmit, thanks a lot for that. Now, here's something that we want to share with our viewers. We have hit a huge milestone. Young Turks, India's longest running show on startups, has turned 22. The journey began as an idea to provide first-generation Indian entrepreneurs a platform. 2 decades later, Young Turks has become one of the largest community for Indian startups. We have featured innovators, budding entrepreneurs, and put the spotlight on companies making a difference. It's been a phenomenal journey celebrating India's startup revolution. We would like to thank all our viewers for being a part of this. In fact, the who's who of India Inc. and the startup world have taken to social media to congratulate CNBC-TV18 on this incredible journey. Here's a throwback to 22 years of Young Turks.
Welcome, you're watching Young Turks, the show that puts the spotlight on 2 young achievers. I'm Shireen Bhan. You're watching the Young Turks Dream Deck. It marks the beginning of our 11th year. We turned 12. For 13 years, we brought you some of India's hottest entrepreneurial stories.
On stage in front of about 500 odd people said that I was the universal mother for Young Turks. Now, I should have been upset, but I really wasn't, because I feel a strong connection with the people that have been featured on this show.
when you're working on a great idea with the sincerity of purpose. We began our journey on Young Turks 22 years ago with the idea of creating India's largest platform for first-generation startup entrepreneurs. Today, we have created one of the world's longest-running programs on startups and entrepreneurship. We're so proud that we've been able to play a part in creating India's startup ecosystem, and we can't wait to see how India continues to drive forward as a formidable startup nation.
A happy 22nd to Young Turks and many, many more to go. But with that, it's a wrap on this edition of Business Lunch from me and the team that put this show together. Thank you so much for watching. Midcap Radar takes the action forward.
गौरवनीय नारा लोकेश गारू,
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest-running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of
Good afternoon, welcome to Midcap Radar. I'm Sonal Bhutra. With me as always is Vivek Iyer. We've come off the highs, but 88 points higher on the Nifty right now. Mid-caps are surging as well. They are the outperformers. Small caps are also taking part in the rally that we are seeing today. So all in all, a decent day, but yes, of course, we have come off from the highs of the day.
Coming off the day's high, but still, well in green territory. So that's the good news. Quite a lot lined up. Some interesting conversations on the show as well. So let's start the show with the top headlines. Stocks stay bid up following a tech rally in the US overnight. Realty and consumer durables are the prominent gainers, even as FMCG, metals, along with PSU banks drag. Mid-caps relatively fare better.
Sobha surges in trade around 5% after the board approves a rights issue to raise up to 2,000 crore rupees. The issue price is set at 1651 rupees per share. Proposed equity issuance of 12.1 million shares, which could lead to post-issue equity dilution of 11.3%.
Sugar stocks gained today on expectations of a hike in MSP for the 2024-2025 season. The industry has demanded a hike in minimum sale price to 41 rupees per kg compared to the current level of 31 rupees.
L&T Finance surges over 3% after a large block deal where 3.54% equity changes hands in that deal. Bain Capital and BNP Paribas are likely to have sole stake.
Life insurance stocks HDFC Life and Max Life surge in trade after the insurance regulator introduced revised surrender value norms for life insurance policies. Stocks gain as the surrender value hike is lower than what was being factored in.
Okay, all right. Let's talk about the markets now. 85 points higher on the Nifty. We have the mid caps doing well, 394 points higher there, and the bank Nifty is the one which is underperforming today. So that one is up just 0.1% as we speak. In terms of sectoral movers, we have Nifty Realty, which is the top gainer. A lot of these realty names doing well in trade. IT names have made a comeback. Nifty Infra Index is doing well. Auto is also doing well in trade today. What is not doing so well is the CPSE index. Not major losses, but yes, that index is in the red right now, so 0.2% lower there, and a lot of broader market movers as well, which we'll discuss in greater details. But sugar stocks, they should be on your radar. A lot of action there.
Sugar stocks, so it's a sweet rally as far as the market is concerned. The Nifty IT index, especially when you're talking about the mid-cap IT, that's one particular space. You know, it's across the space that you're seeing quite a bit of buying action. But this is our special segment, mid-cap movers. Hormaz is standing by the wall to take us through the top movers in the broader end of the markets.
You may have heard of a 7-year itch, but there's no 7-day itch for sure. That's what the broader markets are conveying right now. Both the mid-cap and small-cap indices up for the 7th day in a row today and at a record high as well. Let's take you through some of the movers then within the broader markets, and within the top gainers include the likes of Aegis Logistics. That is one of the top gainers there on the Nifty 500 index. Along with it also come the likes of Paytm. After the price band revision, that stock is doing well, another 6.5% higher. Aegis Logistics now 14% at the highest point of the day. Oracle Financial also at a record high after strong earnings reported by its parent, 9.5% there as well. Real estate, another 7th day of gains for them. For the index, Macrotech up 4.5%, Sobha after the rights issue of 5%, Godrej Properties also having a good day. But you mentioned sugar, it's a sweet day indeed for all of the sugar companies. Dhampur, Sri Renuka, Balrampur Chini, mind you, is in the F&O ban, but it's up 4.5%. Dwarkesh is also up 8% in today's trading session. Stocks that are doing well on the back of volumes, and Arkin Chemicals 7.5% there. DCM Shriram Home First Finance continues to surge 8.5% there on very strong volumes, and Kempla Samnar as well finding a mention there. And lastly, some of the underperformers in today's session. FMCG finds a mention here. Marico is one of those stocks, almost 4% now at the lowest point of the day. Kaplan Point, Elcon, Sun TV also not having a very good day in this otherwise strong market. Back to you guys.
Okay, all right. So some underperformance as well in a market which is otherwise favoring the gainers, but it's a good time to get a technical check on the markets. Samit Chaman of Angel One is joining us for just that. Samit, good afternoon. Thank you so much for joining us. Well, what is what are the charts suggesting now? Do you think we'll see some leg up from here on, or we could consolidate at these levels?
Good afternoon, Sonal. Last week around the same time, Nifty was hovering somewhere around 22,750 with a decent recovery. And honestly speaking, we were not expecting 23,000 to be crossed quite soon. We were expecting some consolidation before that, but the moment 23,000 was crossed, we witnessed a sharp move of nearly 400 points at Nifty. Now, since last 3-4 days, we are seeing some consolidation. If you see the India VIX, post the event, it has cooled off drastically from 30 odd levels to 14 odd levels now. So we are seeing some consolidation. There are a lot of spaces that are doing well, but importantly, the heavyweight space, banking, it has been consolidating. As far as bank Nifty is concerned, it is facing some resistance around 50,200, 50,500. So till the time bank Nifty does not contribute or participate in this rally, we are likely to see some consolidation. So as far as levels are concerned for Nifty, we are seeing levels of 23,500 to 23,400. So this is the immediate trading range. It's a thin range that we have been witnessing some consolidation in the index since last 3-4 days. So till the time we remain in this range, stock specific moves are likely to continue. If you see the mid cap select index, which is a tradable index, it has been continuously rising, and it is now knocking the doors of yet another milestone of 12,000. So clearly, outside the index, we are seeing better opportunities, and there are a lot of things that are playing well, and one should keep focused on such things.
Samit, which are the individual stocks that you're liking in today's trading session?
The high beta realty space has been doing well for itself, and if you see Godrej Properties, it has been one of the outperforming stocks within this space. It has already given a V-shaped recovery from last Tuesday's low, and now it is trading at its all-time high. It has already entered an uncharted territory. So the price structure looks good. We would expect, with a momentum perspective, 1300, 3120 to be tested in this particular counter. So as a momentum trader, one should keep stop around 2960. And the other buy would be on, GMR. This stock has been doing well since last many months now. Recently, 1.5 months, we witnessed some consolidation, but the stock seems to be poised for yet another breakout from its recent conversion zone. So we like GMR Infra, GMR Airports, in fact, for a target of 97 to 99. But once the stock surpasses its psychological mark of 100, we could see a sharp rally unfolding in this counter. So for a time being, 97, 99, these are the levels to watch out for. And as a trader, we would keep a stop around 87.
Okay, all right. Thank you so much, Samit, for joining us with that technical check. With that, we'll slip into a short break. When we come back, we'll be joined by the group that is the Vice President of Morbi Ceramic Association, Shailesh Vasnani, the Vice President, will be with us. Ceramic companies, they saw margin benefits due to low gas prices. Will that continue or not? We'll discuss that. Stay tuned.
Politics, the key news makers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Welcome back. You're still tuned into Midcap Radar, and the sector on our radar is the ceramic sector and also the gas sector, because remember, ceramic companies saw 400 to 500 basis points reduction in fuel costs as a percentage of sales in Q4. And we do know that gas is a big input for these companies as well. And Gujarat Gas also is a major supplier in this particular region, which is the Morbi region. So what is the gas pricing looking like? Will this benefit continue now that spot LNG prices are also seeing a rise? What does it mean for the ceramic industry and Gujarat Gas in terms of volumes as well? To discuss this and more, we have Shailesh Vasnani, the Vice President of Morbi Ceramic Association, joining us now. Mr. Vasnani, good afternoon. Thank you so much for joining us. I just wanted to understand right now, in the industry, is there more usage of gas coming in from Gujarat Gas or propane? What is the pricing differential that you're seeing right now?
Currently, both the gas have been used in Morbi, Gujarat Gas as well as propane. The total demand or total the usage of Morbi currently is 77 lakhs SCM, standard cubic meters. From these 77 lakhs standard cubic meters,
Okay, all right. It looks like there is some technical issue, but of course we'll get back to Mr. Vasnani in just a bit. But just to give you some perspective, that Gujarat Gas supplies gas in the Morbi region, and that is one of the major inputs for these ceramic makers as well. And we also have propane, and there's always a competition between propane and Gujarat Gas's gas, because the prices keep changing, and that's how the industry also keeps changing their inputs as well. So that is something that impacts the volumes for Gujarat Gas. And in terms of ceramic industry, in addition to what we are talking about Gujarat Gas, they have been facing some pressure in terms of exports. They have been facing some volume pressure and some margin pressure as well, but that recovered in Q4. So the question was whether that continues or not. But yes, we'll just be connecting with Mr. Vasnani in just a bit.
You're right. Another big talking point, for this entire space is, while you track the sector quite closely, especially gas space, I think there's a lot of expectation from the industry, whether gas, natural gas especially, could come under GST. And especially for players like people in the ceramic space, it will be interesting to see whether they get any input tax credit. And I think that will be a big kicker for them going forward. While we just try and get you back to that particular line, let's look at the markets. Have a look at some of these mid-cap IT stocks. look at a name like OFSS, Oracle Financial Services, this particular stock surging in the session, and it continues its surge for the past 2 quarters especially. Some of the other names that we spoke about, especially when you're looking at names from the NBFC space, even yesterday we spoke to you about them. Look at L&T Finance Holding. The block deal overhang is now done, and after that the stock has moved higher significantly. Even names like LIC Housing Finance, names like M&M Financial Services, names like Chola Investment. Have a look at Chola Investment, this particular stock too, surging in the session. Mid-cap IT, whole host of names. Sonal, you had something to add, yeah.
Oh, no, I was just saying, yes, these are some of the stocks that are in focus, and we'll be getting our colleagues in as well. They'll talk about some of the stocks which are buzzing or are in focus on the back of news as well. So Biocon is one of them. It has informed CNBC-TV18 that company has received adequacy letter for a generic drug from the US FDA. I'm sure it has a lot of names which we can't pronounce. So Ekta, please take it away and tell us all about it.
Thanks for that. Well, yes, Biocon has given us a confirmation that they've received the adequacy letter for Biocon's generic liraglutide API from the US FDA. So now what does an adequacy letter mean? An adequacy letter is issued when the review finding for a drug master file for an API is adequate for the first time and is completed. So that means that it attests the quality of the API being suitable in the tests which are undertaken by the US FDA. Now, this is for the liraglutide drug, which is a GLP-1 drug, which is by Novo Nordisk. It is the first generation GLP-1 drug. We all know about semaglutide, Wegovy, all of the other drugs which are popular within this category. But liraglutide is from the same family, but it is a first generation drug. Now, remember that Biocon has already received approval for the generic version of liraglutide by the European Medicines Agency in the UK. They are expecting generic entry in 2024 in the US. The drug size is still significant despite it being a first generation drug, though there could be transition to other GLP-1 drugs. But remember that there is shortages and other factors to consider there. $500 million plus is what is considered to be the market size for liraglutide in the US currently. Now, the impact for Biocon, which is considered to be positive, is that it helps validate the company's scientific capability in developing complex GLP-1 drugs, because that is going to be basically the new opportunity and how exactly companies are going to capitalize on it. And the UK liraglutide approval that Biocon had was the first generic approval for the molecule in any advanced market. And hence, again, it stands for the kind of capability that Biocon has in this space.
Okay, all right. Thank you so much for explaining that to us, Ekta. Now, let's get back to the conversation we were having with Mr. Shailesh Vasnani, the Vice President of Morbi Ceramic Association. Mr. Vasnani, good to have you back. Just wanted to get that answer again. What is the split between propane and Gujarat gas right now in terms of your input, and what is the pricing differential looking like?
The propane is consumed by 40% of the total volume of Morbi, and 60% our volume goes to Gujarat gas. The pricing of Gujarat gas is 45 rupees SCM landed to the company with the taxation structure, and propane gas is 1 rupees cheaper than what we get from Gujarat gas. But with this small marginal difference of 1 rupees, still our market or the Morbi industry would like to go with the Gujarat gas.
Okay, so currently the industry is preferring to use Gujarat gas. Now, coming to gas itself, could you give us a sense of the current average cost of gas for you when you're comparing it to the same time last year? And going forward, how are you seeing gas prices pan out?
Compared to the last year, the current prices are lesser by 12 to 15%. And we had the current talks with Gujarat Gas Companies Authority for the next coming 2-3 months. They are targeting a little decline in the gas prices. The same with the propane. So the prices are not going to be high, but there will be a little decline in the gas prices. And we are comfortable using Gujarat gas in these prices.
Okay, 12 to 15% lower already, and there is an indication that prices could go lower. Mr. Vasnani, I wanted to understand, spot LNG prices are still going higher. Yes, they did see a big decline in November, but from those levels they have surged. So is it basis the conversation that you have had with Gujarat Gas that they would go ahead and cut prices? Is it a surety or something that they have told you?
It's not about the assurity, but when we talked about the spot price of the LPG and Gujarat gas, They told that they will be comparing the pricing with the propane gas and they'll be competitive with the propane gas also. And yes, in the next 2-3 months, propane gas will have some price cut, and Gujarat gas authorities are telling that we'll try to match their prices. It will be competitive to the industry in any case.
Okay. One more important development that the industry is looking forward to, that we understand, is that there is a proposal to bring natural gas under GST. Could you give us a sense of how the current dynamics work, and do you benefit? And if you could explain to us in a quantifiable manner, how is it that you would benefit if that particular proposal does fructify?
If the government considers this under GST slab, the GST what we are paying right now will be 6% benefit to the industry. Now this 6% saving either could be going to the industry fully, or partially it could be absorbed by Gujarat Gas as their additional margins. But in both the conditions, the industry has a big benefit by getting this GST, because we are already paying the GST to the government and we can get the 6% rebate back. So 6% is a huge value. When you talk about the price at 45 rupees level, it will be at least 2.5 rupees per kg cut down on gas price.
Okay, so is there any rate that the industry is expecting as well? 12%, 18%? Has there been any indication on that?
You mean to say 12% rate down?
The GST rate on gas, has there been any indication on that? Because I know discussions are going on as well.
The indications are by 6%, not 12.
Okay, 6% GST on gas.
Yeah.
Okay.
Yeah.
All right, so that will be a benefit of around 6% for you as well, because you'll be able to take input tax credit, because that is something that you pay on your output already.
Correct.
Now, let's talk about your business itself, Mr. Vasnani. Wanted to understand how is demand looking right now. There were some reports that suggested exports are under pressure. Has that recovered?
Let me tell you about the exports figure. Last year, 2022-23, the exports was 16,000 crores. Ceramic tiles industry's total exports. But last year, we have closed at 18,700 crores. So it's a rise of 15% in the exports from year back. So we cannot say it is declining. It is growing at the speed of 15 to 17%. And this year also, we are forecasting 21,000 crores of the exports. So it is a growing market.
Mr. Vasnani, could you give us a sense, or could you break up, in terms of the total industry output, what is it that's going to the domestic market? What would be the proportion that is going to export market, and which market is actually growing higher for you or faster for you?
From the total market size, let me consider the total market size is targeted to be 75,000 crores, ceramic tiles industry in the whole. From this 75,000 crores, 19,000 goes to the global market, and the rest 56,000 goes to the domestic market. So the ratio is 75-25% is our global market, 75 is domestic. Now, as I told you, the growth in the export market is seeing 15 to 17%. And the domestic market growth is not more than 10-12%. So when we talk about the comparison of the growth, exports are growing a little higher pace. But the proportion of the domestic market is still 75%. So we cannot even lose, or we cannot have our loose hands on the domestic market even today.
Absolutely, that's understandable, because the bigger pie still goes to the domestic market. You spoke about exports doing well. There were reports, Mr. Vasnani, of US imposing duty on tiles from India. Do you think that's a possibility, or that was just election-related noise earlier?
There's a big possibility, because the manufacturers from US have already proposed this anti-dumping duty towards Indian companies. And the department has already started working on it. But yes, the bad part is it may be having an import duty from the Indian goods. But the good part is our total business, what goes to US, is not more than 9 to 10% from our total volume of 19,000 crores.
Thank you. Thank you so much for your time here and explaining, the entire dynamics of the ceramic industry for us. But we've run out of time for this particular interview. We'll have you once again to understand, once there are further developments in this particular space. Let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Earlier, we were net importers of steel.
From IT services to SaaS,
From consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India business.
Welcome back. Let's talk about more stocks now. 361 WAM is in focus as the company has acquired ET Money from Times Internet. Vamakshi joins us with the details of this acquisition and the acquisition math as well. Vamakshi.
Well, absolutely. 361 WAM in focus. They forayed into wealth tech. They've acquired ET Money from Times Internet, like you rightly pointed out. And in fact, this acquisition is coming in for a purchase consideration of 366 odd crores, out of which nearly 86 crores is the cash consideration, and remainder will be through issue of nearly 36 lakh equity shares of the company at 779.93 per share, which could result in a 1% equity dilution as per Jefferies. Let's also focus in on what exactly ET Money does. So it is a SEBI registered investment advisor. In fact, it is among the largest non-brokerage digital platforms for wealth management. It has 900k plus transacting clients as well as 100k revenue generating users. The AUM invested on the platform amounts to 28,000 crores, out of which nearly 25,000 crores is in the MF business itself. As far as the valuations are concerned, FY24, the combined revenue for Money Goals as well as ET Money stood at 30.74 crores. So this in turn values the acquisition, that is the price to sales, at almost 12 times. Jefferies also has come out with a report on 360 WAM. They've maintained their buy rating, target price of 930 per share. They highlight that this acquisition could add 18% to the company's recurring AUM and nearly 4% to the company's revenue. It opens up new customer segments for the company. So this is a big positive, and it also gives entry into the fast-growing SIP market. But on the flip side, they say that this is a highly competitive market and the synergies coming in from this acquisition could be limited. So on the back of this news flow, 361 WAM in focus today.
Thank you so much for that, Vamakshi. 361, after opening sharply higher, now trending near the flat line. But the next set of stocks that are in focus are the sugar sector stocks. They are surging in trade on expectations of a hike in minimum sale price. To discuss more on this development, earlier today we spoke to Atul Chaturvedi, the executive chairman at Sri Renuka Sugars. Listen in to what he had to say on sugar MSP as well as on ethanol blending.
The industry has been asking for a revision of MSP or minimum selling price, essentially to make this as a kind of an institutional, rather institutionalize the whole process, because FRP keeps getting increased and the minimum selling price doesn't move. So if this is increased, then it will send the right signal, and it will also give the signal to the farmers that their money is going to be assured in future, as the industry is not going to lose money. So I think this message, hopefully the government will probably revise this. Announcement by the Honorable Petroleum Minister has actually come as a whiff of fresh air. In fact, in December, when the cane juice ethanol and B-heavy ethanol was banned for making ethanol, so we were all very disappointed, and the headwinds were pretty high because sugar production was going up and it was adding on to our interest burden. But now this statement reaffirms that the government has not put the plan on the back burner, and the government is committed to ensure that the Prime Minister's target of achieving 20% blending by 2025 gets achieved. So what the industry is anticipating is that the price of cane juice ethanol should be more or less in tune with what the government is giving for maize-based ethanol. which is about closer to about 72 rupees, which means an increase of about 7 rupees from the current price. And similarly, the B-heavy ethanol price also needs to be jacked up in the same proportion, which would mean that it will now become something like 65, 66 rupees or thereabouts.
Well, most of the sugar companies today especially are doing quite well in the session. Sri Renuka itself up over 11%. Even names like Balrampur Chini are doing quite well. But, during the last half an hour, what's actually happened is that the Bank Nifty has seen a bit of pressure. It just dipped below the flat line, into the negative territory. The Nifty continues to hold up higher by around 0.3%. But that's all the time we have on this edition of Mid Cap Radar Mutual Fund Corner. When we return.
Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates.
Hello and welcome. You're tuned into this special edition of Mutual Fund Corner. I'm Sonal Bhutra, and in the Mumbai News studio today, we are going to talk all about individual mutual fund queries. So we asked you to write to us, maybe on social medias, and email to us as well, and we've got a lot of them. And joining me today on the show is Mrin Agrawal, financial educator and director at FinSave India. She's here to answer all your individual queries. Mrin, good afternoon. Thank you so much for joining us, and always a pleasure speaking with you. It's after a long time that we're speaking to each other. It's good to have you on the show. But let's not waste any time because we have a lot of queries to talk about as well. So let's get it started. Rajiv Rath is writing to us from Mumbai. He's been investing in mutual funds for quite some time now. He's been investing around 20,000 per month in funds like Quant FlexiCap, among PPFAS, FlexiCap. There are others as well. The list will come up for you in just a bit on the screen as well. He says he's planning to retire at 45 and has 1 lakh rupees to invest every month. Wants to know how he should invest his money. Well, it's a very specific table that is there for us on the screen as well. Mrin, tell us what you suggest Rajiv should do. Of course, he has his plans in place, retirement age in place as well. What is your suggestion?
So good afternoon, Sonal, and it's lovely to be here today. Well, first thing, I really like the fact that at 28, he's kind of figured out that he wants to retire at 45. So I think, first of all, that's good that he's already started thinking about it, because most people do not start even planning for retirement till their 40s. Now, basically coming to the funds that he's talked about, and when you look at his retirement goal and the sort of money that he's able to save for the period of time. So first thing is that it's a good amount that's getting invested, and you're really looking at building a corpus of about 6 to 7 crores by the time you retire, which is equivalent to about 2.5 crores today. Now, given the fact that he has a long-term holding, I would actually suggest more broad-based funds. So when I looked at the portfolio, of course, there are flexi-cap funds and there's a value fund, but I'm not too happy about the thematic funds, like, for example, the infrastructure and the reform fund or the non-cyclical consumer index fund. And one of the things that I don't like about themes and sectors is that they tend to be very, very concentrated. And in any case, the best stocks from these particular themes or sectors would be present in the broad-based funds, right? So one doesn't really need to take a concentrated exposure. And somewhere I believe that for the core portfolio and something that you're really looking for retirement, you actually need funds where you're just going to invest and possibly forget about it, right? So you don't want to get into funds which you have to track and where you have to take an active call to exit. And which is why I'm saying that please exit these sectoral or thematic funds and maybe look at investing in more of mid caps because of the fact that there is a long-term holding. He has specifically asked about mid-cap funds as well. So I would suggest either Kotak or Mirae mid-cap. And he could even look at adding some amount into small cap since he does have like a 17-year time frame. And so he's at the right age. He has the risk-taking ability as well.
Okay, all right. That's a very helpful answer, Mrin. And, we'll be talking in greater detail about thematic funds during the later part of the show as well. But we have the next query and it's on a call. Manoj Gupta is calling us. He's on the line from Noida. He has made investments in mutual funds and wants to invest another 2 crore rupees in next 2 years. Manoj, please go ahead. Tell us about your portfolio and 2 crore more for your retirement funds. Tell us more.
Yeah, actually, I have invested in the HDFC index fund, Nifty 50 index fund, 30 lakhs. I have invested Mirae assets, large and mid cap, 15 lakhs. I have invested Mirae asset, large cap, 10 lakhs. I have the Parag Parikh, 3 lakhs. I have the hybrid fund, ICICI equity and debt, 10 lakhs. And I have the ICICI balance advantage, 6 lakhs. And HDFC balance advantage, 3 lakhs. And around 20 lakhs in the short-term debt funds, and 30 lakhs senior citizen saving scheme. Right now, it's a 1.5 crores corpus I have, and 2 crore corpus I have to receive for my provident fund, which I have to invest. My idea is to invest in the index fund, Parag Parikh Flexi Cap Fund, and Mirae Assets, large and mid cap funds, and balance around 1.2 crore in short-term debt fund and arbitrage fund and Parag Parikh dynamic asset allocation fund, so that I can withdraw the fund through the SWP of 1.2 lakh per month.
Okay, all right. Mr. Gupta, thank you so much for actually providing all the details, because that helps our experts as well to give pointed answers as well. Mrin, what would you suggest should Mr. Gupta do?
All right. So specifically talking about the 1.2 crores that has to be used during retirement, right? So the point is that when you're looking at reinvesting the Provident Fund corpus, and somewhere I think he had also mentioned his expenses of 1.2 lakhs per month, right? So the best way to actually do it is through short duration debt funds. And the reason that I'm suggesting these and not suggesting a dynamic asset allocation fund or a conservative hybrid fund is because that element of equity that is there in those particular funds is going to make it volatile, and it's going to be very difficult to structure a fixed a fixed withdrawal every month in these cases, right? So you have more stability with the short duration debt funds than you have with any fund which has an equity exposure. And hence, because of that stability, you are sure that you're going to be able to withdraw that amount each and every month in the SWP, which may not be the case in case of the a balanced advantage or a conservative hybrid fund or any fund that has any equity exposure into it, right? So that's what I would say as far as the SWP is concerned.
Okay, all right, take that point, and thank you, Mr. Gupta, for joining us on a call today with your query. Moving on now, Souvik Saha is writing to us from Mumbai. He's been investing 5,000 rupees in Quant Active Fund, 4,000 in Quant Mid Caps, 2,000 rupees in Parik Flexi Cap Fund. He says he wants to know whether his portfolio requires any changes or not. Actually, there are quite a lot of plans, or I would say funds in his portfolio. They will come up for you on the screen. A lot of exposure to Quant. There's SBI Long-Term Equity, ELSS as well, and the other names that will come. So let me come to you now, Mrin. What do you suggest? Because there are a lot of funds in the portfolio already.
Yeah, so first and foremost, honestly, nobody needs more than 5 to 6 funds in the portfolio. And remember, when you're looking at diversifying, you also need to diversify the style of management, right? So when you're investing with the same fund house, there is bound to be overlap of stocks. And when you look at, for example, Quant Active and Quant Mid Cap, you see an overlap of 41%. So 41% of the stocks are the same. Again, when you look at Quant Active and you look at Quant Small Cap, 33% of the stocks is the same, right? So certainly, I think some bit of consolidation needs to be done out there. Another fund that I would actually not recommend is the multi-asset fund. And the reason that I'm saying to exit this particular fund is really because when you already have a diversified portfolio, you really don't need a multi-asset fund in the portfolio, right? So what I would suggest is that look at exiting Quant Midcap and Quant Multi-Asset, and maybe, just reallocate that among the PPFAS FlexiCap and the Quant Small Cap, right? So just this bit of reallocation that needs to be done in the portfolio.
Okay, all right. So that point is right, that maybe you think that when you're investing in different funds, that is leading to diversification. But if it is in the same fund house, maybe not so much because of the overlap that Mrin just explained. Let's go across to the next query. Khalid writes to us from Mumbai. He's currently investing 3,50,000 per month via SIP route. He wants to know if these funds are right for a long-term perspective of 15 to 20 years and if his portfolio is well balanced. Now it's 3.5 lakh of SIP per year. I would really like to know what are the future plans here and what age he is at. But the funds are for you on the screen. Mrin, what is your suggestion here?
So I think he has a lot of work to be done because he's got 21 funds in the portfolio. That is just too many funds. Even for me to actually look through it, I was just wondering, oh my God, 21 funds, right? So this is just pure over diversification, because the other thing that I noticed was that there is one fund in every category that there is possibly, right? And I think he's been doing a lot of NFO investing, because I see a lot of the factor-based index funds. So like within the index fund space, you have the regular broad-based indices like Nifty 50, Nifty 150 mid-cap, Nifty 250 small-cap, right? You also have factor-based indices which use a factor, for example, like they focus on momentum or low volatility or value or quality, right? And he seems to have all of these things. I think other than quality, I think I saw every other factor that's possible, like even Next 50 is there in the portfolio, right? Now, I also see sector funds. So again, there's a sector fund, there's an infrastructure fund. I also see, again, a lot of exposure to quant funds, right? So again, the overlap issue that we've talked about in all the other cases. So, when you are constructing a mutual fund portfolio, you really don't need all these categories, right? I mean, just 5 simple categories: flexi cap, mid cap, small cap, maybe an ELSS fund, and maybe And of course, some debt funds is all that you need in the portfolio. You really don't need anything other than that. And again, having 21 funds, having various categories doesn't help you in increasing your returns, right? And this is just pure over diversification, right? So, when you're looking at these funds, and while a lot of these NFOs look very appealing, one of the things, most of them do come out with really nice presentations, which are available on their websites. And they do show you past performance or simulated performance. And it's always nice for you to actually check that, has the fund been able to, or the strategy, right? Has it actually been able to consistently outperform a simple Nifty 50, right? Now, if you're not seeing that, honestly, I don't see any reason to invest into it. So I would say certainly please exit from all of these factor-based funds that you've invested into. Maybe you could keep the next 50 index fund, but all this low volatility and quality and all of these funds, please exit. And look at identifying a couple of funds in each of the categories, which is mid cap, small cap, flexi cap, and look at just reallocating into that. So that's already there in the portfolio. For example, I see Nippon India Fund, or for example, I see Quant Small Cap Fund that's there. I see Access Small Cap. So you already have a lot of small cap. Try to bring in some flexi cap, and maybe reallocate some into the mid cap fund as well. And that's about it. But just focus on having these three simple categories, and that should be good.
No, it's as important to know where not to invest as much as we want to know where to invest, right? Thank you, Mrind. This has been very helpful. Also because the number of schemes, the number of funds in that portfolio was really huge. But we'll do one thing. It's a very interesting conversation. We'll take a quick break. On the other side, we'll come back with Mrind to answer all your individual queries.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
నేను కొణిదెల పవన్ కళ్యాణ్ అనే నేను ఆంధ్రప్రదేశ్ రాష్ట్ర మంత్రిగా నా పరిశీలనకు వచ్చిన లేదా నాకు తెలియవచ్చిన ఏ విషయాన్ని నా కర్తవ్యాలను సక్రమంగా నిర్వహించేందుకు అవసరమైన మేరకు తప్ప ప్రత్యక్షంగా గాని పరోక్షంగా గాని ఏ వ్యక్తికి లేదా వ్యక్తులకి తెలియపరచనని లేదా వెల్లడించనని దైవ సాక్షిగా ప్రమాణం చేస్తున్నాను.
ఉండబోతున్నారనేటువంటి ఒకనొక కాంక్షతో చూస్తున్నటువంటి సందర్భం.
हमारे माननीय यशस्वी प्रधानमंत्री.
Welcome back. You're still tuned into MF Corner. We still have with us Mrind Agrawal to answer all your queries. Mrind, there are a lot of them. I don't know if we'll be able to cover all of them on the show today because they're such interesting ones. But let's talk about the next one. Smita Mohta is writing to us from New Delhi. She wants to know the ratios to check before she starts investing in any mutual fund, as well as their importance for an investor. We have spoken about it in great detail otherwise as well. But do you think there are any specifics that a new investor should definitely look at while investing in mutual funds?
Well, on the index fund side, there is a ratio known as a tracking error, which basically tracks how efficiently the index fund is, mirroring the index. And this information is available in all the fund fact sheets of the respective index funds, right? Now, when you're looking at other fund categories, specifically on the equity side, there are many ratios that we as advisors look at, and but in reality, these information is not really easily available in the public space. So while there is a ratio known as a Sharpe ratio, it gives you what is the risk-adjusted returns. So it's a measure of how well the fund is actually performing versus the risk-free returns. So that's one ratio that can be looked at, but it cannot be looked at individually, and it cannot be looked at only for one time period. You always need to track these ratios over a period of time. And yes, the other thing that you of course need to look at when you're evaluating past performance is not to look at point-to-point returns, but to actually look at rolling returns, because that gives you a better measure of what is the consistency of performance. So unfortunately, the information that we need to measure the consistency of past performance is not really available in the public space. And to that extent, investors will have to then look at especially those who are doing DIY investors would have to look at, sources or like, for example, Morningstar, which is a global leader for mutual fund research. That's one site that you could look at to do some and use some of the tools out there to compare the mutual funds.
Okay, all right. So if you're doing it yourself, there are a lot of publications available. Otherwise, you can always go ahead and speak to your wealth advisor as well. Let's talk about the next one. Samiksha writes to us from Chennai. She says she has a monthly SIP of 5,000 each running in DSP Index Fund, Invesco Large and Mid Cap Fund, SBI Large and Mid Cap Fund, and 2,500 rupees SIP in Mirae Asset Large and Mid Cap Fund. She's also invested a lump sum amount in Mirae PSU Bond Index Fund and a Sensex based index fund as well. She wants to know if her portfolio requires any changes. Yes, there's a lot of large cap, but there's debt fund, there's index fund. So it's a mixture of a lot of funds here.
Yeah, I think, as you said, the exposure to large cap stocks is very high because you have the large and mid cap funds, you've got the Sensex based index funds, you've got DSP index fund. I don't know which index fund she's referring to over there, but essentially the exposure to large cap stocks is extremely high. So I think some diversification is required. And it would be a good idea to look at consolidating, possibly, keeping the index fund, of course, keeping the debt fund, but really looking at consolidating these large and mid-cap funds maybe into more mid-cap funds, provided she can take the risk.
Okay, all right. So should have some exposure to mid-caps as well. Right now, it's a mixture of large and mid-cap funds over different funds as well. Okay, Imran, let's move on to the next one. Aditya writes to us from Kerala. He asks if it is sufficient to have most of the allocation towards multi-asset fund if they are building a portfolio, or should one have different kinds of funds in their portfolio to talk about diversification, or at least diversification in their investments? What do you suggest?
Well, you could do either. Look, if you want to make it really easy for yourself and you feel that, okay, I just want to have a couple of multi-asset funds which take exposure to equities, bonds, gold, maybe some of them to real estate, maybe some of them to international equities, you could do so. The thing is that if you are looking at a multi-asset fund, please look through the fund very, very clearly to understand whether it suits with your risk profile. Now, this is because you have multi-asset funds today where some of them have only 35 to 50% exposure to equity. And there are others which have more than 65% exposure to equity, right? So, not all multi-asset funds are the same. You cannot assume that every multi-asset fund is going to have equal allocation to various asset classes. There is a different allocation, and also because of the different allocation that there is to the various asset classes, the taxation is going to be different. So, for example, it's only funds that have got above 65% in equities which are going to have equity taxation, right? Those between above 35% to 65% are going to have long-term capital gains after 3 years. So the taxation is also going to differ, right? So hence, please, understand where the fund invests and what is the sort of allocation and how are they allocating to the various asset classes before really choosing a multi-asset fund.
Okay, all right. Take that point, Mrin. Let's go across to the next one. Kavita Venu is writing to us from Chennai. She wants to know if she should invest in thematic funds as a first-time investor. She is a new investor and wants to know if manufacturing and defense themes are a good pick. Also because we've seen a lot of new NFOs in these two sectors itself, right? Bryn, what do you suggest?
This is absolute recency bias, right? Whatever we read about recently, we are going to invest. So, no, Kavita, I think as a first-time investor, please remember that whether you're a first-time investor or a regular investor, it's always good to be in broad-based, diversified funds, because what happens in thematic funds is that you end up being very concentrated in a particular theme or a particular set of stocks. And essentially, while we believe that there is, and if we actually believe that this theme is going to do well, then in any case, most of the, a lot of the high conviction stocks would be there in the broad-based fund. So you really don't need to take a concentrated exposure. The other thing also, with the themes is that the theme should actually play out. I mean, it could take much more time than anticipated. And the theme should be able to play out for a long period of time. Again, all the companies, that the fund is having should actually benefit from this particular trend. And even though the theme might be great, like market returns may not follow. So classic example is of healthcare, where 2020, the healthcare stocks did well, but 21 and 22, they were at the bottom, right? So, and also when are you entering into this theme, maybe a lot of the returns have already come in this particular theme. So you don't know, whether there's enough value that's really left in this particular theme. So hence, I don't actually recommend any thematic or sectoral fund. I still think being a new investor, please start with a simple Nifty 50 index fund. There are a lot of them that are available. You could look at ICICI Nifty 50 index fund, for example, and start an investment there.
Okay, all right. And generally, all of you have been saying that if you're a new investor, it's very important to understand market cycles, the sectoral moves before investing there. So not really the best choice there, but your advice here has been really helpful. We do actually have some queries left, but no time left, Bryn. So we'll connect with you very soon and with more queries, more callers, more tweets about mutual funds because this investment has just been growing with now SIPs touching that 20,000 crore mark as well. Thank you so much today for joining us. Okay, all right. With that, we'll do one thing. We'll take your leave on this edition of MF Corner today. Keep writing to us, keep sending us your queries, and we'll get them answered from our experts on the show. But right now, stay tuned for Closing Bell to take you through the last hour of trade.
मुद्दतों में होती है शख्सियत उनके जैसे, अंदाज ये बयान से हो इतिहास हो जाता है। हमें गर्व है कि हम वो पीढ़ी है जिसने इतिहास बनते देखा है। गौरवनीलु हमारे भारत के यशस्वी प्रधानमंत्री श्री नरेंद्र दामोदर दास मोदी जी को हम सब के तरफ से अभिनंदन और स्वागत करते हैं।
నారా చంద్రబాబు నాయుడు అనే నేను విశ్వాసం విధేయత చూపుతానని భారతదేశ సార్వభౌమాధికారాన్ని సమగ్రతను కాపాడుతానని
గౌరవనీయులు కొనిదాల పవన్ కళ్యాణ్ గారు
నేను
కొనిదల పవన్ కళ్యాణ్ అనే నేను శాసనం ద్వారా నిర్మితమైన భారత రాజ్యాంగం పట్ల నిజమైన విశ్వాసం విధేయత చూపుతానని భారతదేశ సార్వభౌమాధికారాన్ని
गौरवनीय नारा लोकेश गारू,
What does it take to
It's a green looking screen as far as the Asian markets are concerned.
There's good progress on inflation with growth.
Double delight for the Indian economy. The inflation number has come in a tad lower than expected.
And supports there come in at 49,625.
Be data dependent, they're going to be empirically driven.
Regulator has come out with the final regulations when it comes to a surrender value.
Nifty Bank is up 170, that's about 1/3%. 50,055 is where the Nifty Bank is at.
So giving them a tax break is not going to give a boost to any investments.
It's BC Asia Investment, BC Asia Growth, as well as BNP Paribas. All of these funds likely sold in today's block deal.
Oracle Corp, after its earnings, the very strong reaction in the stock there as well.
And what we're seeing is some consolidation, though the bias continues to be positive.
There are some visuals coming in of Rajnath Singh, in fact, taking charge as the defense minister.
We've come off the highs, but 88 points higher on the Nifty right now. Mid caps are surging as well.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that is the day so far, and it is once again a lot of green overall. 70 points in the Nifty is what you have. This is Thursday afternoon. Markets consolidating at high levels, but higher, I think, is the key word once again. I'm Prashant. With me, my colleague Surabhi, and Mangalam is with us as well. Guys, hi, good afternoon.
Hi, good afternoon. I guess the markets have gotten into a bit of a pattern, right? Last couple of days. We start higher, then try to hold on to most of those gains.
Yeah.
And the mid caps have been doing better, and that remains intact today as well. So sugar, a couple of defense names, lots of individual mid caps and small caps holding out quite nicely.
I think the market's made its mind. 23,400 on the Nifty is one of those lines where you just touch and go back again. And that's what they've done with 50,000 on the Nifty Bank as well. I was just looking at some data, in the last 8 sessions, the Nifty Bank has crossed 50,000 on an intraday basis 5 times. Closed above it just once, and that was what day? June 3rd, the exit poll day. That day everything closed higher, but post that, every time an excursion upwards of 50,000 on the Nifty Bank wasn't accepted by the end of trade.
Mangalam is suggesting we need another poll.
I'm not suggesting anything of that.
Okay,
the only poll we'll need is there should be a 4-day work week. 100% voting for that.
Okay, well, 60 odd points now. So 23,391, 392 is where we are at. So this is looking a decent day. When you look at 60, 70 points, when you look at the percentage change, 1/3%, 1/4%. So it's largely higher, but as I said, consolidating at these levels now. Bank Nifty is absolutely flat. Mangalam, of course, already outlined the levels, etc. It's a very sugary screen. It's actually, you could spot 20, 25 sugar names out there, and there are that many listed actually, which are all up between 10, 15, 20%. So lots and lots of action there. We'll touch upon that sector specifically with Manisha in a bit from now. And mid caps and small caps aren't having it all that bad. I mean, the indices are outperforming the large cap indices. And the last I checked, you had about a 0.5% gain on these 2 indices. So that's the flavor. Market breadth is close. I mean, I think about 400-500 stocks separate what's up and what's down, the advance decline ratio. So it's not one way or the other. It's not overwhelmingly positive, but it is somewhat positive. The gap has narrowed actually. If you just see over the last couple of days, it's starting to come off a little bit, but that's also because markets have done so well, and there is in certain pockets some profit booking which has also been emerging. Surabhi.
Yeah, absolutely. Sugar, definitely a very sweet space today. A lot of talk about the prospects of an MSP increase. We'll talk about that as we go forward. And life insurers are very, very interesting. It seems the markets, taking the finality of it rather well, that at least we have the regulations out. It's, it is a little lesser than the worst case scenario that was, at one point in time being penciled in. And there's a bit of a relief rally playing out on stocks. HDFC Life, ICICI Prudential Life, these are stocks on the upside. Most of them, even SBI Life is off the lows actually. SBI Life is still negative, but there's some traction on the stock that's building up. So that's how the life insurance stock has space has played out. Aside of that, on the Nifty, what's managed to work well are a couple of IT names. I've got an LTI Mindtree on the upside. Infosys is putting on some weight as well. Then you have a mix of economy and consumer stocks doing okay. L&T is up about 2%, contributing quite well. Titan sparkling bright today. Nestle, because it's final that there'll be no additional higher royalty going out to the parent. So with that finality coming in, again, the market seems to be cheering that. So on the Nifty, we're not that bad off. It's just that barring Nestle and barring Titan, some of the other FMCG stocks, by the way, there's a bit of a sell on that tactical trade post-election that seems to be playing out. Because if you look at Lever, Britannia, look at other names like, Marico, Godrej, most of the other FMCG names actually on the downside, Mangalam, today.
Well, so on the FMCG tactical shift, what was interesting is that immediately after the results came by, people started going long FMCG, hoping that there would be, there would be some sort of sops given for pushing consumer demand and all of that and stuff. At the same time, what we saw the other side, we saw a big decline in all the infra, defense and waterways sort of PSU theme. Then, as people figured out that there would be continuity, people started going long on the PSU, defense and rail theme once again, but they forgot that, they were long on FMCG as well. So maybe some part of that is unwinding. Be that as it may, from the monsoon standpoint, from what the management commentary was, and today we had Manoj Menon of ICICI Securities join in as well, said that there is a fair amount of under ownership, and the valuations, while FMCG have never been cheap, they're not too different from what they were on a 5-year, 10-year average as well, which actually is a positive, largely because we had seen a big multiple up move in the last 3 years itself. So if you discount it for the last 5 or 10 years, then they are not particularly bad, and which is why maybe a bit of long unwinding aside, the monsoon looks good for all these consumer staples. But having said all of that, the next 1 hour we'll also have the Nifty weekly options expiry, and out there the tug of war is pretty clear. 23,400 is where the action is on both the call as well as the put side. This is a time when a lot of the options are written, and that is something that is reflective in the kind of movement that we're seeing in India VIX as well. So 23,400 put still in the money, but has a premium of close to around 20 rupees. You pull up the 23,400 call, and that has a premium of around 12 rupees. So 30 points on either side of 23,400, which makes it around 23,370 to 23,430 is what the expiry range the street is bracing for right now. Let's see where it goes, given the up move that we're seeing in a couple of these heavyweights like HDFC Bank. If that can play one of those innings in the last hour of trade, then maybe the Nifty Bank goes above that 50,000 mark and the Nifty above that range.
Absolutely. So let's see how this plays out. By the way, Zomato is up 3%. I'm just curious, guys, do you all order more if there are sporting events underway? I mean, with the T20 World Cup, are you ordering more, Prashant? I don't know. Mangalam, are you ordering more?
Not me. Mangalam, I think, is a bit of a
but
health.
I still order. I still order. In fact, the only thing is that these games, they go until very late in the night, and that time it's not very healthy to eat out or eat junk, etc.
Which is why the plain simple narratives of IPL is starting and this is starting, I don't know if that works, but anyway, for what it's worth, the stock is up about 3%.
India-Pakistan match, a lot of pizzas were sold. That is the word coming in from Samir Khetarpal.
Fair enough. All right, let's quickly get this show started. Then we've got Mitesh Thakkar joining in as always. So kick it off with some trading ideas. Mitesh, good afternoon. Still a very green screen. What would be your top trades?
Good afternoon. So I think the market is just about managed to hold on to the levels of around 370, 350 zones. I think we're just hovering around this 50-point band, and It's been a quiet day compared to the other days, so that's fine. I think maybe the movement will happen in the last 45 minutes. But since we don't have any signs of a breakdown, what I would suggest is that traders now bring their stop loss slightly tighter to about 23,310. And as long as that is not being broken, I think maintain a positive bias. Again, expiry days are difficult to guess, but we go with the overall structure, which is on the positive side. On the stock specific basis, I have one buy and one sell. On the buying side is Ramco Cement with a stop at about 855 for targets of 900. And on the sell side is Steel Authority, which is sale. Keep a stop just above levels of 151.75 and look for target of 144.
All right, Mitesh, we'll come back to you in about 20 minutes from now. But we also have sugar stocks. They've definitely been the flavor of the day. A big move, double-digit gains in a lot of these names that we're seeing, including the likes of Sri Renuka, etc. There are multiple expectations, one of a hike in MSP and perhaps some sort of positive news coming in on ethanol as well. Manisha joins in with all things sweet. Manisha.
Oh, yes. Well, there are absolutely three things that the industry anticipates that they will see as a positive for the sugar industry. I mean, they have been long waiting for this also, and this has been impending as well. So one, as you mentioned, is the hike in MSP. Remember, in last 4 years, we've seen constant increases in FRP, but no increase in minimum selling price of sugar. It has been holding steady at around 31 rupees per kg, and the market has put it out as 41 rupees per kg of an expectation. Well, there have been some source-based information coming in from the ministry officials suggesting that yes, there will be a hike, but it would be reasonable and perhaps not at 40-41. But whatever the industry gets perhaps would be on the positive, as they have been stagnant at 31 for last 4 years now. The second important point really is about ethanol. Now, the new ministry, as having taken charge, we've seen initial statements come in about in positive for ethanol. In December, after those restrictions on ethanol, with the kind of investments that the sugar as an industry has made, it was a bit of a setback and a pullback as well. But now, as the minister said, that 15% of ethanol blending for the month of May has been already achieved, and that the ministry sees that it is on target for 20% blending by the end of 2025. There was also a quote suggesting that out of 81,000 odd PSU outlets, nearly 13,000 already have E20 being delivered out. So the expectation is that if we are looking at a 20% blending, the requirement for ethanol would be to the tune of 1,016 crore litres, and that is what has been positive for the industry. And the third thing that is supporting the sugar industry is the fact that the markets also are anticipating an increase in the ethanol pricing. With FRP having been hiked for the next season, the ethanol price hike is what the street is awaiting for cane and also for B heavy, to the tune of around 62 to 65 rupees therein. So three things on cards, whatever comes in, and as soon as the other ones come in as well, is going to be quite positive.
Okay, all right, got it. So that's the expectation on which sugar stocks are definitely getting excited. Though, I mean, with food inflation being so sticky, will that MSP hike really come through or not? Well, we'll wait and watch. Thank you, Manisha, so much for putting that in perspective for us. In fact, earlier we did catch up with Atul Chaturvedi, Executive Chairman of Sri Renuka Sugars. Listen in to his take on the issue.
The industry has been asking for a revision of MSP, or minimum selling price, essentially to make this as a kind of an institutional, rather institutionalize the whole process, because FRP keeps getting increased and the minimum selling price doesn't move. So and if this is increased, then it will send the right signal, and it will also give the signal to the farmers that their money is going to be assured in future, as the industry is not going to lose money. So I think this message, hopefully the government will probably revise this. Announcement by the Honorable Petroleum Minister has actually come as a whiff of fresh air. In fact, in December, when the cane juice ethanol and B-heavy ethanol was banned for making ethanol, so we were all very disappointed, and the headwinds were pretty high because sugar production was going up and it was adding on to our interest burden. But now this statement reaffirms that the government has not put the plan on the back burner, and the government is committed to ensure that the Prime Minister's target of achieving 20% blending by 2025 gets achieved. So what the industry is anticipating is that the price of cane juice ethanol should be more or less in tune with what the government is giving for maize-based ethanol, which is about closer to about 72 rupees, which means an increase of about 7 rupees from the current price. And similarly, the B-heavy ethanol price also needs to be jacked up in the same proportion, which would mean that it will now become something like 65, 66 rupees or thereabouts.
Okay, all right, that was Sri Renuka earlier. By the way, some commentary coming in. This is exclusive information we're picking up on the upcoming GST meeting. Fitment panel could be looking at bringing ATF under GST at 5%. This is, of course, a long-standing issue. It's been on ever since GST. I mean, the whole framework was institutionalized. ATF was out. And let's see what they do with the gas, because there was a lot of talk about bringing gas also under the ambit of the GST framework. The meeting, of course, is on the 22nd. So more on this. We'll try and get our colleagues to give us more inputs on this as we go forward.
The street is taking the ATF thing positively for a couple of these airline players. So we have Interglobe Aviation, which was mildly in the red, has now slipped, spiked up into the green. GSTC may consider a review of GST on online gaming, and if that were to happen, then we'd obviously see some sort of relief coming in for names like Delta Corp. There would be Nazara Tech. We'll keep an eye out on how that pans out, and more importantly for gas as well. So lot on the street were anticipating that there could be some sort of GST related announcement coming in on the gas sector, and as a result of which all these gas stocks were already in focus. We had a couple of brokerage notes as well. What we understand, and we'll try to get our correspondent in as well, whether gas is on the agenda or not, and if it is on the agenda, then definitely it would be seen as a sentiment positive. Then we'll obviously await what the outcome is.
You're absolutely right, Mangalam. ATF under GST, I think that's going to be actually a very big deal if it does happen, because for fuel, petrol, diesel, etc., state taxes are quite significant. I mean, that varies from state to state. And if that is actually made uniform across the board at a reasonable rate, I think, I think for the last 10, 15 years, this has been a demand. The fuel taxation needs to be sort of resolved, it needs to be kind of made uniform. And if that happens, I think, this is certainly very, very good news. We'll have.
There's also Delta Corp surging. Just want to point that out on the gaming piece of it.
That would be a positive, but also, we have clarification on the gas front as well. We do understand that there is going to be consideration of putting gas under the 12 or 18% GST slab as well. That flash should just come up for you. We'll try and touch base with our correspondent out here on this one. My sense is Timsy will be joining us shortly, either Timsy or Sapna. And the gas flash should come up for you. And that's the reason why I see Gujarat Gas has moved to the high point of trade. We are seeing some traction in other names as well. So, if that was to happen, then that would be a positive, because that's what brokerages said. In fact, just an hour ago, we had the Morbi Ceramic Association join us as well. And they said that they currently pay about 6% additional, as GST, for which they don't get any input tax credit. Were that to happen, then they would immediately get a 6% delta. They could either use that to lower their prices by 6% or see a margin improvement of 6%. Even if the truth is somewhere in the middle, that is a positive for all these ceramic players as well. So that would be, something like a Kajaria, Somani or Sera, all of them have been.
So three legs to this GST story that's breaking on your screens right now. One is on gas, bringing gas into the purview of GST. The second is on ATF, getting ATF into GST. And the third is gaming, online gaming. Now, I just want to point out, a bit of a caution on Delta. Delta is surging through the roof right now. But we need to remember, Delta is talking about not real money gaming with respect to online games. It's more a play on casinos. Now, will the government look at both equally? Because in the past, there's been a distinction, though there is a tendency to club both together. But by the way, Nazara, which is not reacting that well, Nazara in our last conversation told us categorically that they're looking to build on their real money gaming side in a big way, including by looking at acquisitions. They believe that even at 28%, the GST news was done. It was sort of absorbed by the market, and it was time to move on beyond it. But if there's a cut in GST on, which is 28% right now on real money gaming, that would be great for Nazara. Though the market's taking its time to digest that news, it's reacting more to Delta.
So just a thing on Delta, that the biggest impact on Delta came in when the GST Council had earlier recommended casino, horse racing and online gaming will all be taxed at a uniform rate of 28%, and tax will be applicable on the face value of chips purchased in case of casinos. Is that going to be revised? Doesn't look like. There would be perhaps some sort of push towards online gaming. If that were to happen, then it would be a positive, but not as big a positive as the stock price move would suggest. And the second thing is that they already have GST claims worth nearly 23,000 which are under contention, for which the company has filed, review petitions.
To the Supreme Court, I think.
The matter is in the Supreme Court. Lawyers believe that there is no need for them to actually provide for that 23,000 crores because they're confident of winning. So if that were to happen, that is something which is already known by the street. So it's just an incremental positive if there are some rules that come in for online gaming. The bigger positive would be them actually going ahead and looking at an IPO for their, online poker business, which is Adda 52. So that would be a positive, but not something that would change the rules of casino or offline gaming dramatically. So that's not happening.
Yeah, I mean, unless we get to hear from our colleagues that this could be a change applicable also to casinos. So online gaming, casinos will be at par, and we're talking about both together. So we need to sort of see how that plays out. We've got Deven Choksi joining us on the show. Deven, lots of news breaking actually. We started with sugar, but now we've gone to all these other segments because of the news on the screen. Let's actually, because these stocks are reacting so sharply, let's start first with Delta and Nazara. And what do you make of them, and whether you have any interest here? Because obviously they're very sensitive to which way regulation goes.
Yes, good afternoon. Well, I think fundamentally, whenever I think the input tax credit is available to whichever the consuming sector, it has to benefit the industry in general. I think that is how I will look at it. Having seen, I think the entire subject for you were discussing about the gas prices, and you were discussing about the subject consumption of the natural gas for the gas for the production of, I think, all the ceramic materials and all. I believe that I think this is where probably I think the user industry would get benefited most. And on one side, we remain distinctly positive about I think the building material segment as a whole. On the other side, I think the input tax credit available to ceramic industry in particular, I think could mean significant amount of gain. Consider the fact that I think more than 20,000 crore worth of exports, and I think if you are ended up getting the benefits from the local sales as well, put together, I think this could be, I think, the real big money that the industry could save as far as I think the ceramic business is concerned.
Okay, all right. Deven, we have to take a quick commercial break here, so allow us to do that. By the way, another 1 lakh crore market cap company in the mix now. Shriram Finance market cap is hit 1 lakh crores. It used to be the cheapest a large NBFC. I think it's the second largest NBFC still. But it's done phenomenally well, the share price, and another 1 lakh crore company. I think we've got 4 or 5 now, along with the others.
Not only the latest entrant to the 1 lakh crore club mark, but also the latest Nifty edition. Now Nifty company
edition as well, yeah, absolutely. We'll take a break here. We are back. We'll also have Jonathan Garner, who's waiting by. He's, of course, joining us from the sidelines at the Morgan Stanley India Conference. Stay tuned.
Largest startup platform. It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube.
Okay, welcome back. Jonathan Garner is now joining us. He's Chief of Asia and Emerging Markets Equity Strategist at Morgan Stanley. He's joining us from the sidelines of the Morgan Stanley conference, which is being held here in Mumbai. Jonathan, great to have you back on the program, back on the channel. Thank you for your time. Prashant this side. We were just sort of, before we came to you, we were looking at those sort of news lines which were coming through, that the GST Council is already starting to look at rationalizing tax rates on various things. I mean, I'm assuming the big talking point, of course, at the conference is the new government and the shape and form of things that we will see in terms of policy. Just if you can sort of reflect on some of the conversations you've had, and what are people sort of coming to you in terms of questions and even answers with regards to India and the market trajectory?
Well, I think the key thing to emphasise is continuity. So we have continuity in the finance ministry and in other ministries. Obviously, some changes, but I haven't looked at the details of what you're just referring to. But the aggregate fiscal stance has been a key underpinning of India's performance. Relatively contained fiscal deficits, reorienting spending towards capital expenditure and away from subsidy expenditure. Containing the size of the civil service and these sorts of measures. And that's something that investors are looking to see continued under the new government.
Right, Jonathan, good to see you in. Just wanted to know, one of the things, thesis that Morgan Stanley has is that going forward, the earnings will actually grow 500 basis points above consensus. The street is factoring around 15 to 16%. You guys believe that for the next 4 years, India's earnings could grow by almost 20%, and that would be the highest ever rate of growth for India's earnings in any period of history that you look at. What do you think will bring this alpha as against what consensus is expecting?
Well, it's really to do with the building blocks. So at the macroeconomic level, we've got a GDP growth environment that has been surprising on the upside, as you know, so 7 to 8% real GDP growth. Probably the aggregate sort of inflation rate, let's say around 5%. So that gets you straight away to sort of a 12, 13% nominal GDP growth environment. And then when we have corporates that are sort of have business models that are geared to the parts of the economy that are probably growing more rapidly overall than that, so consumer discretionary, industrials, financials, a sector like real estate, for example, that's starting to become much larger, it's quite realistic to think that you can get a 20% EPS CAGR. And in fact, India is already delivering. If you actually look at the last 3-4 years, we've actually had dollar earnings per share growth in India that's about 60 percentage points faster than overall emerging markets. So it's a complete breakout in earnings performance by India already.
Jonathan, hi, good afternoon. Great to have you on the show. So, question on foreign participation in Indian markets and what you hear around you. Foreign investors have been quite conspicuous by their absence, really. They've been buying Indian bonds, but not so much Indian stocks. One explanation that we got was that the US market itself is doing so well, so it's more about buying home equities. The other talk about is always about China, whether there's some more money flowing there. But what in your sense is leading to this underperformance, purely in terms of flows? And do you see that changing in the second half for India?
In a word, yes, but I think it's worth spending some time to sort of disaggregate the flows a little bit, because I think there's often some sort of confusion about what's going on, and this year has been quite an interesting one in that regard. So traditionally, when you talk about flows vis-a-vis India, you're often really been talking about FII flows as that subcomponent that is from active emerging market fund managers. Now, that universe, the dedicated EM fund universe, is not really growing. There's significant changes happening within it, so India's actual relative share in that index is going up whilst China's declining. But what you are seeing now happening is a shift of global investor portfolios towards Japan, towards semiconductors, in particular AI-related names. And so that has, in a sense, absorbed a lot of the new money flows this year. And of course, we've had the election, so there's been uncertainty about the direction of India. Now we have the election and we know what the result is. And so I think actually not only are we likely to see some stabilization from the more traditional EM side of things, but what's really important is that as India's outperformed for 3-4 years now, its share of global equities is up to almost 2 percentage points, 200 basis points in the benchmark. When it was just 50 basis points 5 or 10 years ago, it was within the tracking error of most truly global fund managers. So they could afford effectively not to own an Indian stock. But that's not the case anymore. And if we're right about this earnings growth, the first question you asked me, and the future development of the market, it's going to be a $6-7 trillion market quite soon. Truly global funds, which are far larger than traditional EM funds, will have to buy the first 1, 2, or 3 India stocks. And it's at that point, I think, that you're really going to start to see the FII flows picking up. And if you are that kind of global fund and you're thinking, gosh, I really need to come to India, I need to buy my first stock, then again, the election it doesn't happen every day, obviously every 5 years. That then is also a reason to now come to conferences like ours and think about buying India.
Jonathan, are they really, very large global funds who don't have any exposure in India at all, who will be buying, as you said, their first stock in India?
Yes. Yes, yes, there is. Yes, absolutely. We've done some analysis on it. I think, again, I'll be limited in what I can say about stocks, but if you look at a stock like ICICI Bank or other mega cap stocks that operate, let's say, as sort of diversified conglomerates across India, those are candidate stocks. When China was in its heyday, which it's definitely not right now, you did have leading China internet and e-commerce names, particularly those names that actually IPO'd in the US, that found their way into a wide range of global equity portfolios. But that story is now over, effectively, and India's standing ready to move into that sort of position. So I think it's a really important change that's happening in global investor portfolios in the non-Japan part of Asia. Japan has always been essentially a more central part of global equity portfolios. But India has not actually reached out really beyond dedicated EM funds until this point.
Yeah, no, got that. How are some of the foreigners looking at the huge amount of participation from retail and what that is basically meant for valuations? Because,
Yes.
dips are very short-lived now. You see the election volatility, right? Nothing. So it doesn't give you an opportunity. It just snaps right back. And we've consistently moved higher without very much help from foreigners. So yeah, go on.
Yes, and I'm very aware that small and mid-cap stocks have outperformed large-cap stocks, and things like private sector banks have not done as well as some, public sector entities here. But by the way, we don't just recommend ICICI Bank. We have names like Gale, we have Godrej in real estate, Maruti Suzuki. These are names that, essentially we are allowed to talk about because we're actively recommending them at the moment. But we don't actually have a lot of small and mid caps, and the global investors will obviously have issues around liquidity and indeed on valuations. It's essentially something we see many times when a country is as successful as India is now, and when the demographic is relatively young, that people embrace their stock market, often in a very big way. They're making their first investment. They may be buying their first property, they're taking on their first mortgage. And sometimes that can run out of hand and has done historically in certain geographies. Now, it's not my job in essence to sort of call time on that, but it's certainly something that my colleague Ritam Desai is very focused on.
But just to complete that point, Jonathan, but is that the risk for India then? If you're trading at 19 times forward earnings only on local money and you're saying second half expect the foreigners to come in as well, then is there enough stock to go around, or could this be a melt-up sort of a situation, which may be the biggest risk in itself?
The kind of stocks that we think, foreign investors will be interested in have actually been the stocks that have lagged the markets. And if you look at what Ritam and I have been writing about, we've been writing about mega cap India as inherently, let's say, cheaper valuations. That's the heart of our earnings growth story. But when you say at risk, this really only matters if there's an awful lot of leverage that is underpinning these investments. And, we don't actually think that that's the case. If you say, look at China, which we haven't talked that much in this interview yet, but essentially they built up an enormous property bubble with very large amounts of debt in their economy underpinning that property bubble. In fact, total leverage in China is more than twice that of India if you look at debt to GDP, and then household leverage is 3 times that of China. There doesn't seem to us, albeit you can get volatility in small and mid-cap stocks in India, that there's anything like that story of enormous build-up of debt and capital misallocation that happened in China.
So if the foreign funds do come by in the second half of this year, as everyone's anticipating, and you would presume that a lot of it would go to private sector financials, which haven't done well, in this up move that we've seen so far.
Yes, and obviously some of those names that I mentioned and some of the mega cap diversified conglomerates that exist within the Indian market. I think what people will be probably less interested in buying are the offshore earner stocks, including some of the IT outsourcing names, because there, again, the AI thematic, we get asked a lot about what that means for those business models longer term. Near term, they're guiding quite strongly on earnings, but longer term, these AI tools in terms of coding and a lot of what these companies provide, it might actually be quite disruptive for them. So for us, the India story is very much about domestic India, domestic demand.
Jonathan, will you guys be sort of initiating more and more names every year? I mean, because there's hunger for ideas, right? I mean, I think we hear from domestic investors all the time.
Yes, I mean, we're very strongly of the view that that India and Japan have these two secular bull markets, so we've been rolling out additional coverage in those. And Asian investing is far more diverse in terms of the opportunity set than it was 3 or 4 years ago when the conversation was overwhelmingly China-centric.
Just a quick final point from my end, Jonathan. Here's this market where a lot of the industrial stocks, capital goods manufacturers, and many of them are MNCs, they are trading at 80 times, 90 times forward earnings, whereas you have consumer stocks, which have traditionally been more expensive, they've come down to about 50 times aggregate. So just,
yes.
Overall, in terms of portfolio stance, would you still continue to favor economy-facing stocks in India?
Well, I don't know if you count Maruti Suzuki as a consumer stock, but it's certainly, you're right, it's interesting. The relative performance trends have been quite significant, and it has thrown up some of these sort of valuation disparities. And I do think that the consumer is going to be an important part of the economic story here. It often goes this way, that when you have, let's say, a regime that is fiscally stable, where you've got this infrastructure delivery I mentioned at the start of the interview, the consumer can then use a lot of this infrastructure. And again, the inward FDI that we're getting in the manufacturing sector, which is unprecedented at this point, that creates jobs that pay higher wages, again, that speaks to the consumer. So, yes, I think it's right to be tilted towards that.
Right, Jonathan, thank you so much for joining in with your insights on what looks good in India, what the risks could be. Obviously, I was, glancing through some of those risks, which included the likes of long-term effects of artificial intelligence, geopolitical tensions, and perhaps something like climate change as well. But those are conversations for another occasion and a much longer chat that we'll have on all these risks. But for now, wish you good luck at the conference, and we hope that, foreign money does come in, as you mentioned, in the second half of this year. But more importantly, earnings should grow 20% plus as well. Take a short break, come back as always. We'll get you what the dealing rooms are talking about on this weekly options expiry day.
కొణిదెల పవన్ కళ్యాణ్ అనే నేను ఆంధ్రప్రదేశ్ రాష్ట్ర మంత్రిగా నా పరిశీలనకు వచ్చిన లేదా నాకు తెలియవచ్చిన ఏ విషయాన్ని నా కర్తవ్యాలను సక్రమంగా నిర్వహించేందుకు అవసరమైన మేరకు తప్ప ప్రత్యక్షంగా గాని పరోక్షంగా గాని ఏ వ్యక్తికి లేదా వ్యక్తులకి తెలియపరచనని లేదా వెల్లడించనని దైవ సాక్షిగా ప్రమాణం చేస్తున్నాను.
ఉండబోతున్నారనేటువంటి ఒక కాంక్షతో చూస్తున్నటువంటి సందర్భం.
हमारे माननीय यशस्वी प्रधानमंत्री मुद्दतों में होती है शख्सियत उनके जैसे.
Welcome back. So just putting the spotlight back on the market, mid-cap index, of course, has been the better performing index compared to the Nifty today. And some of these stocks that started reacting to the source-based inputs that we were picking up on the upcoming GST meeting, they're still retaining some of that gain. There's a little bit of green on Interglobe, though, of course, it's flattened out. There's Delta, which is still up about 7%. Nazara hasn't reacted too much. It's still about a 1% cut on Nazara. That's the volatility that played out on Interglobe. And
Gale's actually done well. Gale's up.
Gale, yeah, the gas stocks.
Yeah, it's up to 220 odd rupees. It's a recovery of almost 3% from the lows. And we have a note from the brokerages coming in saying that were this to happen, it would impact their EBITDA positively by about 2%.
Well, that was really sort of quick reactions coming in on that expected development on including gas in the GST chain. In fact, speaking of the story, let's go to the source, and that is Timsi Jaipuria. Timsi, tell us the inputs that you've picked up that really were moving some of the stocks in the market. So tell us what all is expected ahead of this meeting. Timsi, if you can hear me.
Well, as you rightly said, the GST Council is now scheduled to meet on 22nd of June. And ahead of the Council, there will be the meeting crucial. Yes, I can hear you. Can you hear me?
Yes, yes, we can.
Can you hear me? Well, ahead of the Council meeting will be the crucial meeting of Fitment Committee, which is likely to meet before. Well, yes, what we are picking up from sources is that ahead of the council meet, which is scheduled on June 22nd, will be the crucial meeting of Fitment Committee. Fitment Committee is likely to study Oil Ministry's proposal to bring ATF under GST at 5% and to bring natural gas either at 12% or 18%. Apart from this, Fitment Committee could also come up with clarity on claiming ITC on several sectors where industry has been facing issues. It could also lay down a proposal and a proper detailed clarity on applicability of GST on metal and steel scrap. The committee could also consider proposal to correct inverted duty structure on as many as 14 items, including textile, leather, pharma, a proposal which has been sent by DPIIT. On the other hand, when it comes to the council, which is scheduled to meet on June 22nd, it is likely to clarify norms on ITC on telecom services spectrum. Further, it will discuss measures for bringing in ease of doing business, especially for global companies with branch office in India and head office abroad. Council could also issue clarification for foreign airlines and shipping lines that have come under DGGI scanner. Council is also likely to approve timeline for pan-India rollout of mandatory Aadhaar-based biometric authentication of GST taxpayers. It could also come up with a roadmap for further simplification of rules, enhanced compliance for taxpayers, and the most crucial, Council could consider further correction of inverted duty structure and the need of overall rate rationalization, a task which has been pending with the GOM that is being headed by UP's Finance Minister Suresh Khanna. So that timeline will be revised and it will be given a strict timeline to the GOM to come up with a proper proposal that can be considered by the council. And yes, industry is likely to push for a review of GST on online gaming, but sources say that the council is likely to have reservations and it will continue with the ongoing policy of applying 28% on actionable claims. So that's the gist on the GST council meeting.
Take that point, Timsi. Thanks a lot for putting that into perspective. Just a functional update. She said they may consider ITC, that's input tax credit, because every time they hear the terms GST and ITC, everyone's radars go up for ITC, the stock. So this is not the stock that we're talking about, it's input tax credit. But be that as it may, no, it's not the stock. Again, it is input tax credit that we're talking about. But let's go across to Nimesh, who's been, dialing in the lines on the dealing rooms. Nimesh, what's happening?
Hi, Mangalam. So again, what's happening is very clear that the mid caps and the broader market stocks continue to outperform, and that's been the trend today as well. And the good part is this outperformance is backed by FI buying as well, largely institutional buying. What I mean, so again in today's trade, the sense is that the flows are positive. In fact, there is going to be a small market at close basket buying as well in some select mid cap names. That's the overall feedback as far as flows are concerned. Within sectors, I guess the churn continues. So now there's a bit of sense of buying into the NBFC names as well. We saw a bit of trend into housing finance companies. Now it looks like there's a bit of buying interest back in the NBFC space. So select NBFCs is what are well bid by the larger institutions in today's trade. But again, I've been saying for the last couple of days, and it turns out to be every single day you're going to see a large block. So the trend of large block deals, either PE sellers or promoters selling out, is likely to continue. And even for the next few days, there is a very strong pipeline, is what I understand. And there are a lot of names which have been talked about where some large blocks are expected. So that trend is going to continue. But I guess the mid-cap outperformance for the last couple of days is backed by institutional buying as well.
Okay, Nimish, in terms of chatter, are there more blocks? What's on your list?
Well, there are a couple of names which are part of the block, but outside of blocks as well, some interesting developments happening in the broader market stocks. So the first name is Kaya. For second day running, that stock is locked at 20% upper circuit. Even in today's trade, today's market, there were some multiple blocks. Close to 8% equity got in hands. I understand one of the leading family offices was a buyer in today's block as well. So looks like some traction is back in Kaya for that matter. So that's the first name. The second stock is L&T Finance. We all spoke about a large block got executed in L&T Finance today. It was a clean out trade. Domestic mutual fund seems to be 70% of the book, is what I understand. But beyond that, now the feedback is there's going to be a big corporate development in L&T Finance very soon. The indication is that maybe they will announce an acquisition very soon. So that's something which need to be tracked in L&T Finance going forward. So that's the second name. The third stock is Paytm. Big move on that stock and on large volumes as well. So I understand some very large influential HNI investors have been active buyers in Paytm for the last couple of days. And even in Paytm, the feedback is you would hear some deal very soon in Paytm as well. So that's something to track there as well. And the last name is Piramal Enterprises. I spoke about NBFCs in general being well bid. Paytm stands out. Piramal Enterprises stands out largely on the back of buying interest back. So even that stock is buzzing and on good volumes on back of FI buying.
Interesting one on Paytm. In fact, just yesterday at this time itself, we saw near 8% up move on Paytm. The stock ended, about 7-8% higher, and thereafter now as we speak, another 5% up move. And also on Kaya, what's interesting is that from a business standpoint, it wasn't doing too well. It was just about a couple of months ago where the management decided to offload their GCC business, which was the Middle East business, and now they're focusing on domestics itself. So let's see whether there is improvement in the business that comes by or not, given the underlying macro trend of wellness, preventive healthcare, etc. If that were to happen, then this would be one of those front runners out there. But let's see what happens, to be very honest.
Absolutely. And so 390 is doing very, very well at this point. Mitesh is with us with trades for you right now. Mitesh, what do you have? Afternoon.
Prashant, I think it's still not giving a directional bias. Still the market is flat, but a lot of stocks are showing good traction, and even finance some good BTSTs in the day side. 26.69 should be the stop. 27.10.20 could be the target for tomorrow. Shriram Finance, and the other stock which is going to pull back and is on support level is Tata Consumer. I think the stop below 11.07 and 11.30 could be the target for tomorrow.
Look at that move on Shriram Finance. I mean, from the time that we started, I think it's added about 1.5%, 2%. And the other one is, of course, Tata Consumer, which Mitesh is a trade on. Thanks very much, Mitesh, for those trades. Well, insurance, life insurance stocks are all buzzing. And the final surrender value norms finally came. And that is the plate, which I think is the operative one. It basically tells you that as compared to May, where the percentage surrender is proportion of the premium received was 82%. It's not that much change. It's 78%. So was this in the price in that sense with the selling that we saw in May? And this sort of clearing event reaction in that sense? Yash is here with some details. Yash.
Well, Prashant, it's been about 6 months that we've been talking and reporting on, the various changes from the insurance industry as well as the regulator on how things are moving on surrender value. Quite honestly, investors of these insurance stocks by now were also bored in terms of how these things were affecting the businesses at life insurance companies. Today, there is an end to all of that with the final regulations on surrender value coming out. And essentially, since there is an end to it, it is the start of something new when it comes to businesses for these life insurance companies. No taking away from the fact that it's a big negative for life insurance companies. Their expenses will increase, in turn impacting their VNB margins, especially for two companies, HDFC Life and Max Financial Services, since their exposure to non-participating book is higher. But, the street now wants to move on. The reason why these stocks are up despite the negative on the surrender value, the first one is now all negatives are in the price. The number that you spoke about, 78%, is now known. What is the absolute value in terms of impact? HDFC Life coming out and saying that we'll be impacted by about 100 basis points on the margin front. The industry, individual players getting impacted by about 80 to 200 basis points now is well known for investors. The impact on the financials is well known for the investors, and now the street wants to look forward in terms of the opportunities which lie in front of these life insurance players. This may come in the form of composite license, in terms of the new avenues of business that may arise. So that is something that the street is looking at. The next thing is that all brokerages today have unanimously spoken about how life insurance companies seem to be well equipped to handle the damages which will come from higher surrender value. This may be in the form of deferred commissions, trailing commissions, clawback factor, new products which will have higher commissions and higher premiums. All of that the street is taking note of and expecting some sort of strategization on the side of life insurance companies when it comes to mitigating the impact of the higher surrender value. So of course, the reason why the stocks are up today, valuation comfort, event being out of the way, and now looking forward to the new business avenues and strategies to mitigate the impact.
All right, yes, thanks very much for that. Insurance stocks doing well. We take a break. We are back, but we leave you with Citi's global chief economist, Nathan Sheets. We spoke with him earlier about rate cuts in the U.S. Listen in.
Previously, the soft CPI number was very important. And if we get a couple more months of inflation, like we saw this morning, the Fed's going to be cutting rates. And my sense is that very well may happen as soon as September. I think the broad view is that some of the hotter inflation we had earlier in the year is breaking. And given that, I think that the expectation, as I mentioned, is that the Fed is going to be data-driven, and that's going to open the door for more rate cuts. We are seeing some improvement in inflation that was not fully factored into those projections. Broadly speaking, global investors are aware of and comfortable with the investment regime and know how to invest in India. We've certainly seen that over the last several years. And then, as you point out, I think the question is, on the margins, are policies going to be changing in some way because it's a coalition government that might have an effect on either the ability to invest or the attractiveness of investment in India? And I think those are the open questions. But for now, based on where the equity market is, I think investors are giving Modi the benefit of the doubt.
ये बयान से हो इतिहास हो जाता है। हमें गर्व है कि हम वो पीढ़ी है जिसने इतिहास बनते देखा है। गौरवनीलु हमारे भारत के यशस्वी प्रधानमंत्री श्री नरेंद्र दामोदर दास मोदी जी को हम सब के तरफ से अभिनंदन और स्वागत करते हैं।
నారా చంద్రబాబు నాయుడు అనే నేను విశ్వాసం విధేయత చూపుతానని భారతదేశ సార్వభౌమాధికారాన్ని సమగ్రతను కాపాడుతానని
Welcome back. 50 points down on the Nifty Bank. The Nifty, just like a magnet, stuck to 23,400. Just the way, the option writers were positioning for the weekly options expiry. Post 3 p.m. there hasn't really been a move, and that's exactly what, was factored in. And that's reflective in the kind of decline that we've seen in the India VIX as well. All those straddles which were written, which is a call and a put together on that 23,400 mark. Good time to get in some ideas then. Amrish Baliga joins in. Amrish, so much has happened in the market. The small and mid-cap index have been on a tear ever since, we saw some recovery post the election-related jolts. What ideas are you backing right now?
See, right now the idea which I have is more on the consumer side. It's Bata India, largest retailer and leading manufacturer of footwear in India across segments, which is men's, women's, and kids. 2 years back, they entered into the sneaker segment in a big way. They were there in that segment earlier, but there was a huge focus on that, targeting at millennials, and this is a decently large segment, and they have a large distribution network in about 1,500 plus towns with 1,860.
We'll just come back. We'll just try and fix that and come back. Okay, I think you can, Amrish, sorry, we couldn't hear you at all. I think you were on mute. Sorry about that. Yeah, now it's come on. Go on.
Now we can.
Okay, I mean, the stock is Bata India, which is the largest retailer and leading manufacturer of footwear in India. About 2 years back, they got into the sneaker segment in a big way. In fact, with a huge focus, which is targeting at millennials. And this is a decently large segment. If you look at the distribution network, they have about 1,862 stores in more than 1,500 cities and towns. And now they're expanding through the franchisee route. And they have a first mover advantage in tier 3 to tier 5 towns. And they've recently tied up with a premium brand like Nine West. Currently about 40 stores, expanding to about 70 stores. If you look at the Q4 numbers, they were flat, but we are seeing a margin uptick. And if you look at the balance sheet, it's quite healthy with a decent cash and a negative working capital cycle, so which is a positive. And the input costs have been coming down, so margins should improve going ahead. And in the recent investor call, even the management has been quite upbeat. So I'm looking at FY25 earnings to bounce back decently well. And FY26, I'm expecting an EPS of about 38. So I have a price target of 1,900 for the stock.
1,900 on Bata. We had the management post their earnings as well, saying that they aren't ruling out double-digit growth in FY25 itself, with obviously the premium doing well, and if mass starts to pick up, that'll be good as well. The realizations on their sneaker business are a lot higher, and what's interesting is that they're also seeding newer brands as individual stores. So Bata has the sports brand called Power. They have standalone Power stores, which has gone into athleisure and all of that and stuff as well. But these repositioning exercises typically take a lot more time than what one anticipated. Let's see how that goes.
I mean, I went to their store. I think the largest Bata store is near where I stay, in here nearby. And, the range has gone up. It's all premium, and prices are also quite premium across the board. And I was chatting with the folk there, and they were saying that actually across the board, I mean, it's a big step up over the last 2-3 years in terms of pricing for the same product. Actually, the shoe that I buy, I think I bought the same shoe for the last 6 years.
Right.
I wear it out and then I go pick up another one. The prices are substantially higher, and
this is an exercise that I did, and this is Bata's tagline as well. The tagline is surprisingly Bata. So I bought a couple of pairs, and I would walk around. People would say, "Hey, that's a nice pair. What is it?" I say, "Would you be able to guess it?" They said, "No, tell me." I would say Bata, and they would be surprised. And literally, that is translated in their ad as well. The tagline saying "surprisingly Bata." So let's see how that goes.
Okay, well, just about 4.5 minutes left. We've still got Amrish with us. Amrish, today's story obviously has been this rally that we've seen in life insurance stocks, because some relief that maybe this is the final set of guidelines. What do you make of it, and would you buy any life insurance company at the moment?
I mean, see, this sword has been dangling, I think, for the last, 9 months to 12 months, and because of which you had a number of these stocks, especially HDFC Life, which was under pressure. So at least there's been a decision on this. And yes, I mean, it is going to affect the margins, and they have also accepted that there'll be 100 basis points dip in the margins. But what I also see going ahead is the commission for the agents, I think, will either come down to a certain extent or get deferred, because the average commission paid out in the first year is about 35%. And I mean, if you look at the policies which are surrendered, I mean, quite a few policies are surrendered in the first 1 or 2 years. And that is going to affect the margins in a big way. So I think either commissions will get deferred or they would reduce. I think that's what I see going ahead, because you really can't control the marketing cost beyond a certain extent. So overall, I mean, after this, I would be positive on HDFC Life, basically because it has underperformed, and this is now behind them. So I think from here, we should see at least a decent uptick.
Okay, we should see a decent uptick coming through in life insurance names as well. Anything else on your radar? These housing finance companies? Home First has been surging, and I was asking Abhishek what's going on there. Aptus, Home Finance, Aavas, these are all stocks which have not done well over a period of time. But of course, most of these also have had private equity investors who come to sell once in a while, every 6 months or so. Anything you like here? Not just these, but other HFCs as well.
I mean, I would look at possibly LIC housing. I mean, again, if you're looking at the housing sector as such, I mean, we are talking of the growth continuing for the next at least foreseeable 4 to 5 years. I mean, looking at the sort of wealth which has been created, I mean, across the board. I mean, whether you talk of the CXOs or even below, because the way the markets have been booming, the excess funds which are created out here naturally goes to, I mean, buying a house or upgrading yourself with a better house or a better car. So clearly, I think these are the segments which are going to do extremely well. And if they do well, clearly the finance companies associated with them should do well.
Okay. All right. I think we are down to the last 2 minutes. So, Amrish, perhaps we'll take your leave. Thank you very much for joining in on the show today. As we're winding out, it's again, the day is similar to what we've seen in the past in this week, where you hit higher levels in the morning and then you kind of peter off from there. In fact, today the Nifty was almost taking aim at 23,500. We've ended a good 80-90 points off that, barely sticking to the 23,400 mark. But anyway, for what it's worth, let's quickly talk about what has worked today. So on the large cap screen, Shriram Finance, I mean, hitting records. Fantastic 5% surge on that stock as we're closing out. Then the life insurers that we were just talking about, HDFC Life has had a nice run, 3.5% on the higher side over there. Divi's, M&M and Titan are the next three on the lineup. So very diverse set of stocks, actually on the higher side on the screen. Some technology names like TCS, Wipro and LTI Mindtree also doing well. And finally, L&T in terms of one of the heavyweights that really performed well. All of these adding to the gains for the Nifty. So I think barring Bank Nifty, which was a little quiet, some of the other constituents did much better today.
It was the Nifty Bank actually which, put a lid on the gains that the Nifty was seeing, and as a result of which the Nifty expired at 23,400 for the weekly options that were written at that level. There were no problems with the mid-cap index. In fact, the rally for that index continues for the 7th day in a row now, a fresh record close for the mid-cap index. Strong advanced declines as well, where we had nearly 1,500 stocks gaining for just about 900, which declined. And on the way up, the stock of the day definitely had to be Oracle Financial Services. The big surge that we saw in Oracle overnight, its global parent, not sure if there is a business relation between the two, or there could be a benefit that would directly come to Oracle Financial Services, but the rub-off itself set off that stock higher by almost 11%. We saw Chola Investments do well, Gujarat Gas, GAIL, all of them picked up towards the latter half of trade as the news on GST came by. But the weakness was, of course, the FMCG pack. We had NCC, Dabur and Marico along with United Spirits not doing particularly well. Sun TV too, likely to enter F&O ban. The stock lower by about 2.5%.
Well, a lot went on, right? I mean, and by the way, market breadth improved a little bit towards the end, almost 1,700 higher and under 1,000 stocks lower. So that's also something which is noteworthy. So, I mean, that's, I think, the close, not bad at all. The Nifty ending about 77 points higher, could have been up, could have been more. So the market, of course, ending off the highs of the day. But this is a good-looking screen, 23,400 on the index. Well, it's a wrap on this edition of Closing Bell from all of us here. It's goodbye. Thanks for staying with us. But programming will continue and Markets Forward is coming right up. It'll prepare you for what's next, that is tomorrow. Stay with us.
Gaurav Neelu, Konidala Pavan Kalyan Garu.
నేను కొణిదెల పవన్ కళ్యాణ్ అనే నేను శాసనం ద్వారా నిర్మితమైన భారత రాజ్యాంగం పట్ల నిజమైన విశ్వాసం విధేయత చూపుతానని భారతదేశ సార్వభౌమాధికారాన్ని
गौरवनीय नारा लोकेश गारू,
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.
Sensex and the Nifty consolidate after hitting record highs in early trade. Broader markets outperform. Realty and IT stocks gain. FMCG stocks sunk.
Life insurance stocks, HDFC Life and Max Life surge after the insurance regulator introduces revised surrender value norms for life insurance policies. The stocks gain as the surrender value hike is lower than what was factored in.
The US Federal Reserve leaves rates unchanged and shifts the dot plot to project one rate cut this year. Chairman Jerome Powell also rules out hikes and seeks more confidence on data on inflation before a cut. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key highlights from the day's trading action. And of course, all the key inputs you need to know before you kickstart your trading day tomorrow. I'm Surbhi Upadhyay. With me on the show today is Ekta Batra. Hi, Ekta.
Hi, Surbhi. Yes, absolutely. Well, we've got all of you all covered for the next 20-odd minutes with all of the big news and the key developments on Dalal Street, top corporate voices and the events to track as well. Well, let's kick off the day with the market action. Turned out to be a day where we did see the Bank Nifty come off, but nonetheless, the momentum in the mid-caps as well as the Nifty continued, Surbhi.
Oh, absolutely. Yeah, absolutely. Actually, the market's gotten into a bit of a pattern. You see that graph on the Nifty. Let's pull up the Nifty graph. Usually we start very high in the morning and then it gradually starts to peter off and fade out, which is what happened today, but not to that extent because there was still a lot of green. By the time we closed, we put 75 points on the board, so it wasn't bad. Though one would have to say that at the highest point, the Nifty actually was taking aim at 23,500, almost reaching that level. In fact, the intraday high was 23,481. From there, we cooled off about 80 odd points. The sectors that worked today, PSUs were in favor. Once again, a lot of the real estate stocks beyond the index were having a good run. So those were some of the positive points. The flip side of it is, of course, the entire FMCG space, and we'll talk about it as we go forward. It wasn't just limited to the large cap FMCG stocks. Even beyond the Nifty, a lot of the FMCG names were coming under pressure. And then there was a lot of stock-specific action playing out relating to possible moves on GST. There is a meeting coming up on the 22nd, and ahead of that, our colleagues were reporting about some likely discussions that may take place. So that worked very well, for instance, for gas stocks, and we'll talk about that as we go forward on the show. But Ekta, all in all, I think the broader market, the mid-cap market is the one where there's real action and there's continued outperformance there.
Well, yes, absolutely. For the Nifty, we did hit that record high in the early part of trade. So, that sort of continued. But nonetheless, the mid-cap index hit an intraday record high for the fourth straight session. The mid-cap index was up around 0.7% today as well. It's gained around 2% or 2.7% on a week-to-date basis. The BSE small cap index has picked up around 4%. And we had an advanced decline ratio, which has been positive through the week. So that's very indicative in terms of the kind of broader trend and optimism that we are seeing in terms of stock-specific action when it comes to the broader markets. Well, we do have the PPI data from the US, which will be important to watch. So after the US CPI data, the PPI data will be also indicative in terms of how the US markets would probably move and henceforth, what kind of impact that would have on us. But nonetheless, let's tell you about what we have lined up for you on the show today. We'll start with the top movers and shakers of the day with Hormuz. Life insurance stocks created quite a buzz after the insurance regulator introduced revised surrender value norms. Meanwhile, realty firm Sobha gained as its board approved a 2,000 crore rights issue. We get you that and more in just a bit. Last but not least, we delve into the key market events to watch out for tomorrow's trading session. All right, well, on to our first segment of the day. Hormuz is now standing by with all of the top stock movers. Hormuz, over to you.
Surabhi was just highlighting about a pattern, and that's become a pattern, right? You come, see gains, go back home. That's been the trend over the last 7 days now. For the broader markets, at least, another record high for the mid-cap index. But the sector that had a very good day was sugar. An extremely sweet day for all of them with regards to some positive news developments on the MSP front. Dwarikesh, Balrampur Chini in the FNO bands. The stock is in the FNO band, but still 4.5% higher there. Sri Renuka 12% higher. Mavana in a similar quantum as well. Dhampur Sugar, another 5.5%. Real estate also continues to move in line with the broader markets. Another day of gains for the index. Sobha, we'll talk more about it on the show. Macrotech, another 4% there. Godrej Properties, Mahindra Life, Brigade, all the stocks on the real estate index ending higher in today's session. You cannot not have a day and you don't talk about PSUs, and they continue their recovery as well. HAL, another 4.5% added there. BEL, 4%. BHEL is back above 300. Oil India, PFC continues its recovery as well. So those stocks having a good day. What also had a good day was IT, and after a prolonged period of lull in the start of the week, now IT was among the top sectoral gainers today. Emphasis, LTI, Mindtree, Coforge, all of them seeing gains of anywhere between 1 to 2.5%. But Oracle Financial was the standout among the IT names, and that is also because its parent company had very strong earnings in today's a couple of days earlier in the US. The 10.5% higher on Oracle Financial, a record high. The stock has already doubled and more in 2024, almost 124% higher there. And lastly, Shriram Finance, towards the end of trade, the stock became the first company of the Shriram Group to cross 1 lakh crore in market cap there, 4.5% higher for Shriram Finance, among the top Nifty performers in today's session. Back to you guys.
Okay, all right, got it. Thank you very much, Hormuz, for that. Now let's move on and introduce our guests on the show today. Joining in are Amrish Balika as well as Shilpa Raut. So we'll have some view on fundamentals as well as technicals. Let me throw it open to the lady first. Shilpa, hi, good afternoon. So tell us, what did you make of today's trading action? The fact that the Nifty keeps continuing to grind higher and higher with about a 70-point gain today. Bank Nifty still sulking. So in terms of trading the indices, what's your advice?
So the trading indices is that you will have a bullish outlook for Nifty and a sideways outlook for Bank Nifty. Bank Nifty is actually in a very broader trading range wherein you find support at around 49,500 to 50,200. And if you look at for a monthly basis, you find that the support levels at 48,500 to 51,000. So this range is very broad even for intraday, or you look at the monthly basis. So till either 50,200 to 300 on the upside is not taken out decisively, you will not look for targets of 51,000, or otherwise it has to breach below 49,500 and sustain there so that you can make gains for 1,000 points from there. So Bank Nifty is a sideways counter, so I wouldn't actually recommend any sort of trading ideas here. Nifty, yes, Nifty as long as it is holding 23,200 on a closing basis, I believe it has a very positive texture where you can see 24,000 levels also coming in. It might take a while, but these levels are very strongly intact.
Okay, all right. Well, Amrish, wanted your thoughts in terms of what you're tracking when it comes to the entire market breadth and, the mid caps. It's the fourth consecutive session where we've seen intraday record highs come in for the mid cap index. It's outperformed already. BSE small cap index doing very well as well. Do you think that's where the interest is probably going to continue, or do you think that it's probably prudent to take some profits now?
No, let us see as to from where we started off, because